parking. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola, everyone.
Made it.
Yeah.
Made it to Tuesday?
Yeah.
Yeah, it didn't seem like we were going to make it to Tuesday, Sunday night.
The weekend looked like it was going to be crazy. Yesterday looked like it was, doomsday on the horizon. And
so
we rallied right back.
I have some reporting to tell you. My wife has been snooping on me.
Okay.
So
The trading account? Or
No.
I was going to say.
No, she doesn't.
She's like, wow, you really are the world's worst bond trader.
No, I'm not manifesting that anymore. I'm putting it out there. I'm equal to everybody else in futures trading from now on.
What? Nice.
There you go.
Yeah. I don't want.
Positive. You got to think positive.
Whatever that hemoglobin something changes in your brain. I'm gonna
Hemoglobin.
I know it's blood.
Wow.
I know.
Nope.
I'm just teasing. But I'm gonna make it better. So no, she's been snooping on me inadvertently. So she got she's had like Life 360 or something like that.
Sure.
Where you can.
Life alert, I've fallen.
No, that's coming. That's in another 5 years.
Yeah, that's
My
coming
friends
too.
have it for their kids. So
Yeah.
they can see where their kids are.
Yeah. Well, it only works for me for some reason.
Awesome.
Yeah.
Well,
Doesn't work for the kid who we were actually trying to see how he's doing and stuff like that.
Why? Does he just simply turn it off?
No, he's been absolutely.
did he just take the tracker off of his car and he put it on your car?
No, maybe he may have. No, he's been absolutely fantastic. But it wasn't my idea. It was my wife's idea. It was a good idea.
I couldn't imagine if I had a tracker on my car in high school.
Yeah, well, he came into the city this weekend.
Oh.
We saw him on another app, not Life 360. It's like Find My Phone, Find My iPhone.
Yeah, just the iPhone. Yeah.
Where'd he go?
The Loop. He was in the West Loop, and so I texted him. I was like, "What the WTF are you doing in the city on a Saturday?"
First of all, how can he afford parking?
He said he got street parking. He was by McDonald's, the Rock and Roll McDonald's. Not the Rock and Roll McDonald's, the McDonald's University.
Yeah.
Oh, yeah, the headquarters.
Yeah, I said you came all the way downtown, you and your schmageggy friends, to go to McDonald's.
Well, because that McDonald's
You get
has
the
the
special.
global, it has the global menu,
Yeah.
so you could get stuff from like McDonald's Japan.
It is kind of cool.
Right? Yeah,
is
it's
kinda
cool. They have all the.
That's what he said. I was like, all right, whatever. Meanwhile, the only thing
Also, the train goes there.
that was what we brought up, but it was an impromptu decision. He goes, I'm never doing it again. He goes, driving downtown. He's a newish driver. He really
Right,
had a license
yeah.
for a month or something like that.
It's not
He's
for
like-
the faint of heart.
He's like, I kept going the wrong direction, and I was in the wrong lane. I couldn't get off. And he goes, I was on Michigan Avenue. I go, all right, well, Michigan Avenue is nice. He goes, no, Michigan Avenue by the stadium. I go, Michigan Avenue by the stadium. I go,
By Bears, like in the South Loop?
well, I said Wrigley. I was trying to go optimistic.
Yeah.
He goes, no, by like where the Sox play. I go, how did you get all the way to South Michigan Avenue? He goes, I told you I was in the wrong lane.
Well, he probably did he take Lakeshore Drive?
I don't think so. I don't
And
think so.
wrapped around?
I mean, to be fair, Chicago Police Headquarters is at Michigan and 35th. So he's
Yeah.
okay.
Yeah.
Chicago Police Headquarters is
Oh no,
right there.
I know, but he was not trying to get there. You know what I mean? He was
Sure.
trying to get to the McDonald's, which
Yeah,
is
I
in
know.
the South,
Yeah, that's-
which is in the West Loop, right where.
That's
right
fine. You
where
tell
we
that baby to come on by my house. I take care of your baby. I'm 10 blocks south of there. Like, I'm
Right.
literally, you may as well come to my house. I will take care of
He
him.
should have. From now on, I'll give
Yeah.
him phone a friend.
Yeah.
Yeah.
But he got himself in. But that's not the story I was really wanting to tell you.
So you're being tracked.
What's that?
You're being tracked.
I'm being tracked. So she's always said that I'm on my phone too much while I'm driving and stuff like that. And I've always tried to look at him smiling. So I had yesterday I had 15 distractions while I was driving down. It took me 19 minutes to
Oh,
get
it
here.
gets that granular? Like,
Yeah.
Yeah,
So you must have picked up your phone.
I'm so
while you're
glad this did
driving.
not exist.
Imagine.
Just
Right?
blowing up my life. No, thank you.
I know.
Yeah.
So now I need a burner phone. That's
You
it.
need a burner. You need a pager. Bring back the pager from your trader days.
So today I was very conscious about not picking up my phone while I was driving. So
good.
maybe it's working.
But you shouldn't be on the phone while you're
I agree with you.
driving.
But
It's
yes, like I
illegal.
explained to her, yesterday was a it was an extraordinary day in the market.
But you're a man of means. If that's the case, then hire a driver, and then you're in the back, doing all your stuff. Like, do it that way.
I mean, there's always a solution if you look for it. That is one of them.
See, I was thinking that she found the trading account and she was like, wait, there's extra dollars.
I got
there.
two-factor.
Where'd those come from?
on there. There's no way she
You didn't
gets
tell
in
me
there.
about those.
She could find them, but she ain't getting in them.
Whose account is that one?
Where does that money go?
Where did that money come from?
No. So that's my story. I'm being tracked, not by the U.S. government or anything else like that.
Well, you're tracked by them too.
Well, no, you are being tracked.
Yeah, you're tracked by the U.S. government.
Let me tell you a little story about a
IT
license
group,
plate reader.
Tasty.
Yeah, like
You're tracked by everyone.
Yeah.
Everyone.
Yeah, you're not. You can't hide.
Too good. So that's my story. Anyway, so it did work. It was a good deterrent because this morning I had maybe 2 distractions, maybe 2, maybe
Okay,
3.
that's good.
Depends.
the markets are green, so nothing to get distracted about.
Yeah. At a light, I picked it up once. So it could be 2 to 3 distractions. I'll see what the intel report that she gets this afternoon tells her. That's my story.
All right.
Be careful. I'm going to start tracking you, Vanetta.
I don't know why you're
never gonna
obsessed
catch
with me. Yeah, I don't know. Like me and Nikki, we're old school. Like we have tricks.
Every time I text Vanetta, it always says "Do not disturb" is on or something like that.
And then yet you still disturb me.
Right? Do you want to send? Do you want to send it anyway? I'm like, yeah, I want to send it.
Yet you still disturb me. My phone stays on. My phone's on Do Not Disturb right now because I'm on the show. But I always use Do Not. Do you not use it?
I do that too. Yeah. I do.
I don't know how to put it on.
You just swipe down from the top and
or you can click the
notifications.
side.
Yeah.
Click the side button. It's easy.
I
keep it on Do Not Disturb.
I don't want to be disturbed.
Yeah. But I look at it like frequently enough to where I'm not, a text message I'm not going to miss.
Right.
And like nobody really, does anybody phone call anymore?
Parents, your boomer parents.
Yeah, your boomer parents, they come and it's just too much. It's too much like concentration. Can't be on the phone and doing like 5 other things.
Yeah. Yeah.
So.
But how about you, Nikki? What'd you get up to last night?
I went out with my sister. We went to Creepy's.
Oh, was this as brother and sister or as financial advisor and client?
Yeah. How did it go?
Because it was a bad day yesterday, but then it got better. But then, is she still mad?
No, she's happy.
Okay, good.
She's doing great. She's an amazing trader. One of the best. She times everything. She's just incredible. But yeah, we did actually have that conversation. It was pretty funny. She was like, yeah, I'm doing pretty good. And I'm like, yeah, just let it sit and let it do its thing. And she's like, this. I wish I did this earlier. And I was like, yeah, you should.
Yeah, but you have to learn that. You have to see how markets move. And
no, man, no, you don't. The saying is so true, which I'm going to butcher right now. The best time to plant a tree is today. The second best time was yesterday, or the second best time.
Yesterday would be better than
yesterday would be better than today.
Okay, hemoglobin. Hey, A1C. What are you doing over there?
I'm gonna just be quiet. Is what I'm gonna do.
But where'd you go with your sis?
It's called Creepy's.
It's called Creepy.
Yeah. It's in the West Loop. I forget the chef's name. It was one of the spin-offs.
She's had this reservation for weeks. She told me for you.
Yeah, it's one of the you got to kind of.
She likes those bougie places.
How was it? What? Give me the vibe.
It was good. It was good. It's French, so it's like everything's very rich.
Okay.
A lot of it's like.
Did you get the truffles?
No. That option wasn't available.
Oh, was that truffle season?
Yes, the truffles were not in season this time around. The black truffles.
I always get so lucky when I go to those places. That's white truffle season.
Yeah.
Extra charge on top of the extra charge.
Yeah. So it was good. We had a croquettes.
Oh, croquettes. Yes.
We had mussels.
Croquettes. We used to make croquettes, potato croquettes out of the leftover, leftover food that we had. Now you're paying fancy prices.
All right, hemoglobin.
All right, it's so funny. See that work? It just works. It's funny.
We had a great veal dish.
That makes me sad.
Which was really yummy. I know it's sad, but
sad.
delicious.
Okay.
Objectively delicious.
Objectively delicious.
And then we had like a roasted carrot dish. We had another veggie that was in the broccoli family.
Oh, sure. Cruciferous.
Yeah, is that just the general?
Yeah, like broccoli and cauliflower. Yeah, they're
okay.
cruciferous. I believe someone can check me in the chat.
This
but
was like Romanesco or
oh,
Go ahead, give us a look.
Romanesco.
okay.
Yes. Which was quite delicious as well. And then for dessert,
I was gonna say, what did you have for dessert?
it was a sorbet and meringue cake.
Ooh.
So there was like little pieces of meringue, like
Ooh, that sounds really light.
it was very light and nice.
Ooh, that sounds
Yeah.
good.
It was
God,
cherry.
I remember
Cherry.
you. I remember you when, man, you just go into Chipotle, get a burrito the size of your arm, and you were happy.
You grow up, you know. Grow up, your palate expands.
That's fair. That's fair.
So
Oh well.
That's
very good.
nice.
It was
That's-
good.
How's the scene? Is it like a
I blame your
scene or-
sister. She's the one that's
She is
got you doing this.
She is bougie. Well, she makes so much money in the markets, you know.
That's right.
So
That's right.
she's
She's got
like
this
this
disposable
expert
income.
trader. She's got this disposable income. I mean, she's just rolling in it. It's amazing.
I like it.
Yeah.
I like it.
I love that for her.
Yeah. Oh, she's good. But
You should do an employee account too. You make more friends.
I think I've learned through this experience, I don't really want that responsibility. There's no upside to it.
There is zero
There's no
upside. I could have told
mean,
you
if
that a
I
long
was
time
getting
ago.
paid to do it, then that's one thing, you know, because there's an incentive. But me just doing it for free, I get zero of the upside and all of the blame for
Sure,
the
that
downside.
is true. Yeah,
So
that's a
instead
lot of stress.
Instead of a 50-50 like shot for me, it's a 0-100 shot. I get zero credit for the upside. That was her amazing timing. And if the market goes down, why didn't I wait? Why didn't you just wait until the market goes down and buy the dip?
So no Batista capital management.
Not at this point.
Oh man.
No.
Wanted to get in on that
Not for
ground
free.
floor.
Not for free.
Get in on that ground floor. All right. Well, you're gonna take points, I guess. I don't know. Hey, we got a great show for you today. A lot of great content headed your way on this terrific Tuesday. Hopefully, the springing forward has not kicked your butt too much. I am on the struggle bus, but that's okay.
Me too. I think the tasty virus is getting to me.
No, I just
no,
meant
really?
the sleep. Oh
I'm getting a
no.
little congested.
So you're gonna blame Tasty Trade, not you partying in Vegas?
No partying. I was
Well, not you, but being on a plane. Like you didn't wear a mask on the plane, but you're gonna blame Tasty for the I mean,
it's just a thing. Every single like turn of a season here
sure,
becomes just a petri dish of something funky. So
Yeah.
yes, I'm blaming the tasty.
okay, all right. Well, I blame Vegas.
All right, we can blame Vegas.
But we got a great show for you today here on this terrific Tuesday on Tasty Live at the top of the 8 o'clock hour. We got an options jive, tail risk, distribution skew, and kurtosis.
Who doesn't want a little kurtosis?
Who made me read that
Kurtosis
jumble?
is like what he has. Like, he has like a hemoglobin kurtosis.
Yeah.
Yes.
Yeah, that's basically what it is.
No, but what's the segment
Exactly
going to be
what it
about?
is.
So it's a good one. It's just kind of a breakdown of skew. You know, what is it? Why it happens? When markets move in a big way to one side or the other, how the distributions play out. And it's just a primer on skew. It sounds a lot more intense than what it really is.
When markets move bigly.
Bigly. Yeah.
And then at 8:40, we have Futures in Focus. We have Craig from the CME Group in studio live.
Yes.
What is he talking about today?
So we're going to do like kind of a little impromptu trade segment. We're going to place a bunch of trades. So we're going to look at ES. We're going to look at NASDAQ. We're going to do maybe gold silver ratio. It depends on what's moving, but we're really going to make it like just like kind of a live trade segment. We're going to try and put on a handful of futures trades.
Oh,
Show
this
you how
is
it could
very
different kind of
exciting.
exposure, and you could be the hedge fund of your own liking if you want to by using these. That's correct.
This is very exciting.
Yes.
That is great, and it's always great when Craig is in. And then we have at 9 o'clock.
He's all right. I mean, he's not great. I mean,
we have market measures. How does volatility change over time for strangles and straddles?
Ooh, yeah. So we're talking about P&L volatility in each of those strategies over time, just kind of showing, how volatility of your P&L is going to be much wider as you get closer to expiration. Really the biggest takeaway here.
Okay.
Yeah.
All right.
it'll be good.
That sounds good. And then we have live from the trade desk. We have Quentin in the house, counting down all the top trending tickers over at Tasty Trade, and Glenn, I believe, G Money.
G Money.
G Money.
Yeah, I owe him $30 for that euro pound trade.
Oh, do you?
Yeah.
Uh-oh.
Really?
No, but
Yeah, but then he owes me $600 for the short Aussie dollar. So we're chipping away at the debts.
Yeah.
Yeah.
Okay.
one little debt at a time.
Yes.
I love that for you.
Me too.
Okay, that is our run of show. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news,
Today's
coming across the wire. Our leading story, top story, just in.
today's headline. This
Our leading stories.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is March the 10th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings, Mr. Bat?
Oracle, the day you've been waiting for a bounce in Oracle. Though Oracle, the last couple of days, even though the market has had some turbulent movement, has actually caught itself a little bit of a bit. Decent IB ranking
Yeah,
there.
it's kind of been choppy here at 150.
Yeah, but it's off of its lows, right? I mean, I haven't looked this
It got into
morning.
like the 140 handle, but
Yeah, 140 handle, 141 on the low. It's 151 right now, 152 today, up about 50 cents to a buck.
Yeah, and they announced they're going to have some layoffs and stuff because they need to fund their, AI fantasies.
Yeah.
But okay, that is on the horizon. Well, hey, checking in with the first headline. I don't know what was going on yesterday, but massive reversal in the market.
Crazy.
Then at 5:30 p.m., so then after market close, President Trump did sort of kind of address the nation. I still have questions, but he says that we were on track for the war to be complete. But then he did turn around and say if Iran continued to stop vessels in the Strait of Hormuz, we would hit them 20 times harder. So people were like, pick a
22
lane.
times high. He upped it.
But he says, I hate this timeline. What were your big takeaways from the massive reversals yesterday? And did you get caught up in it?
Would you say it was 240?
I think we had about a 230 point intraday range in the E-minis, high to low, in the overnight session.
Sure,
as well,
sure. Even last night with the E-mini S&Ps down 25, I woke up this morning, they were up about a dozen or so.
Yeah.
And they've had a 70 handle move so far this morning, top to bottom from last night to now, basically.
Shout out to Ryan who called in short volatility. Remember when we had that call and he was like,
Yes.
And we were kind of skeptical that we would get a 25 handle in vol, and volatility got to like, I want to say 23 yesterday.
Just under 23, 22.
2290 was the low of the session. So, he nailed that one.
He did nail it a lot. And he's stealing a page from me. That's usually my page, but he really went with it. I thought we would have one more move lower before we went higher, and one more move higher in volatility, one more move lower in the market before we went higher. So I was a little bit surprised by it, and the magnitude of it.
To be fair, Iran's still shooting off missiles this morning.
Yeah,
so.
but when oil goes from 80 or 60, starting it to 120, it's just FOMO. It's just not a natural progression of how markets move. Now, when Craig comes in, he'll talk about how futures get a lot more exaggerated because it's such an easy click to get leverage. They move a lot more than, say, a stock, which has some fundamentals to it. This is just a price in a future, but just seemed like it was in. And everybody who wrote into me on Sunday night, I was like, you got the high in oil. In my opinion, at least in the short term, probably the long term, probably not for another couple of years, but.
And we had that segment with Jim too about like gamma risk, and
yes,
and we have the skew segment today, and both those I think played into it as well. And I think just the move in oil also helps rally equities because you have this kind of, sigh of relief, so to speak. You have oil kind of coming in, and that's an automatic bid to E-minis. You saw gold and silver kind of rally at bonds. I mean, bonds were another huge.
You mentioned bonds. I mentioned gold. You mentioned bonds were probably a buy, and
bonds
you were
moved
right
a
there.
full 1.5 points. It was a crazy move. It was it's one of those where you just have kind of a volatility comes out, and it's a rush to get whatever you can find.
Yeah, and then this goes to the next headline. Oil did fall over 6%, so it was down as much as 9%.
Yeah.
Again, it's moving overnight.
Since you mentioned volatility, if you noticed yesterday, I know even the S&Ps finished the day up 35. They were up 60 at one point or something like that. But even when even the S&Ps were up 20, 25, on their way to up 60,
Volatility came in 2 points.
It came in 2 points. It was down 10% as a whole.
Yeah.
So you had a 30-handle positive move in the E-mini S&Ps and volatility in 10%.
Yeah.
A lot more than I expected, but good call from our
But also, gas prices still ticked up 5%
Of course.
overnight. And
they're just catching up, and you got the summer blend coming.
That's true. With the spring blend, I know you're being facetious, but we do have the spring blend. It does take a little bit more. And there is
you
normally
believe this
a
bullshit.
15-cent increase when you switch to the spring formula. But still really, really high prices for diesel that no one's addressing or talking about. Diesel's
higher.
over $4 an average, a national average. It has not been that high in a very long time. That does affect things like transportation, logistics, things like that. But if you want to talk about that, we don't have to talk about that.
Diesel's been high for. I mean, I don't know. I don't have a diesel vehicle.
$4
for a year
gallon.
or more. Every time I notice it, I just have noticed that diesel's always been higher. Anyway,
As Dr. Jim proclaimed yesterday, oil is actually in a bear market now. It's down.
I think it's so Chris putting that out too. You guys all thought you were comedians.
It's down 20% from the highs.
Yeah,
Bear market.
It's still up 30% from where it started the year. We're not gonna talk about that.
I don't make the rules.
So it's fine. Hey, something we
just
do want to
live by
talk
them.
about.
Yeah.
In other commodity news, gold seems steady after Trump signals the war in Iran may be nearing an end. Bullion was near $51.40 an ounce in early trading. What are you doing in gold? You could throw silver in there too.
I thought gold wasn't probably had some upside because it wasn't really participating the way oil was, and we traded it that way a little bit.
We caught 50 or 60 handles.
Yeah. So I don't know. I mean, now flirting with 5,200, probably
Kind of middle.
Yeah,
middle of the range.
Middle of the range. Maybe
Silver
still
is
a
the
little
one
bit
that's really going nuts. I mean, silver was just in the 90 handle. I think we just a little over 90 here in the overnight session. So it's up 5% with gold up 1.5%. So
gold silver ratio got up to 62 through all the turmoil of the market, back down to around 58 if you remember.
This is kind of middle of the last month.
Yeah, the lows were down around 46 or something like that, but recent lows was about 56. So we're getting close to there. Maybe we do something in there today
we'll
too.
Be looking at that one.
We'll see where it is when Craig comes on. We'll do something in there about that.
I like how you're just saving all the best stuff for Craig. What am I, chopped liver? I'm the one who's here. I put on makeup. I put on
He's like
makeup
the
for
new
you
shiny
bozos.
object.
No. All he does is he puts on a polo shirt and gets swole, and then he comes in here, and you're like, "Oh, Craig, I want to trade gold with you."
He did bring us.
He did bring us swag, which was nice.
Swag
really
too,
nice swag.
I didn't get swag.
And
you weren't in the room.
Craig is daddy of sorts. CME Group,
You know what? Fine.
That's the sponsor.
I'm not going to retweet any more posts.
CME
from the
swag
CME.
has a good, for any poser on eBay.
Whatever.
They'll pay up for that.
We have some pretty decent swag. This is a good one, but it doesn't hold a candle.
No.
Softness of a CME vest. I actually wore
the bro fleeced.
The bro fleece. I've never been a bro fleece
The
guy.
finance bro fleece.
Yeah. I'm too unkept for that. I'm not, like Glenn. Glenn could wear a vest and blend in.
Central casting. He's the poster boy. Yes.
Yeah, just a finance guy walking around town, just one in a million. There's just
after he went to church.
After he went to church, he's good. He drank a glass of milk. I can't wear it. It just doesn't fit.
Helped an old lady cross the street.
Yeah.
People still do that, right?
Yeah.
Okay.
Yeah.
Good.
I just don't have that vibe, unfortunately.
Wall Street investment giant.
You hold your wallet when you walk walk by.
Yeah, they see a Batista coming, they're like, oh shit.
Wall Street investment banking giant Goldman Sachs is pitching hedge funds a financial product that allows them to take a short or long position on corporate loans. What could go wrong? Remember how we got into like the 2008s? They're like, what if we bundle all of these mortgages together? And then so now Goldman's like, what if we allow hedge funds to just short or long corporate loans? What could go wrong?
Yeah, this seems a little bit like collusion here, but whatever.
Yeah, they got to be doing this privately too. I mean, like this.
Yeah.
It is
right.
known as a total return swap because swaps have never got us in trouble before. It's a derivative contract that allows investors to profit from changes in market value of the loans. Again, I've seen this film before and I didn't like the ending, according to the great poet Taylor Swift.
Goldman Sachs down about $7. Goldman Sachs quietly going from, the 950 handle under 850 now 825.
It was 900 and change yesterday at the lows when we saw
What?
those puts.
800 and change.
No, it was trading like 790 yesterday.
The low was 795. You're right.
Yeah.
Yeah, you're right. 825 this morning, but that's down from 832. IV is really pumping in Goldman Sachs, even though it doesn't have earnings till April 13th.
Long JP Morgan too.
Yep.
All the banks have kind of gotten whacked.
Yep.
But they do have ways to trade corporate bonds. Like HYG is kind of a high yield
Yes.
corporate bond ETF if you are looking to participate in Goldman Sachs type trade.
If you too want to have your part in bringing down the American financial sector.
Yes. If
you
you
on
make
a
your
bad
$500, the world burns.
Coinbase has launched futures contracts for traders across Europe, marking the first time the exchange has offered regulated crypto derivatives directly to users in the region. The products are being progressively rolled out through Coinbase Advanced in 26 European nations. Coinbase
quietly upticked about $50 in the month of February after making lows at 140 or so. It's over 200 right now, 204, actually up $4 this morning. Bitcoin's bid a little bit too, up 600 and change. It trade up to over 71. It's now 70,700. So coin catching a bid. Good IV rank in coin also, 44. Good IV rank all around pretty much the way we've had some volatility in the market.
What's Bitcoin doing this morning?
70,700 after trading over 71,000.
Are we so back?
Are we so bad?
I don't know. We'll find out when we
don't get Ryan.
talk to Ryan.
We had Ryan yesterday.
That means there's still a rally left in Bitcoin if we don't have Ryan until tomorrow because we can't ship.
NVIDIA is reportedly developing its own answer to OpenClaw. They are on the verge of announcing its own claw. Which claw do you want?
The big one.
Basically, the Claude trend, it's more just agenetic. It's an AI, it's an open source AI platform. NVIDIA wants in on that. It formerly known as ClaudeBot and MoltBot. They're wrappers for large language models like Claude Code and OpenAI's Codex. They can function as personal assistants that can write code and browse the internet for you. NVIDIA says, I want in on that sweet, sweet action.
Yeah.
What are you doing in NVIDIA?
Talk about spyware. That is a prime. I mean, that thing has. You could give it access to your emails.
Yeah, but what if you gave yours access to your DFS and you're like, hey, go forth and make all these trades and plays for me? I don't know.
See, one thing even with computers and how amazing they are, nobody knows the future. Okay? You can't program that. So
No.
they can make the bets, but there's always going to be uncertainty.
Well, it could compile like scouting reports for you or something.
It's all bullshit anyway.
Friends,
I mean, scouting reports for, maybe for his fantasy football team or something like that. That might be good.
Yeah, it could certainly help. I will use it to my advantage.
What are you guys doing in NVIDIA?
Caught a little bit of I don't know if it caught a little bit. 182, it was off of its lows of
175.
170. Yeah. I mean, it's been 195 to 175. It's 180 and change right now. I mean, it's been a very, very tight range. I have an iron condor in there. Seems to be working okay. Ivy rank's only 17, so relatively low.
Okay, well, that's...
NVIDIA's gone nowhere quickly throughout all of this turmoil.
So Anthropic is suing the U.S. government. They're suing to block the Pentagon blacklisting the company over AI use restrictions. And then Anthropic CFO said that U.S. government actions could cut the company's revenue by multiple billions across the business. But they said, look, our principles and our founding ethos is that you shouldn't use our technology to create autonomous weapons, and you shouldn't use our technology to surveil American citizens. And then for that, then they put them like on this list, and it was like, now no one can work with Anthropic at a government level. And so they're like, that's wrong. We're going to sue you because we have legal basis to do so. So it's going to court now.
And then Sam Altman is out here like
He's like, we'll do it.
He's like, pick me, Daddy, pick me. I'll be your favorite.
Yeah.
I wish that went more than 3 months of John Jay College of Criminal Justice. I could have given you a good answer on this, right?
Oh, yeah, you could be our legal expert.
Could have been. That's what this network.
But Anthropic is racing towards this IPO sort of finish line. What does this change in their calculus?
I wish I knew. I would say. I don't think it really matters. I think all these stocks, SpaceX, Anthropic, OpenAI, there's going to be more than enough liquidity for them when they IPO. Like, I don't think there's going to be a problem.
Doesn't seem to be a lack of money
out
there for these products or any other really comes to market, even at whatever $1 billion level they put them at.
Trillion.
Yeah.
Well, speaking of OpenAI has acquired a company called Promptful. I love to say it in like the Mr. T voice.
Yeah.
It was like, are you good at getting AI to do stuff? Yeah, I'm a Promptful.
Yeah.
I like it.
OpenAI just acquired Promptful, the startup founded in 2024 to protect large language models from online adversaries. So I guess it kind of brings in some of that cybersecurity sort of yumminess that the market wants. You can't trade OpenAI, but you can trade Microsoft. So
and Promptful. You can't trade that.
Love the name.
I will say the cyber stocks have had a really nice rally over the last month or so since earnings. So you had PanW, which had a big move to the downside, Zscaler as well. CrowdStrike was basically flat on earnings and has rallied about 80 handles.
Oh, wow.
Cloudflare Net is another one that has rallied from 160 after earnings up to 200. They got caught up in the
SaaS.
The SaaS apocalypse.
SaaSpocalypse, yeah.
SaaSpocalypse.
Microsoft's probably the least of them all, and biggest, most established, I guess, for its rally back. Got into the 390 or so. It's trading around 409, which used to be a great cleaner. You remember 409 cleaner?
They still got that.
I do.
It was a great cleaner. You can clean your sneakers with that shit. Stuff. Sorry. Fantastic was another one.
You said the S-bomb like 30 seconds ago.
I don't remember that.
Microsoft is adding a higher price Office tier bundled with Copilot as they try to juice their sales with AI. Microsoft, I am going to hold your hand when I tell you this. No one wants your crappy products. We only use them because it's a corporate mandate. But the new Microsoft 365 E7 bundle is coming in May, and it includes the Copilot AI add-on. Again, respectfully, no one wants this.
This is the $3 trillion company that nobody wants to be with.
Microsoft's hopes that the launch will lead to higher adoption of Copilot, which has yet to become common among commercial productivity subscribers. Again, because Microsoft, nobody wants this.
Microsoft, I'm long.
But nobody wants this, Nikki.
It's okay. That's exactly when.
That's exactly when you got to strike.
That's when you got to buy, right? When nobody wants it.
Microsoft has sunk $100 billion in the past year to data infrastructure. So gotta make that money somehow.
Gotta get long.
We're gonna be the ones paying
Microsoft
for it.
Ivy rank at 35 is pretty good.
Yeah,
that's pretty good.
Unchanged this morning, maybe down about 50 cents.
Sad news for all the Apple fanboys and fangirls out there, and that includes me. Apple's AI struggles are rippling through its product plans after having a stellar week last week by announcing a cheaper MacBook Neo, the cheap 17E phone, the new M5 MacBook Pro. Then this week, Apple says, look, We are going to have to delay a long in the works smart home display, the product codenamed J490. It was first scheduled for spring of 2025, but then that got postponed. Apple also supposedly working on like an AI pin and like an AI robot and then this AI home display. But again, the company announcing that hardware getting pushed back. What do we do in Apple?
IB rank at 23. What do you think, son? Trading around 259, basically unchanged this morning.
Yeah.
It's kind of acting like an NVIDIA. It's been in a pretty tight range.
Channel.
It was bid yesterday, too, when the rest of the market was kind of imploding.
It has been kind of opposite the market.
Yeah.
It seems like on these big down days, Apple is basically unched, right? And then on the big up days, it's like kind of...
So is Apple the new safe haven? I mean, what do you think the correlation is, if you had to guess?
I don't think there's a very high correlation across the market, so I would say it's probably lower, but
what's its beta
0.5, 0.7.
I would think it was 0.5, something like that. Above 0.5. It's 0.27.
Oh, wow.
Really basically random to the market.
That makes sense.
But when you think Apple, it's in just about everything, and I talk about it all the time. And by in everything, I mean in every
all the ETFs
that track the market.
Every plan,
Yeah.
Well, good news for our neighbors to the north. The Canadian government, said on Monday that it will allow TikTok to continue to operate in Canada. Oh, good on you, bud.
Oh, yeah, bud.
It will allow an investment by the tech platform to proceed after completing a national security review.
I played golf, and the guys behind us were a group of Canadians.
Oh, hot.
You would have liked them. You would have liked them. They were a little older.
Again, hot.
Yeah. Those guys can drink.
Oh yeah. Well, they get it. They're oppressed. They're like in Gilead over there, so they come down here and they're just like they just want to hit all the clubs, get something to drink.
I met them as we were at the bar, and the first guy orders like 6 Miller Lights,
and then he got something for his friends.
He's got it in a bag, and then his friend comes, and his friend was going to order beer. And the first guy's like, "Oh, I already got it." He's like, "Oh, we're gonna need more than that." And he ordered 6 more Modelos. So they walked out with 12 beers before the round started. To be fair,
Miller Lite is like water.
It is true. It is. But it was quite the start.
Sure, that is. Yeah, pace yourself, boys.
Yeah, you got a whole 12-pack in the back of the cart, and you haven't even hit your first tee shots.
You can't trade TikTok, but you can trade Meta.
Yes.
You can't trade TikTok is right, but you can trade.
Or I guess you could trade Oracle, because I guess Oracle owns TikTok and they have I don't know.
Yeah. Meta trading around 648. It's actually up $1 this morning. It's been a toughish trade.
Sold puts yesterday at the bottom.
Yeah, which was good.
Yeah. It's another one where it's gone kind of nowhere from this spot. But
Meta?
Nowhere.
Yeah.
Yeah.
I lean long. I lean long Meta and Microsoft. They're the dogs. So
the Amazon-owned self-driving unit Zoox is going to expand to testing in cities like Phoenix and Dallas. Zoox will start by deploying a fleet of retrofitted Toyota Highlander SUVs before rolling out its toaster-shaped robotaxis, for testing. Zoox says that it has already served more than 300,000 riders since its public launch in Las Vegas and San Francisco. I don't see as many Zoox videos. I think I've seen one on my social.
I've never seen
I see more Waymo videos.
Those look bigger.
Because Waymos are just chaotic, and it was very sad when there was a shooting in Austin. A Waymo was blocking the ambulance from getting to the scene, and was Waymo, you move your ass.
Yeah. On my walk to dinner yesterday, what are the ones we have?
The little
Cocos.
robots. Yeah, Coco.
The Cocos.
They're so cute.
They're so cute, but there was a patch of 5 of them. It looked like they got into one's
turf war.
Yeah, a turf war trying to get by each other.
Yeah.
And they were all just stuck in this patch on the sidewalk, and I kind of got a kick out of that. I was like,
they didn't know which one got to the intersection first, and if it should be right goes first or left goes first.
Yeah, and then one inches forward, and then the other one tries to inch back, and then they kind of keep going in that same.
Well, but tell me why I saw one almost get hit by a car, and I legit got sad.
like, oh no, watch out.
I was like, watch where you're going. I'm just glad it's not like slushy for them, that the sidewalks are clear.
Yeah, let alone the humans.
Oh, is that
Thank
what
God
you're worried about with the slush?
Yeah,
I mean, come on. What about us old people
robots.
that have to walk?
Yeah, seriously.
Amazon.
I'm sorry, you drove your Porsche from your heated garage.
Amazon
to this garage.
213 unchanged. Shh.
Did you drove
No,
a Porsche today?
not today.
Not today.
yeah,
You're like, not today.
Yeah, too
A
much.
170-degree day, probably.
A little too dirty outside.
Yes.
For a Porsche.
Yes.
Hey, this is wild. Google-owned YouTube is now the world's largest media company, and it is only getting bigger. YouTube's 2025 revenue topped even Disney's media properties, and it is poised for ongoing growth in both advertising and subscriptions. Yeah, that's crazy. That's a lot of cat videos.
There's a lot.
Yes, you have a lot of cat videos. You can get.
But I have a YouTube subscription. You have a YouTube subscription of
Yeah.
some sort. Like everyone I know has.
An
Like,
underrated Google piece
Yeah.
yeah.
of their megacorp.
Yeah. No, Google 305. I don't know what else to say. I like YouTube TV.
I mean, I was shocked to discover how much time my boomer parents spend watching YouTube. Like when we were on vacation, we had like a smart TV in the room, and my dad's like putting in his YouTube stuff. And my parents are so cute. They sit on the couch next to each other, and my mom's like, no, go back. She's like, yeah, I want to watch that one. And my dad will click on it, and I'm like, what are you guys doing?
What do
And
they
they're-
watch?
Whatever, like all sorts,
it's
just like
like a-
clips from like late night shows, and
Okay.
just like my dad will watch like barbecue videos or like
nice.
plane videos, and
like that.
my mom likes anything with like little kids being like cute, you know,
Okay.
like the shorts.
Yeah.
And I was just like, this is a wild way to spend your free time, but you do you.
Just keep swiping.
Yeah, keep going that way, I guess. But good job for you, Google. Hey, this is awesome. Uber is launching a feature to allow both women riders and drivers across the U.S. to be matched with other women for trips. Love to see it. Uber is expanding a pilot program aimed at addressing concerns about the safety of its ride-hailing platform. So if you are a lady and you are trying to head home in the evening and you would like another lady driver, Uber is hoping to open up this option more on its platform, and I'm not mad at it.
I'm not mad at it either. Seems like a good idea. I mean, Uber could use a good idea. 73 and change off of its highs from around 100. Caught a little bit of a bid like the rest of the market the last week or so when it made lows of around $70. Ivy rank at 24. You got to be directional.
Anything in Uber for you?
Not really. We haven't been. Volatility's not that high, and I don't know. It's been second tier in my list. Like I don't know. No, got nothing on there.
In a wild, like literally legally unprecedented move, Live Nation, the parent company of Ticketmaster, has reached a deal with the Department of Justice to settle charges that basically Live Nation is a monopoly. So they had started this trial in New York, but then the Department of Justice reached a settlement with Live Nation. And I did a report on this yesterday for a social video. You're like, okay, well, it is what it is. But when they reached this settlement, they didn't tell their own lawyers. So the government reached like a separate side deal with Live Nation, but their lawyers were in court that day and they didn't know that the government was going to settle. And so the settlement, it's not like they were trying to make Live Nation and Ticketmaster be two separate companies. So basically the settlement, it's not great for consumers. It's $280 million that's going to go to 40 states. They might have to sell some of their amphitheaters and they're going to open up their platform. But the states yesterday, they saw this deal and they're like, we reject the settlement and they're going to keep the trial on. So now I was like, can you do that? I don't know.
All I know is I would not mess with the Swifties, and I know the Swifties very much do not like these.
Anyone
people.
who's tried to buy a concert ticket in the last 5 years is greatly frustrated by the bots and the prices and the hidden fees and the scams.
Scam.
Although if you don't go all the time and you go to your favorite guy, you just pay up a little bit, you get great seats.
I don't have a guy.
Live Nation looks like it's unchanged, 165, high end of its most recent range. Quite a big bid yesterday.
Because the government, like the case was like going well
Live
by
Nation
like all accounts.
Sucks. I mean, let's
Like
put
they
it.
do. Like no,
Yeah.
like I don't
Yeah,
know a
nobody
single
likes it.
person that's like, I love Ticketmaster.
What are face value on tickets now? You know, $200 or something like that. A median price, I'm just saying.
Yeah,
not the best,
but
not the worst.
you see a $90 ticket, but by the
Once
time you check out,
or twice that.
Yeah,
I
you
mean,
check
they
out
double.
is $400. You, speaking of social videos, you two did a video yesterday as Hims was on a rocket ship after Novo Nordisk drops its patent infringement case over the compounded semaglutide, the weight loss drugs. And they're like, hey, let's stop fighting. Let's work together. And then we can both defeat Eli Lilly. What are you doing in Hims?
The evil Eli.
The evil Eli Lilly, yeah.
We don't have a position on it either of these. Hims, I mean, it's into a 40 or 50% up move. Not that it's at highs. It's
just off its lows. Right? Yeah.
It's hard to kind of
jump on
that. But if you wanted to trade it, I was looking at like a diagonal spread or something like that where you don't have as much downside risk, but it's a hard one.
Yeah, I talked about NVO, maybe just a simple covered call. It pays a big dividend, $160. It pays a dividend soon, or maybe just a stock buy. Stock rallied about 80 cents or so. So both trades. Hims is up $1 on his side or more. NVO worked out good too. Do either one.
I'm sad that I'm not gonna get to see this come to its full fruition. But just like the tweets that came out afterwards are just chef's kiss gold. So Logan Paul offered $1 million to any NFL player who could beat him in a fight. He popped off on Twitter being like, I would throttle Myles Garrett. Come to the gym. Let's see how it goes. So Le'Veon Bell was like, okay, bet, let's go. So then Logan Paul tweets, well, the boss is called. Turns out I'm too valuable of a WWE superstar to be fighting bums. I want to take this opportunity to congratulate Le'Veon Bell and Braden Fiocco for their 15 minutes of relevancy. Now back to being broke and retired. Wild, my guy. And then he says after the backlash of that, he says he would do it if the player would put $1 million in escrow and then they would fight. And he's like, I'm also okay with it not being on TV. I just like, you can very clearly see he got scared.
And it's all marketing too.
It is.
You're trying to pull,
I love it. I mean,
string up some.
He's such a marketing machine.
He's such a douche canoe.
Oh, 100%.
That's
100%. Yeah, no doubt.
That's getting you the eyeballs.
Yeah.
It's like, do you know how many people would just want to punch him in the face for free?
There are quite a few, I'm sure.
Yeah, I think it's a lot. Sometimes when you see two people that have been together for a long time, you're just like, you know what? This relationship, I don't understand it, but I guess somehow it works. And, if that's your man.
Are you talking about us?
No, if that's your man, you got to stand beside him. This lady is married to a quote unquote MacGyver, and look at what his latest invention is. Watch this. It's so funny.
Look at this fool. I don't know what I'm doing.
So he strapped a jukebox to his riding mower.
That is the biggest jukebox ever.
What are you doing?
What you doing, man?
What are you doing?
I ain't gonna go without a radio this cutting season. I'm letting little jaywalk fly with his trouble.
Yeah, you think that's gonna stay on there the whole time?
It's gonna stay on there. I'll weld it on there. I am what do you call it? Handy, resourceful. I don't know what you call it.
Yeah, like a MacGyver.
Right?
Like a MacGyver.
Yeah. All right, I'm gonna cut the grass. Y'all get up and do something.
Y'all get up and do something.
That's pretty good. That's pretty good.
You gotta do what you gotta do. You could always just Amazon one of those like boom
Sure.
things that are like, $100.
Sure.
Don't ruin a good thing. The guy had to lift that up. I mean, come on.
I know he did good. Got to do something.
Let's take a quick night. Listen, if you gotta mow the lawn, let's take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P down 14. We got confirm and send and so much more. We'll be back in 90 seconds with Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with, confirm and send on this Tuesday, March 10th. Before we do, let's take a look at the market. Big difference for just 24 hours ago, although we've had a decent range already overnight. You can see here from yesterday to today, this range so much bigger. Yesterday, 240 handle move top to bottom, but we've already had a 70 handle move top to bottom. We're right in the middle of that, down around 13, which is about 20 handles off of the lows and more like 40, 50 handles off of the highs. NASDAQ down 11. Russell's the weakest of the group, down 13. And the Dow is down almost 100. They're all down around 0.25%, maybe a little bit less, some a little bit more. Basically unchanged after that huge day yesterday, not only in volatility, where it percolated to almost 30, 30.19 it says there, all the way down to around 23. We're sitting at 23.70 right now. Volatility last night having a decent size range of about 2 points, right in the middle of that range right now, as you can see here. The interesting thing about yesterday was with the E-mini S&Ps up 30, which, you know, we've already had a 70 handle move this morning. Volatility was in by 10%.
Huge move. Massive
Huge move. But we're still 23, which is the old high from just recent. We still, there's plenty of, I don't think we're out of the woods yet.
You're not missing anything. There's still opportunity.
You're not out of the woods in the market, meaning that maybe there's going to be a lot of two-sided action, plenty to do things. I think we'll chop around here for a little bit. We'll see how it goes. But these ranges have gotten quite big. Bonds are up 2 ticks, 116.10. Fairly tight range, about 20 some odd ticks last night. Bitcoin finally catching a little bit of a bid, down about 1,000 off of its highs of 71 and change at 70.5 right now. Ethereum doing well, also hanging out at 2,050 or so. Oil down $5. Has oil, like, I didn't read too much about oil last night. Have you heard, like was there a big news in oil, or did the market take the stage?
I think it was some of the kind of talk from Trump about the war ending.
Yeah.
There was some other stuff about how, the U.S. Navy would potentially protect and
the Strait of America.
Yeah. But I really think it was just a matter of just volatility and skew and just the positioning. I mean, when you get volatility in oil above 100%, we were selling the 175 strike calls 8 days to go for $1. That's a 75% out of the money option relative to where oil was trading.
8 days. That's
For 8 days.
That's the other key. Yeah,
is crazy. And when you get that big move, the same discussion we had with Jim about Gamma, it happens to the downside as well.
Sure.
So you have this, huge move to the upside. Skew explodes, volatility explodes. Everybody's on this one
There's
side.
already call skew, and that call skew explodes even more.
Yeah, those calls that we sold were probably a 15 delta. They probably went to a 3 delta within the span of 15.
Well, we had something like a 4 or 5 standard deviation move. I mean, to the upside.
To the upside.
Yeah. I mean,
but when everybody's participating in that upside skew, and you get that downside move and that delta, you lose that delta really, really quickly. Yeah. The hedges come off as well, and that's a cascade to the downside. And that's, we've seen it in gold and silver when we had that kind of unwind. I think the same thing kind of happened with oil. I don't think the big moves in oil are done with, but that's
by no means.
That's what happens when you have skew exploding and volatility exploding.
Oil 89 and change, still relatively high, all things being equal here. Remember, it kind of languished in the 50-60 handle for quite some time.
So here's a question now, because we talked about this a little bit when oil was at like 105 around this time yesterday. And if you have these, anybody that had any sort of iron condors, jade lizards, anything,
sure,
it's blown through your strikes. Those spreads didn't move all that much.
They did not.
As much as you would expect.
Right.
You have a 20 point in the money spread on a $100 asset. You expect that to be basically parity. It was not. They were trading at I have a $2 wide spread that was trading at $1.50.
Yeah.
It's now basically a 50-50. It's at $1-ish now with 7 days to go. Do you close those or hold them? That's the question I have for you.
Say it one more time. Does what hold?
I have the 80-82 call spread right now. That's an in-the-money call spread that was 30 points in the money.
Right.
48 hours ago.
Right.
It's now, inside the expected move. It's trading at about half the width. Do you close the trade?
Yeah, the interesting part about it is if volatility wasn't as high as it is, that would basically
spread would probably
be a full loser. You'd have another.
It would be a full loser now, and it would have been a full loser on Sunday. It would have been even more, it would have been $2 on Sunday, but it was at $1.50 on Sunday, and now it's at $1.10. Do you take the money and run?
I probably do, even though I'm a little bit bearish on oil.
I kind of agree.
Yeah, I think there'd be other opportunities to trade it better. I'd rather sell and have the money spread that's going to be trading fatter than the in the money spread.
Yeah,
that's going to be trading half the width.
Yep. Yeah, I agree. At least some of it, like these ones that are right at the money. The stuff that's a little bit further in the money.
It's 7 days is what you're looking at, right? Yeah. So in seven days.
So I got filled 119.
Okay, beautiful.
On a $2 wide spread.
Yeah.
I could probably take another one off. I put on a strangle yesterday, so.
Yeah, I think that's probably a better trade strategically than just smoking hopium on. It's a $5 expected move on the 0 days. You got a $23 expected move on the 1 day. Yeah. I mean, oil's definitely got volatility.
The tighter spreads, I think it makes sense.
$8 expected move.
Like I have a $4 wide call spread that we did as part of like a Jade Lizard. That spread is wide enough to where you're going to get a lot more out of that spread into a down move than you would a $2 wide spread, where the $2 wide spread, it's always going to trade at like half the width. No matter if we get a $10
40% to 60% of the width, right, and especially we're anywhere near the expected move in the next 7 days, that's how it's going to sit.
Yes.
You're going to have to hold it. It's almost like a butterfly. You're going to have to hold it pretty much to expiration to get any kind of bang for your buck on that spread.
So the tighter spreads, I think, make sense to take off because they're not going to move much in your favor into a $5 or $6 down move. The wider spreads are going to move a lot more, and I think you have a little bit more upside in holding those. So I'm going to hold one of those on the downside here, and then I have the strangle that is basically flat. I'm short the 70-120 strangle. The 120 call is about twice the value of the 70 strike put, which is unbelievable.
It really is.
With oil at 88, it's $18 out of the money on the put side and 32 on the upside.
Very good.
Cool.
Let's take a look at what else is moving before we get to confirm and send. Gold up 152 and change here.
Damn, we should have held.
Silver up 4 and change. Silver up almost 5.5%, a little bit more. Gold up almost 2%. Gold silver ratio trading around 58 and change. Maybe we'll talk about that with Craig today at 8:40 when he comes on from the CME. Net gas flirting with $3 again after trading up to 3.5, let's call it, back down to 3. Net gas has quietly had a lot of volatility to it, but it's not really a product that I look to trade that much. Our earnings today will be Oracle, ORCL, after the market closes. Oracle up $2, but you can see you haven't missed anything if you're looking to buy the dippy in there. You haven't missed anything if you're looking to sell it either.
We have some long delta there. So
yes, I know. Looking to get bailed out. Confirm and send. Let's do it. Tuesday, March 10th.
Yeah.
I've noticed in products like oil and silver, the markets are really wide when trying to sell options. Is there a maximum off the mid price you're willing to move after which you just give up? Meaning, if it's too wide, you don't get filled at mid price, do you go play somewhere else? I want the position, but not a bad price.
So both these products have a ton of volatility and have been moving a ton. And that's why, if you were looking... I
assume they're talking about oil futures here, like /CL. They're not talking about USO, right? Because USO is much
But even USO, yesterday into the close, the bid-ask spreads on oil options were banana land. Some of them were, you would see, $1 at $17.
Sure.
Like they are just all over the place.
And that'll skew your P&L also a little bit too.
Oh yeah.
And by just unrealized loss and gain because the markets are so wide, you're taking the mid price. In his example, the mid price might be $2, but you get a $1, $17, you might get an $8 mark on that option.
Yeah.
Go ahead.
I think with either one of these products, you have to kind of figure out your price. Like that $2 wide spread that we just closed. We both knew that it's going to trade at about half the width.
Sure.
Right? It might be a couple pennies in either direction, but where to start. If that was marked at $2, I'm not going to route that order. Like you got to kind of price out these spreads and understand where they're going to sort of trade at, and then put your price in and work your order from there. You got to kind of, and even if you're trading the outright futures, we mentioned this, like if you were trying to trade MCL or CL futures, you got to put a limit order in and just let it sit. You can't be, no market orders here, nothing like that.
Oh, no,
that
no
you
market
will
orders.
get
You don't
murdered.
use market orders anyway, specifically in any product typically. We'll put a marketable order, a fillable market order in. If something's trading at $99, you put it in, and you want to sell it, you put an $89.90, offer in, you're going to get filled on the bid kind of thing. I would never put in a oil product that has 100% IV rank and 100% monthly implied volatility now, which basically means it could double in the next 37 days or so. You're not using market orders. No. I'll answer it a little bit differently. I'll just say that oil, from my own experience, oil options are about, with this kind of volatility, about 10 cents wide. They go 2-3 cents wide when oil's not moving around and volatility is half this. But let's just call it 10 cents wide right now. If both options that you're trying to trade, you got to do a little bit of due diligence here. If both options you're trying to sell a vertical spread, and both options are 10 cents wide, that mid price or a penny off of mid price is going to be a pretty accurate price. If you see one of the two, like oil's trading at 89 right now, and let's say you're trying to sell the 90, 92 spread, and you see the 90 calls with a 10 cent wide market and the 92 calls with a 40 or 50 cent wide market, that mid price is not going to be accurate. And I would probably wait until those markets tightened up where both are around 10 cents a piece. Then you could go with mid price. When you got one strike much wider than the other, mid price is irrelevant at that time. Next question, please.
I understand that the Tasty Trade platform tracks positions very well through the order chains. Yes, great feature, especially when rolling and adjusting strategies. However, I was curious to know whether you also keep an external tracker to analyze performance over time by ticker or strategy. It's funny that this is on here because I've had some conversations with the dev team on building this sort of thing out and
improving it, adding more features to it.
Yeah, and like making like our dashboard P&L tracker a little bit more
robust,
a little bit more customizable. Yes, so definitely thinking about this. Do you use anything else?
I will manually at times, just because I'm old school and I don't believe anything that I see it. First of all, this is a phenomenal feature. I think we're the only brokerage firm, Tasty Trade is the only brokerage firm that has it. So it's amazing, and it's phenomenal for a quick look on something. And you usually know if the trade is.
And I use it a lot on the show. Like
yeah. No, you go back on it and you kind of analyze where we were for the show, for content. I don't think you do that in your downtime. Look at, the stock was higher and went lower and I rolled, I should have waited kind of thing. I mean, no, I don't, you're going to drive yourself nuts doing that. But you could look and see, I didn't do that great here with my roll timing, or I didn't do that great with my closing here, but the strategy worked. I would rather use it to pat myself on the back than to look out how much I could have optimized the trade that I put on. So I don't look at it for tracking or analyzing my performance or anything. But I will look at how much credit I received on a position I've had for some time. And then I do go back into my own kind of my fills and my activity sheet and just kind of check the math myself. So I do it old school sometimes, the same way I would do an old school looking at a 1x2 and just do it in my head. But yeah.
I think this gets a little dicey when you're trading as much as we trade. I think for the newer trader that has a couple trades on, or one trade per underlying, it's a little bit easier to kind of do this, and it's a fun exercise, and it might help you kind of see where your best and worst trades are. But when you're doing 30 trades a day, I would spend all night tracking everything. Keep that in mind. That at a certain point you just look at the P&L and your positions and your overall delta, and that kind of tells you everything you need to know.
Yep.
Cool.
Yep. Next one, please. How is it that sometimes the same delta strike for a put and call is a different dollar amount away from where the underlying is trading?
So tune in for our next segment, because we're going to talk all about this. It's skew. So it tells you where the skew, with oil, we were just talking about oil, lots of upside call skew. The calls, the expectation for upside prices is higher than the expectation for downside prices based on the option prices.
Yes, and you'll have the opposite in an SPY, where you'll have put skew, or a QQQ, where you'll have put skew. But yes, that is the answer. Now, if it's at the money, the at the money option, all things being equal, should trade at the same price. There is no skew on a straddle. Meaning, if stock is 100, the 100 call and the 100 put should trade at the same price.
Depends on how much skew there is in the underlying. Like sometimes you'll see an at the money call, like in oil right now, you'll see at the money calls be
equities.
Yeah, and equities are going to be mostly 50 at the money.
90% of the time or more. And if they're off, they'll be off by a dime. They'll be pretty close. The only reason you'll see a big discrepancy between the at the money call and the put is if there's a dividend, and then you'll see the call trading lower. So that's all. But All I'm trying to say is there's no pricing anomaly that you can take advantage of.
For sure.
Next one, please.
When an iron condor gets rolled a few times and turns into an iron fly in the 21 to 30 day range, what's the next defensive move from there?
Well, it doesn't have to be this way, but let's just assume that it is this way, right? That you've kept rolling the untested side and you get to an iron fly, which means you have two short strikes that are on the same series of the option. So let's say the stock is 100 and you had sold the out of the money spread, and now the stock goes all the way up to 110, and you're short the 110 call and put, and you're long some out of the money option, and you're long some out of the money put on the other side. The best thing to do right there is to just do nothing. I mean, you really did just about everything you could do, and you're looking to close it. You probably
close
have.
Or hold. I mean,
what's that?
Close or hold it.
Yeah, close or hold.
You've done everything you can do.
Yeah. You've done all the defense you can. You've now put yourself. You've collected all the credits you can. You probably turned. Let's just say you were being mechanical and you collected 1/3 the width of the strikes. You've probably now collected half the width of the strikes. That's usually the way it works out. If you collect half the width of the strikes, you got a 50-50 shot. And now you sit and wait. Not too much to do. It's either a close or a hold.
Very good.
All right, let's take a quick 90-second break. Even the S&P's down 10, volatility up 8 cents. We'll be back in 90 seconds. We've got an option jive for you. Back in 90 seconds. Let's take it live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option jive. Nikki, it is time for an option jive. Tail risk, distribution, skew, and kurtosis. Even the S&P is down 12.
You love a little kurtosis
in the morning.
15 in the morning. Mm-hmm. Perfect. Let's do it. So this is actually a really good one. A perfectly timed discussion because of the things that are going on in the oil markets, silver markets, lots and lots of call skew here and tail risk, at least priced into those options. So I
think the products you just named, the future type products, are the one where this is the most prevalent.
Sure. Yeah. Well, you see it in like a Tesla and an Nvidia, and on the downside, you can SPY and Q.
You can.
But this is just a good thing to understand. So,
but I'm sorry to interrupt you again. You don't get those 4 or 5 standard deviation moves in the products you just named unless they're a lot less frequent than when you do in the future side.
Yes,
for
sure. So just talking through the distribution and where you can see skew. In a normal, which is not skewed, distribution, you will see basically an equal distribution on either side. If the put $10 out of the money is a 20 delta, the call $20 out of the money would be a 10 delta, or would be a $10 out of the money would be a 20 delta. It'd be the same exact thing. When you're looking at a distribution, 68% of the data is within a 1 standard deviation. So that's your 1 standard deviation range. When you go to 2 standard deviations, it incorporates 95% of the expected distribution. When you get to 3, it's 99.7. I think 4 standard deviation is 99.9 or 99.8.
Keeps having it.
8.5.
Yeah.
So this is just what a normal distribution looks like. In financial markets, most distributions are not normal. So we consider them to be
abnormal.
Well, sometimes like you'll see a skew. And so we often see the skew on either the down or upside, depending on the asset. So on the downside, you typically see the skew more so in like a SPY or the Qs, where the velocity of risk, the big movements in the market are typically to the downside. In something like a gold or silver or an asset that has a perceived floor, like silver is always going to be worth something, oil is always going to be worth something, generally speaking, even though we did see negative prices at one point, you'll typically see positive skew, which the distribution essentially just kind of moves towards the upside. There's a fatter tail on the upside, whereas there's a fatter tail on the downside. And that tail is the 3 standard deviation move. That's your kind of like, black swan type pricing that you see on the downside in equities. Typically, you see it on the upside in something like gold or silver or commodity.
Perfect.
So to better understand skew, we're going to take a look at 2 events where you saw significant skew and you saw realized tail risk. The 2 that we're going to look at, and we're going to look at these in distributions, are going to be the 2020 stock market crash. I'm glad we're considering it a crash. You didn't consider it a crash, even though it was 30% to the downside, 40% to the downside. Wasn't a crash for you, right?
It's too fast of a crash for me.
It was too fast of a crash and too fast of a bounce.
If you blinked, you missed it.
Yeah, the boomer crash is one where you go down and then you stay down for a little bit and you kind of
got some time to relax and enjoy it.
Yeah,
see some value out there.
Yeah,
make some generational wealth.
Yeah, the millennial Zoomer crash is V.
V shape. That's bull.
So we're gonna look at the February to April timeframe, which was about 50 days in the 2020 crash, COVID. And then we're going to look at the post-2020 crash, which we're taking April to June, which is about 50 days as well, trading days. And we're going to look at the distribution of those returns to show you skew and tail risk in real time. And so when we look at those distributions together on the next slide here, we're going to look at the number of days SPY experienced a certain percentage return during that period of time. And so when you get to the next slide here, guys, there's a negative skew in the price of options when there is a market crash. You see that the moves to the down, we had more moves to the downside when the market was crashing over those 50 days. When you're looking at this graph, you see the percentage change on the bottom, and then you see the number of days that we had that percentage change. If this was a normal distribution, you'd see this be even across the board.
Right.
This is a downside skewed distribution. This is a tail to the downside. And that's what you're seeing here in this distribution. You see this negative skew that is in the market during that period of time. You had a lot more of the distribution skewed to the downside during that period of time. When you look at the up move, this is a positively skewed distribution. And so you can see you would expect this to be kind of even on both sides. This is skewed to the upside. You can see you have, a handful of occurrences that were 4 to 10% up move, whereas you had none to the downside. And so this is a positively skewed distribution of returns over that period of time. And you can see the majority of them are centered around zero. You still have that kind of, most are within the, call it standard deviation, but the tails were to the upside in that distribution. Mm-hmm. And so when you put those together side by side, you can see negative skew has been much deeper, right? So you have these bigger moves. Like if you put these together, what you're looking at is, huge down moves and huge up moves in the same amount in terms of days. Where are the tails fatter? And in SPY, the tails are going to be fatter to the downside. You can see there's a handful of occurrences that were 10 to 12% down moves, 12 to 14%, all the way down to 14 to 16% downside moves, whereas the upside tails are limited to, like, let's say 4 to 6, 6 to 8, 8 to 10% up moves. There's a much wider downside than there is upside, and that is why there is skew on the downside in SPY. So the absolute value of the outlier moves is larger in the negative skew. So when you're having downside moves, all else being equal, you typically see much greater downside moves in something like SPY or QQQ than you do upside moves on these tail type events.
Yeah, and the opposite side of that would be, that's why it's on a per strike basis. A bullish position selling puts, 1x2 put spreads, or anything else like that in an SPY or a Qs pays you so much more for the same amount of risk, same delta risk that you would on the call side.
Because of that downside risk, that skew that when something happens in the market.
Perceived risk, but yeah.
The perceived risk
we're at all-time highs,
is bigger to the downside.
Yep. Good one.
And so just in general, if SPY has a move larger than a 3 standard deviation, the probability it moves to the downside is about, like if you take all of those 3 standard deviation moves, 67% of them are to the downside versus 32% of them to the upside. It's exactly what you were seeing in that 100-day sample there. Mm-hmm. Most of the biggest moves are going to be to the downside, just in general. So most of the time in the market, option price returns will result in negative skew, and thus you have this negative tail risk. You see downside options priced a lot higher, a lot further out of the money than upside call options. Rarely or seldom, option price returns will result in positive skew, and thus the positive tail, the reward for upside or market recoveries, is typically cheaper. It's cheaper to speculate on that upside versus hedging to the downside. The hedging on the downside is always the more expensive trade in something like a SPY. That's flipped in something like oil or silver. And just generally, the biggest market moves are to the downside. It's tail risk. The black swan is bigger on the downside versus the upside.
It's cheaper to keep her. Keep going.
So when we get into kurtosis, we're getting a little bit spicy here. So unlike skew, which is the measure of symmetry of the distribution, so you would expect there to be equal symmetry if there was no skew. Kurtosis quantifies the extreme outlier values in either tail. And so you typically see more kurtosis when volatility is low. The right side distribution has a much wider kurtosis because the distribution is centered in the middle. You have this tighter distribution, whereas the tails are much wider and wider based on percentage, but are further out of the money. And so the kurtosis effectively is a metric of how heavy the tails of the distribution are compared to the normal distribution. So it's how much further out of the money those the tail options are. The two delta options, for example. The further, if an asset has those further out of the money, there's more kurtosis than another one.
Very good. Nice little piece here on skew.
Couple takeaways just to give you some little bullet points here. Most of the time, markets experience negative skew and negative tail risk, so pricing in bigger moves to the downside. Kurtosis is a way to measure the outlier risk of an underlying and the extent to which the underlying returns deviate from the normal assumption. So this is just another way to kind of look at a normal distribution. So using skew and kurtosis together, a trader is able to see how much tail risk there is in the market and quantify those probabilities. I don't think I'm calculating or really looking at kurtosis all the time, but it is a nice thing to know and understand.
Absolutely. And you know what's a nice thing to know? We got the opening bell in just a couple of minutes. Beautiful. So we'll take a quick 90-second break. NASDAQ just turned green. E-mini S&Ps are down 6. Volatility's in by 7 cents. We'll be back in 90 seconds. This is Tasty Live. Opening.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with, the opening bell coming up here as we pre-market here, I guess with 1 minute to go. E-mini S&Ps down 6.5 handles. Let me zoom in here so you can see really what the volatility is like. And that volatility is 23.5, still elevated at the high end of its range. I know it traded over 30 on Sunday, but still the high end of its range. Dow down 60, Russell down around 9, and E-mini S&Ps down around 7. Bonds are up 2 ticks. Bitcoin back over, almost 71,000 if you're looking at the Bitcoin Cash, BTC /USD, 70,800. and Ethereum at 2,054. Oil, 88.90. Right in the middle of its range. We got the opening bell here in less than a minute. Gold up 127. A good move in gold, one of the bigger movers. And silver, actually, on a percentage basis, up 6%. Back to flirting with 90. It was just over 90 a moment ago. 89 and change. Gold-silver ratio hanging steady at 58.5. We got Craig coming in for futures in focus after this. We'll take a look at a lot of those futures and futures options with an expert on the futures and futures options in the room from the CME. So we'll talk about that.
Should have held.
Oracle.
Should have held.
What's that?
Should have held the gold.
Should have held everything. Always, right? ORCL is trading 153. That is earnings after the market closes today. I know you have an existing position there. IV rank of 86, quite high for Oracle. There's your opening bell, my friend.
Whoa.
Even the S&Ps
snag some NASDAQ.
Go up $1. NASDAQ goes up 46.
Woo.
On a quick one.
Yeah, what do you think for today? I mean, volatility coming in. You had a massive vol crush yesterday. You think you see more of it, or you think we kind of stay bid in volatility? What do you think the floor of volatility is until Iran is over with? Or do you think that 20. Even matters? Do you think 20?
20. We haven't been able to break that. We break that, and then the war is probably over.
Then what do you think happens to the market after that? Just straight.
I think it's
Valhalla.
No, I think we're in for a choppy market this year. I think what we've had so far this first quarter of the year
is what we're going to continue to get.
Yeah,
I hope so. I hope you're right, because I
think you might have a much more of a normal market movement, the 10% up or down kind of thing.
Yeah.
I think that's what it's with high implied volatility. I think that's going to be nirvana for trading the way that we like to trade.
I agree.
No, that's my thinking. But take a look at volatility today, in by 27 cents. Let's see if that continues to hold at 23.30 and change, giving a little bit of a relief to this market as NASDAQ goes up 50 and even the S&Ps flirt with unchanged. You basically have an unchanged market. Let's see what's moving this market. SanDisk up 15 or so. Meta up 12, and I talked about it earlier today.
Woo!
MU up 9. Crowd, you mentioned, up $7. Gold up $7. That's GLD. AVGO after earnings a couple of days ago up to another $5.50. Tesla up $5. Goldman Sachs, which was a little bit weaker earlier, catching a small little bid. Reddit up $3. BE up $2. Circle up $2. Baba Coin all higher. Let's see what's moving this market lower here. Qualcomm down 4. CME down around 3 and change. Some of the oil-related products like XOP now 2 and change. That makes sense with oil trading under 88 now. XOM down $2 and change. Really, it looks like some of the airlines a little bit weaker too. Really, right now, I would think the market was up a lot more with the numbers that I just read there.
Yeah. I just added back. So we took off some of the gold calls yesterday, just kind of scalping out of them. I'm not 1-to-1. I'm just basically short that strangle. In gold, I have the
just sold some
425, 525 strangle 1-to-1, and then I have some 500 strike calendar spreads. We added as kind of a pseudo long delta, but really short volatility. Bless you. In silver, we scalped out of some of the 100 strike calls yesterday, which was good timing. Today, I just closed out of the puts. The puts were trading at like 90 cents. So I figure I'm net kind of neutral, short volatility gold, GLD, short delta, SLV, and then we're going to play around with the futures with Craig. But that's kind of my equity ETF positioning for those two into this move today. And then I close out BMNR. I just had some leftover calls there from a diagonal spread. I took like $50 per on those.
What's your overall delta theta? You're pretty flat here.
Overall portfolio? Flat to slightly long, I would say. Yeah, I'm basically flat overall.
Very good. Even the S&P down 8, NASDAQ down, NASDAQ up 30, Russell down nothing, and the Dow down 65. All quiet.
Yeah.
So far. Gold, which has been a decent sized mover here. It looks like volatility, Ivy rank and GLD has come in a little bit on this up move in GLD. I know I put on an iron condor in there for my option trades today, which is basically just about every day. You can catch us on YouTube mostly. Sold at 295. It looks like it's trading around, 254 or so. Although markets could be a little bit wide in there too. So we'll wait till that tightens up. But really all the way out at a standard deviation across the board.
I just closed out those Intel puts. We took like 90 or $100 ish out of those. I still have the diagonal spread on the upside. Should I just close that too?
Why not? Bring the register.
Yeah.
Right?
Yeah. I mean, it's a cheapie. It's the 45. I'm long the 45s in May and short the 50s in April. So it's like, it's about as good as it gets in a short time frame. And that's a 60-day, 60-30 day.
Expected move for E-mini S&Ps, what are you guessing? Just for the day.
65.
45. Yeah, you would think with volatility back at 23.5 that it might be a little bit higher, but 45 for today so far. That's inside the move that we've already had overnight.
I just closed out the Rivian. I had a stock position. I think we sold I think it's basically a scratch. I remember we sold puts into, I think, the last earnings it had when it was trading near like 17 or 18. Took assignment on it, and now it's up like 80 cents today. I was looking at that line item, and I was like, does that need to be in my portfolio right now? And the answer to that, when you're scrolling, when you're scrolling 2 pages of positions, you don't need that 100 shares of Rivian, so I just closed out of that.
You did something out of principle. I mean, it hadn't been any higher since earlier in February or so, so I wouldn't imagine that it was a losing trade. It was probably a small winning trade.
Small winner, scratch,
but you had to hold on to the stock. That means you got put stock on your put. It wasn't what you wanted to do when you sold the put, but you held it for duration.
Yeah.
I guess that's a good way of looking at it. Even the S&P is down 10, NASDAQ up 24. So far, we're just oscillating around volatility, catching a small little bid, 23 and change. Kind of stinks looking at the market right now after the type of movement and opportunity we've had over the last couple of days. Meaning we've had maybe a 20 handle move in the E-mini S&Ps top to bottom since we've been on the show. We've had a 60 handle move in the last couple of days, same time frame.
Yeah. I just rolled the USO calls that I had in March to April. I did it for a debit, but I rolled them right at the money. Trying to take advantage of just that at the money extrinsic value. You have rather than roll the deep in the money option, which actually isn't that deep in the money because of how high volatility is, but it'll lessen your delta. And even though it's a debit, I'm moving $15 further up.
You went from 90 to 100. I mean, from 105 to 90, right?
Yeah.
Yeah.
So it just lessening the delta a little bit. I have short delta in USO, so I don't need the 70 delta, 80 delta in the money call. I can roll to the at the money call and
So you did it for 15. You did it for 15. 3 strikes, $5 wide, $15. You did it for a 5.5. I'm just rounding.
Yeah. So you add $10 of potential value.
That's correct. That's correct. So if you did it for $15, it wouldn't make sense. It would just be kicking the can down the road.
Yeah.
Here you're doing it for extrinsic value.
Yes. And then I am trying to close. I don't know where I'll get filled here.
Downside, you got CRM and Qualcomm leading us to the downside. ServiceNow, which has caught itself a little bit of a bid over the last couple of days, sold off the last 2 days. Let's go to the upside here. Upside, you've got MU up 15 and change, SanDisk up 13, Goldman Sachs and Meta, those were the other two, and GLD, which was up $7, up $6. Tesla up 4 after being up around 7 or so. So far, looks like a breather day, son. Are you ready for a breather, or are you ready for some more action?
Yeah, let me. Yeah, we could do that.
If we could take a break?
Sure.
Let's take a quick 90-second break. We've had a relatively tight.
I got so many positions. It's like it takes me a little while
to go through them. I get that.
To go through them. So
yeah,
just
sure.
I'm trying. I'm playing the game, bro.
Yeah, you're a big shot now.
Oh, you know what? The other thing I'm gonna do.
I get it.
I have
big shot.
Yeah, I'm a big shot. Big shot. Big dog. Big dog. Okay, I'm ready.
Beautiful. Let's take a quick 90-second break, and we'll come back. We got more Tasty Live after this. What comes up next?
We got futures in focus. We gotta be slinging a couple futures. I got some ideas.
We'll be back in 90 seconds. Let's Tasty Live.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. And we're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Just circles are great.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back. I love the ding. We've got our friend Craig here, Futures in Focus. What's up, my man?
Nothing. How are you guys doing?
Good. I mean, you've been traveling all around, and I didn't know if you were going to make it in today.
It was touch and go.
Seeing your son up in Canada, right?
International man of mystery.
Yeah,
That's right.
Ottawa, Ontario. Yeah, not a lot of flights go out of Ottawa, and it was probably the most surprising flight that took off. Like they didn't give us a lick of information for 2 hours. I actually had rebooked for this morning because it was just looked that bad. And then all of a sudden they're like, we're boarding.
What happened? Was it just
the plane was broken, but they didn't tell us anything.
Yeah. They give you the 40-minute delay or like 30
40,
yeah,
and it just kept going.
That's the kiss of death. When you get that, you know that you're screwed for the entire
The only thing that worked for me was that there were so many people connecting through Chicago from Ottawa that I knew I could go standby on that one, book the next morning so I could get back today at least.
Yeah.
And then I wound up getting back on standby. It all worked out. It was a fun weekend. I got to see 3 hockey games. So
That's awesome. And your boy plays, for those who don't know, which is great.
Yeah, he plays up in Ottawa for a team called the 67s.
He's trying to live the dream.
6'7".
Wish him the best of luck,
6'7".
man.
It was
6'7".
Yeah.
They played in front of 18,000 kids once at the Sens Arena.
Oh, the kids must have been
a few months ago. It was like school day in Canada for hockey or something. And
I've come to the realization that I will never be in Ottawa, having
It's a nice city.
having to do what you're doing.
Yeah.
I've come to the conclusion.
Getting to do.
Yeah. We got spring hockey starting. And I don't even know how into it he is there. So
good job
out of
it's
you.
been fun.
I'm jealous.
It's been a fun ride.
Awesome.
Cool.
Well, we're so glad to have you in studio. So thank you so much for
Thank you,
going the
guys.
extra mile, getting here, which was really cool. And we want to talk a little bit about futures. But before we do, I was reading, and I don't have a lot of information on it because I didn't see too much about it, like single stock futures. Now, this is not a new idea, right? I mean, they're kind of...
The industry tried single stock futures, 25 years ago?
Yeah, it wasn't ready for it.
It wasn't
without
ready
the
for
internet.
it. I don't think it was introduced in the right way. But yeah, we announced a couple weeks ago, our intention to launch futures on single stocks sometime this summer. We don't have a lot of details on it yet.
How are they going to settle? What's that? Do you have any insight?
We don't know. That's some of the stuff
So
that's
who's
being
it got to
worked
go?
out a little
Does it
bit.
just have to go to the
Both regulatory bodies, I think, weigh in on something like this. So, it's been some work to get it done, but we're really excited about it. And personally, I've been doing this a long time, and it's one of the launches. Micros was kind of the same way back in 2019, where I personally just really excited. Like I think the time's right. Like
any size numbers you can give us? I mean, I know you can't talk about a lot of things.
We don't have any of the specs yet. We did say that we were going to have about 50 names. 50 plus names to start.
Yeah.
I mean, it sounds like a lot because it is a lot. I mean, I don't know if I can. I mean, you have 2 pages of positions, which probably brings you close to 50 or 60
around that. Yeah.
Different individual stocks. 50 or I mean, that's a large portfolio.
I think it'll be the names people want to trade. That kind of thing. So
and it'll be 24/5. Like it'll be like all the other futures. So you'll be able to
the future, right?
Yeah.
And that's what I think.
That's going to be interesting.
All of the characteristics that come with futures. So, like I said, I'm glad you brought it up, Tony, because like I said, I'm really excited about it, and we're really excited about it.
I hope from the brokerage side that they allow margin relief for those. I mean, I don't know.
Yeah.
You know
Well,
what I
but
mean? I'm trying to
You'll
go
get
as a
the
retail
extra.
investor. I'm trying to go down the line here. That would be pretty
What
cool.
are the characteristics that would make it attractive? That kind of thing.
Yeah. It'll be span margin though, so like you will.
Yeah, if the brokerage firms it's really not the brokerage firms, it's the regulatory bodies allow them to recognize it as part of a position.
Yeah,
it would, I obviously know nothing, but I'm just going from maybe past performance that might take the next iteration after they
We'll see, right? And hopefully within the next month or so, we'll be coming out with a lot more details on it and some of the specifics like
So
that.
could you imagine?
It'll be cool for like overnight, like if there's like
so many use cases for this.
When Jensen is having a keynote speaking
Earnings,
engagement
right?
somewhere, earnings,
earnings,
Yeah, could you imagine having a position that has delta to it, right? In ABC stock, whatever, that has a single stock future to it, and you can mitigate some of that delta risk or take advantage of some of that move in the market, after hours markets that these hopefully are trading in after hours. That'd be cool. That makes your position dynamic, basically.
and
24
you
hours.
don't have the tax implication.
Yeah.
Which is another huge part. Like if you're just long.
And we're getting ahead of ourselves. We're getting ahead of ourselves here, looking for some of the advantages here. But
I think it's great. It's a great discussion. I can't wait to talk about it more and have more details and stuff.
What's the rough timeline? Are you estimating or like you're hoping for?
We've only gotten specific as this summer. We're hoping to launch this summer of 26. So whatever that means.
That's awesome. That's really cool. That'll be fun.
Yeah, I'm glad you brought it up, Tony.
Cool, man.
Well, we want the first segment on it. Okay, the day it's revealed, I want a special edition, Craigie in studio to announce that.
Well, maybe it won't even be a Tuesday.
Even if it's not a Tuesday, we're bringing.
I'll come over. Yeah, sounds good.
Very good. Very good. So today I want to put on a handful of trades because I really don't have much on the future side. We've been trading around this. I mean, this market has been amazing. There is. I mean, yesterday's move. Did you happen to get?
I saw a few. I mean, I was traveling and stuff, but it's. What's may you live in interesting times? Is that a proverb?
Yes.
Like
it is certainly interesting
holy
times.
cow, right?
Yeah, this is about as
so
good.
Hopefully,
as
it's been treating you guys all right.
Yeah, we've been having fun with it. But I think with volatility this high, I think we can put on a couple positions. Maybe start with like an ES.
Sure.
Big wide iron condor.
Sure.
So ES, $50 a point.
Yeah.
Get it. The span margin. Very, I mean, capital efficient way to trade.
I'm glad Tony brought up single stocks. I'm glad you're bringing up ES options because I go to a lot of industry events and things like that with retail traders, individual traders, and I'm always surprised at people who might be trading SPX or spider options have no idea that they can get similar exposure using options on futures like the ES options, or maybe they're trading QQQ options and they don't realize that NQ options exist. So I think it's great, Nick, that you're bringing this up because it's an awareness thing. I think in a lot of cases people just don't know that they're out there, and like you just said, they're span margins. So a lot of times if you're selling premium, which I think a lot of tasty traders do,
got high IV rank,
you get sort of advantageous margin versus some of the securities in some cases. So yeah, I'm glad.
And a smaller product than say SPX.
It's half the size.
Yeah, half the size. So if you're looking to do something that maybe takes too much buying power in SPX, you go to /ES, you get the same exact. Not same exact bang for your buck, but it's the same product.
It's the S&P 500, right? And we have expiration. We have options expire every day of the week, Monday through Friday. So just like the one thing I will say is they are deliverable, right? So where the SPX is going to settle to cash, if you're in the money at the end of the day, you will wind up with a future if you're in the money. And
that's why you see a bid ask up on top of the screen, and you see volume. If you go to just to compare the two, you go to SPX, you'll see a bid ask, but you'll see no volume. There's no trading there. It's a good way
exactly
to realize that something is deliverable.
And Nick, I interrupted you, but you were saying 50. It's the multiplier on these options is 50. So, and that's one of the other things that people have to get used to if they're used to trading options on securities where, it's 100 shares. So instinctively, if you've been trading a lot, like multiply this by 100 and that's your dollars. Like it's instinctive. With futures options, you do have to get used to that multiplier. In this case, it's 50, right? So instead
I think that's the biggest surprise when somebody trades one of these futures for the first time, futures options for the first time. They'll see 100 and think they're getting $1,000, and you're not. You're getting $500.
Exactly.
So it looks so good, so big to be true with the amount of buying power you're using. Yeah. So what are we looking to do? So sorry.
I was thinking just like 100-point wide iron condor. We go out to. I was looking at the April 30th, which is the end of the month contract. Do you find that most like liquidity is kind of centered around those end of the month type?
It's kind of throughout the curve now, right? So we've all heard, and I know this isn't necessarily the tasty trade philosophy, the zero DTE phenomenon, right?
Sure.
And and I'm sure you have traders that are trading.
We go over it every Thursday. We do 0 day,
So certainly, some of the growth that we've seen in options from the retail segment has been in zero DTs, but we've also seen, and I think it's a testament to like what you guys teach. We also we've seen growth in like those 40 to, what you guys talk about a lot, like put it on and then manage it and stuff like that, which I love to see, right? Because I think that's a very responsible way to trade options.
And all these are there's not a liquidity issue. I mean, across the curve, they all are, a couple ticks wide at most. So it really doesn't, the advantage that you have with something like the ES options is, and the fact that they have basically daily options here, is you can pick whatever expiration you want. You want to go to 31 days, you want to go 34, 35, 38. They're all pretty liquid. They're all kind of in the same realm.
And they are there's 4 options throughout the year that are American style, but everything else is European style, so you don't have that exercise risk. We do have the it's kind of a legacy thing, I guess, because back in the day, we only had 4 expirations a year, right? The March, June, 7Ds. So we actually have 2 options that expire on those 4 Fridays. We have the Legacy Quarterly, which goes off in the morning, actually, and is American style. And then the European, that's kind of the daily, like most of the options are. So, again, these are just things you kind of got to know, but small things.
You'll see those. So on the platform, they'll be labeled with this AM.
That's great.
Indicator.
So everyone, so you know it.
So people, we get this question every once in a while of like, why are there 2 expirations here? Like these are both, June 18th. There's one
not the most intuitive thing in the world.
So the AM options, the last day to trade those are the Thursday prior. So they settle in the morning,
right?
Based on those,
right? So there's essentially almost a whole day of premium in the other option, the European option that goes off on that.
Yeah,
night.
You'll see it expire, but it'll still have premium because it's not settled yet.
So, but these are just things you just got to know, and it's not rocket science, right? Just a couple of nuances with these. But yeah, you were gonna look at something, Nick?
Yeah. So here's what I'm looking at. So I'm looking at 51 days out, 100-point wide spread, which is about $5,000 in total max value, right? So you have, I'm looking at it about $40
in credit.
$40 in credit here. You'll see your max profit,
which is $2,000.
That's
$2,000 again because of the 50,
and you get this extra margin relief. So the buying power on this spread is going to be about $2,300, whereas your actual max loss is going to be $3,000 on this trade because $5,000 is to the total value at 100 points wide. And if you're selling this at 40 ticks, it's going to be a $2,000 credit.
And you're really just selling a call spread and a put spread, right? That's what an iron condor is. And and I think it's another great example because I actually do a presentation sometimes called An Option is an Option. And my whole point is all of the stuff you know from securities options, your Greeks and vols and strategies, they all work the same way here. So like an iron condor in this is going to work the same way as an iron condor in a spider, an SPX option.
Yep. Same thing. We just got filled. So I'm short the 7,100, 7,200 call spread. And then on the put side, the 6,300, 6,200, it's basically a delta neutral. You're selling around the 20 delta for the short options. You're further out of the money because there is skew to the downside. So you get a little bit further out of the money there. We talked about skew this morning.
Yeah.
So this is a perfect kind of example of that. So short volatility, kind of neutral on price here for the next 51 days.
And I think we've talked about it on this show. When did skew get introduced to the options market, Tony?
Options on futures?
No, the options. When did skew happen?
Oh, skew didn't happen until the 87 crash. Before that, everything was, $10 out of the money. If the call was $4, the put was $4.
It's not that long ago.
Not that long ago.
I mean, it's a long time.
It's a long time.
But not that long.
In dog years, it's not a long time.
Right.
But in trader years, it's a long time.
Just a little piece of trivia I've always liked.
Yeah, 1987. And that's when all the margining changed too on your positions too. They looked at upside and downside completely different.
Yeah.
I also wanted to do the gold silver ratio. I actually looked it up because you have the new SIC contract, which the SIC contract, the silver.
As the kids say.
As the kids say, one of us. MGC, you can do 1 to 8 on the 1 MGC to 8 SIC is roughly.
Well, what about the 1 ounce gold then, if you want to do that? Because you've got the 1 ounce gold, which is going to give you a more similar ratio there, right?
So you can do that 1 to 1 basically.
Almost 1 to 1 to 1 because silver's more volatile. So I mean that's kind of where the trade. That's where the trade comes in, right? But
sure.
But yeah, that's probably a better. If you want to spread those two.
So the 1 ounce contract, you got about 40,000 contracts traded just today in the 1 ounce contract. So it's pretty liquid.
It's fairly new, not as new as the SIC.
Yes.
But it's really developed quickly, especially with the moves that we've had in metals, in the last months.
We're gonna do that. We're gonna do that 1 to 1. So I'm gonna buy the 1 ounce gold contract. I'm going to sell.
Which you got filled on.
Which I got filled on. The SIC contract. We'll do that 1-to-1 on here. Let's see if we can get filled here.
Why not?
Yes.
Right?
Yeah, so that'll give us our gold-silver ratio. You got that ratio at what, 58 right now?
Mm-hmm.
And the metals were moving again this morning, right?
Yeah, you got silver up about 5.33%, and gold's up a little over 2.25. So pretty big move in metals here. We bought the dip a little bit yesterday too.
And you do that 1-to-1.
I did that 1-to-1, and we can look at the MGC SIL too a little later. But I also wanted to talk about, so with span margining, you can be pretty flexible with positions. So I was thinking of getting long the MNQ contracts. So we'll look at the micro NASDAQ, micro NASDAQ contracts, which is 1/10 the size of the NASDAQ contract, which is a big contract. But we can sell a call spread in the NASDAQ futures and do this as a sort of pairs trade. It'll be slightly weighted towards the call spread because at the start it'll be a bigger.
Sell the call spread in the NASDAQ options.
And then buy
along the future. So it's essentially like a covered call that you spread off a little bit.
That's what I'm thinking.
I love it. Like, you know, and that micro NASDAQ, that's a futures contract worth, let's say about $50,000, right? Because the multiplier on that's 2.
Yeah.
So 1 is going to be about $50,000 worth of exposure.
Mm-hmm.
So yeah, and again, like I love the example because once again, it shows you that you know, a covered call, or in this case, a call spread, is going to work the same way in these options, you know, paired with a future as it would, you know, in the security side.
So if we do like maybe a 200 point wide call spread.
Sure.
So what I was thinking was from a delta perspective. So if you're doing about, so at 1/10 the size, if you have one micro NASDAQ contract, it's going to be roughly 10 deltas to the a NASDAQ.
You got about 90 deltas in SPY, is what it comes.
No, in MNQ.
Oh, an MNQ.
MNQ, 1/10 the size. So if you had one micro NASDAQ and you had a 10 delta short call spread in the NASDAQ futures, you'd be basically delta neutral-ish. Neutral-ish.
It's a great example because it shows you how you can use that micro future combined with the mini options because of the delta. And, you know, in other words, if you had 100 delta option on, like that would be 10 times the size of your future because you're doing the regular size option with the micro future. But in this case, you're going, I love the example.
And so if you're doing sort of a covered futures position, we could do 2 of the micro NASDAQs that net you about 20-ish delta.
That's correct.
If you were trying to reduce that by selling like a 25 delta call, you could sell about 4 or 5 deltas in the NASDAQ futures. That nets you about 15 NASDAQ delta
at this time
on that position total,
Mm-hmm.
which will be about, you know, like if you were thinking in like stock terms, it'd be like a 70 delta.
That's correct. That's correct.
Position.
That's correct.
All right, so we're going to do that.
You did the math right.
So we'll do the 26,500, 26,700. It trades at about 1/3 the width of the strikes, $1,000 in credit versus about $3,000 in potential loss on that spread. So it's about 25% of the width. But it nets out to be about, you know, I'm selling like a 23 delta call and then buying the 19 delta. So it gets me that 4 delta, basically reduces it by like 20% on the long position. So I'm short, it gives me a short vol component to a long NASDAQ position. So we're gonna try and get in that one. And we'll do that like 50 days out.
You can puts a time component onto the pure future,
onto the futures position,
a decay component onto it too. You get a little
positive
data,
which we like to have.
Yeah.
on our trades.
Very good. Let's see where we get filled. All right, I'm in at 54.50. So I got 2 of the micro NASDAQ long contracts against a 200 point wide call spread in the NASDAQ futures. And those will be span margined against each other.
Exactly.
So
right.
You get that leverage.
Exactly. Yep.
Very nice. Put it on the follow page. Good job out of you.
Beautiful.
Nice. All right, my man.
3 trades in, not as fast. We could have gone faster, but we
went over the math. Craig's got to be compliant, so we had to make sure we did it all right.
I love this session, actually. I think it was great.
Good.
Awesome.
Good. Now all we need is a direction to help us.
Yep.
Yeah.
Right?
Or non-directional move. You get kind of
or non-directional move, or volatility
kinda
can
scalp
track.
out of them,
But
too.
volatility's looks like it's bid up around 58 cents, trading near recent highs, not at the highs of all day here. Even the S&Ps are down 25, Nasdaq futures down 40. Russell futures are the strongest of the group, only down $1, and the Dow is down just about 200. Good job out of you, my friend.
Thank you, guys.
Any parting words before you leave us?
No, I think that was great. I really appreciate it. Like always, it's always fun to be over here.
Phenomenal, man. Thank you so much for coming on the show. Thank you for the support to the CME. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. We'll be back in 90 seconds.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with the market measure. But before we do, let's take a quick look at the market. It almost seems like the market's not open with the amount of movement that we've had as of late. Now, we go back a week or two, this would be a normal kind of move on the S&Ps and the Nasdaq and the Russell. They're all oscillating around down a 0.25 percentage point. I guess the weakest of the group are even the S&Ps and the Dow down around 0.5 percentage point. Strongest of the group was the Russell. Now it's kind of equally as weak as the NASDAQ, which is down around 70. Volatility up by 63 cents. It's been bid all day long since we've been on the show, at least. It was up around 40, 50 cents right after the opening, even though we were green on the market. It's certainly kind of pushing the market a little bit lower as of right now. So watch volatility trading 24.25 right now. By 24.25, I mean $24.25, up around 60, 65 cents. We'll see if that starts to get weak. Maybe we can get a little bit more upside in the market if this stays bid. I think the market's going to have a hard time getting itself going. You did the gold-silver ratio spread.
We did it 2 ways. We did it 1 ounce and the SIC contract for those of you that want to get very small. That's as small as you can get. Very, very small position. So 1 ounce gold. So gold goes up, $50, it's $50.
Gold. So you did
the 1 ounce.
The 1 ounce. Got it.
Yes.
Got it. Yes.
The
yes.
SIL is 100, or SIC, I'm sorry, is 100 ounces of silver. So silver goes up $5. It would be $5 is a big move. But
yes,
if it goes up $1, it's $100 move in silver. And so those
like 100
are
shares of stock, right?
Yeah. So those are going to be a small way to do it. I also did it MGC. Long MGC, 2 of those, short 1 of the SILs.
That would be known as the gold-silver ratio spread.
Gold-silver ratio spread, the micro.
You're buying it, and we bought it around 58.50, so we want that to go higher.
Yes. And you'll see all those on the follow page, too. We did the long micro NASDAQ, short the NASDAQ call spread.
Yep.
And what was our other one? What am I blanking on? Oh, yes. We did the 100-point wide core type position, short volatility. Got VIX futures at 24, taking advantage of that.
That's correct.
And I just closed out of a strangle that I put on yesterday in oil. I did the 71.20. It came in 50 cents.
Oh, beautiful. Good job out of you.
That one's bye-bye.
Nice. Yes. Very nice.
IV rank in oil futures at the close yesterday was at like 130. So it's come in
significantly.
Yeah. Bigly. Yeah. Let's just look at OVX real quick. So oil volatility at 100 handle, just to give everybody an idea of where we were yesterday. This is actual implied volatility, and you can get this OVX colon CGI. It got up to 120 yesterday. So it's had about a 20% vol crush over the last 24 hours.
Big one.
Bigly.
Yep. Oil 88.20 right now. Kind of holding steady here. Hasn't really moved too much since we've been on the show.
Market measure time?
Let's do it.
Cool.
I'm ready.
How does volatility change over time for strangles and straddles? How do you think it changes?
Oof, it's a good question, but I have to think that volatility is going to change over time with the higher implied volatility all the time. I mean, subject to change daily.
Yes.
I mean, when you're getting big moves like this, when we were
volatility of P&L.
Oh, volatility of P&L. Volatility of P&L. It's going to move big with direction. I mean,
and time as you get closer.
Yep, sure. I mean, even you look at when you have a 240-point handle move like we did yesterday, top to bottom.
Oh, everything's going to be all over the place.
Your P&L moves and the volatility of your portfolio. That's why we try to, I think, which I don't know if they're going to get to in this segment, rolling at 21 days doesn't take all of it. Takes a big part of it out of the equation.
Yes. So straddles generate higher volatility than strangles because of the larger delta and the gamma that you have in these. Any small movements in the underlying price could cause a bigger P&L change for the straddle. So generally speaking, the straddles are going to be meatier positions. They're going to move with greater velocity. In terms of your P&L, the swing of $100 on a straddle is going to be way faster based on the movements in the stock versus a strangle that's out of the money. It's not going to move as fast for the same dollar amount. And that just goes hand in hand with risk. And so although strategies with larger deltas, such as straddles, yield higher P&L per contract, so you have higher potential value per contract, they also exhibit greater volatility in an average P&L. And so on this next slide here, when you look at a SPY strangle, 16 delta versus a 50 delta straddle, your median P&L on the strangle is going to be less than the straddle, of course, but you're going to have a higher win rate. The real key here is that your average volatility is going to be way, way lesser. You have about 25% swings in either direction versus the straddle, which is going to have these wider swings. And that's just because you're closer at the money. And this is also going to be influenced by the duration and the other things that come in like gamma and delta on those positions get much more volatile as you get closer to expiration, which is what we're going to kind of look at here. And so today we're going to look at how volatility changes over time with different strangles. We looked at a study in SPY, 45-day strangles with delta levels of 16, 30, and 50, the 50 being the straddle, and recorded their weekly P&L changes as a percentage of the underlying price. So just giving you an idea of how these are changing week to week in terms of the overall P&L on those positions. No words from you.
No, I mean, you're doing a good job, and it's all up there on the slides. So pretty.
We have honed in the slides a little bit.
Spoke
to the boys, and I was like, guys, we're Batistas. Okay, you can't give us these 40 different
examples.
I told them, I'm like, hey, we can kind of cut it down. We could cut it down a little bit. Maybe we do multiple segments on.
There's probably a lot more Batistas out there than there are,
We're
Jacob
man of the people.
Perlmans. Yeah.
Man of the people.
That's right.
We discovered that P&L volatility gradually rises as we approach expiration, but this increase slows down closer to the actual expiration date. Why is that? Well, because your 16 delta strangles are going to be way, way lower deltas as you get closer to expiration, assuming they're out of the money. So at a certain point, it's really all risk, but if you're far enough out of the money, it's really not going to change. The problem is that, you have that tail risk on for basically no reward.
Sure. And there's actually a little subtle color change in there. I hope you can see it with that line going across the middle there, trying to show you how, it changes drastically.
That's that's time.
Yeah.
That's just the time.
Yep.
Well, time decays. I mean, one day at a time, you know that.
One day at a time, and build a big wall.
So when we get into the 30 delta.
That's for a house, nothing else. I don't want that was an old.
You weren't being political there.
No, it was not being political there. I was actually being, I think, AA, one brick at a time. Anyway, go ahead. I've never been to AA.
So as we move to a higher delta strangle here, volatility accelerates more quickly. Why is that? Well, because by expiration, the volatility of 30 delta strangle is double that of a 16 delta strangle. The 16 delta strangle at expiration, assuming the stock chops around and goes in kind of exactly the motion you would expect it to be, those deltas might be 1 at expiration. The 30 delta are still going to be probably 5 or 10 delta options, assuming you get the choppiness in the middle, just because you're starting closer to at the money. And so you're going to have this wider variance in P&L as you get closer to expiration. And at a certain point, the risk reward probably skews against you. But this is just kind of a visual of how much more volatility in P&L you're going to see as you get closer to expiration. After the first 2 or 3 weeks, your P&L volatility is going to be 40 or 50% higher than what you started with. And so, if you're kind of trying to mitigate the volatility of your P&L in either direction, that's why we're looking to manage around that time.
That's correct.
Pretty simple explanation. As you get to a 50 delta option, 50 delta option is an at the money option, and so your P&L volatility is going to be heavily skewed toward time. Those options you have a lot of gamma risk, and so you can go from a 50 delta position, or basically a 0 delta position, to a 100 delta position very quickly as you get closer to expiration. And so volatility spikes significantly each week. Each week you hold the straddle, the more the P&L volatility is going to increase. The first week you might see $50 swings in either direction. The next week is going to be $75 swings.
Right.
And then it's going to be $150 swings. And then it's going to be $200 swings in either direction. And then $300, it's a big jump week to week. with those options because they're getting close. The delta move and the gamma of those options is much, much greater than the out of the money strangle. And this is generally why we trade mostly out of the money premium. We trade mostly strangles versus straddles because the strangles are a little less volatile from a P&L perspective.
Volatility coming in here a little bit in the market, up 28 cents now. Even the S&P is down 28. We'll see if the market catches a little bit of a bid here.
Exiting positions at 21 days can significantly reduce the volatility for straddles or for straddles. Managing the position even earlier can further improve the balance between profitability and volatility. And you can see the 42% reduction is if you manage those trades at 21 days or at 28 days versus the 21 days at 33%. You can see across the board, managing positions going to reduce your P&L volatility.
And that's what you want to see, right? I mean, you want to have that volatility of your P&L to be, I think it's probably the biggest change in our thinking as retail traders, at least everything we put out to you. Because in years past, we would say, you know what, you got to go all the way to expiration. That's when options expire the quickest. I mean, that's the easiest thing to look at. But we didn't look at how much volatility the overall market would give you, that price that you would have to pay. And if you held on into expiration, going into the expiration that we have now, like, I mean, if you were still trading March options, you had humongous swings. I mean, I got emails yesterday from people saying, you know, some of these 0-day options, they were basically at 0, 1, 2, 3 cents, and they became, you know, dollars wide. You can't keep everything. Even the S&P is down 19, as we did catch a little bit of a bid here, which is pretty cool. Go ahead, I'm sorry.
That's it. Couple takeaways.
Let's do it. Couple takeaways it is.
Aggressive strategies like straddles often show higher P&L volatility and sharper increases in volatility as expiration approaches. So as you get closer to expiration and you have a straddle position, you should expect the P&L volatility, profit or loss, to be much, much wider than when you start that trade. To keep volatility within a manageable range, traders should plan to exit positions ahead of expiration. If you want to avoid the big swings, you're rolling at 21 days, 2 weeks, you know, 1 week before, sometime before expiration. We're not really holding any trades to expiration.
No, we are not.
Rarely, if ever.
Very good. Even the S&P is down 15. That was good for 10 handles. NASDAQ down 24. Russell actually up 4. Dow down 70. Volatility in by 11 cents now. Volatility moved about 45 cents on that little time frame that we mentioned it on the show while we were doing it. We'll take a quick.
Should be good for our NASDAQ position.
Should be good for our NASDAQ position. And your gold-silver ratio hasn't moved too much. A couple pennies maybe in your direction. Bonds are up 3. We'll take a quick 90-second break and come back. We got more Tasty Live. What'd you just do in Microsoft?
I just sold
some
470 puts. But we closed out the 400 strike yesterday. Remember, it took a couple bucks out of that.
Microsoft down about 5.5 bucks.
Got a little bit of a down move today, so I got a little bit of extra long delta.
Beautiful. Good job out of you. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Glenn. Coming in the house. Even the S&P's down 12. We'll be back in 90 seconds. Tasty Live.
That's that. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Nikki, we are back, my son. And before we get to the trade desk, let's take a look at this market. E-mini S&P's down 10, NASDAQ down 9.
How does Daddy do it?
You know, I just got an email.
Daddy called the bottom. Did you? Daddy, amazing. What'd you get an email?
No, I did get a couple of emails. Is it easy as just looking at volatility and watching how it trades to see if the market catches a bid? And I don't know if it's as easy as that, but it is kind of one little tell. When you see volatility upticking and the market's going lower and going lower, then you could say, all right, that all makes sense. When you watch the VIX futures and they downtick by 10 or 15 cents, or they traded up to 24.80 on the last move to the same price on the E-mini S&Ps down near their lows, and now they're trading significantly below that number. I mean, it's a tell. It's something that you can put you can lay your hat on. I mean,
you're also a little bit like clairvoyant. So like you can kind of see these things. Like you just look at the market and you're like, oh yeah, that one.
No, I mean it probably works as much as it doesn't work, but I'll tell you what it does do. If you're looking to buy or sell premium when the futures are moving in your direction, even if we get back down to the same space or below, if volatility is contracted, you have a scratch trade and you have something you can do. There are many times I'll put something on because I think something's going to move in a direction and it doesn't happen, and I'm able to make a couple of pennies or just lose a couple of pennies on a much bigger move on the E-mini S&Ps than I would expect because volatility is contracted. Now, I covered some IWM positions some long IWM positions when we were a little bit lower than where we are here. So I got a little bit of egg on my face too.
I just sold puts in ServiceNow. So I did the 105 puts.
I like this trade. I spoke to a gentleman who is really big on ServiceNow. He really liked it closer to 100, but it's 116. It's been down
$6. It's one of the biggest movers to the downside in the S&P 500. So
good IV rank of 53 in there. Has earnings coming April 22nd, which is after the April expiration. So if you want to do something in April, which I'm assuming that's what you did, you sold the April 105 puts. Yeah. I like it. I like it. I mean, just on probably a profit, 76%, good IV rank.
I closed out of a diagonal spread in SMH, bought the dip there a little bit, took like $250 out of that, and then I'm going to sell just a delta neutral strangle, 17 delta on either, or 18-ish delta on either side, one standard deviation. The 450 call and the 350 put, $50 basically on either side.
Very nice.
In April, start a new little short premium position there.
Good job out of you, my friend. What's that?
I said very good.
All right. You know what? I'm done talking to you. Let's bring in our first guest. My man thank you. Breather day for you guys on the trade desk, I would assume. I mean,
Yes.
I know overnight we had a decent sized move of about 70 handles, but we've been well inside that all day long, 20, 30 handle move on the E-mini S&Ps, just talking amongst friends. $45 or 45 point expected move on the E-mini S&Ps all day is now down to $35. So take at least a 20-minute lunch today. I know you've been down about 5-minute lunches. Take about 20 minutes today.
Yeah, no, much needed breather after yesterday, which was quite the roller coaster. I mean, Sunday night down all the way to like down 140, something like that, closing up like 50 on the day or whatever it was.
Unbelievable.
I mean, that was quite the emotional roller coaster.
Sure.
230-point intraday range yesterday, including the overnight session.
Yeah.
That's
is
unbelievable.
absurd.
It's 3.5%.
Yeah.
Which
and
is the funny thing is with volatility with the VIX at 30, it's roughly a 3% move in either direction.
Right.
Like that's what's priced in to the volatility is telling you that is priced in. But when you see it and it happens, you're like, wow. But that's volatility.
As a retail investor and I see those kind of moves that we had there, I was really pretty excited about it. I had some positions that were losing money that I wasn't very happy about. I had some positions that were making money that I was extremely ecstatic about. But I look at it from an opportunity point of view. Even Sunday night's movement was kind of an opportunity. Like, what am I going to do? Like, how am I going to benefit from this? I was looking from a positive standpoint. Being on the trade desk, I don't think you get too many phone calls from people who like call you up and say, "Oh my God, this is amazing. Thank you so much." And then hang up, right? Like you probably get all the issues and that's got to be trying on you.
Yeah, I would say like.
So how do you deal with it?
Our perspective. I mean, I'm pretty. Okay.
This is a gentleman. This is like you see us. This is why
you
we're not
gotta
on
be
the desk
pretty-
because we'd be like, "Hey, screw you, buddy. You're not talking to me like that." He's
keel.
nice. He's a nice guy.
Yeah, you got to be pretty even keel.
That's why I'm over there and you're over here.
Yeah.
But yeah, I mean, it's really interesting, like, because our perspective on things is like, oh, there's like all these issues and stuff like that. But obviously, we understand that's not really the case, and just like we get a skewed bunch that call in, right? No one ever calls in when everything's going super well, typically,
right?
And so like yesterday, a lot of like crude oil and like micro crude futures, positions and stuff like that we were dealing with. But a lot of the people, who were, like, for example, selling put spreads yesterday, they're not calling in. They're like, all right, I'm chilling today. But yeah, I mean, it was a very interesting day yesterday to be down 140 less. I mean, any 200 plus range day is a crazy day on the desk. So yeah, I mean, much needed breather today.
So now I'm talking to you viewers for a quick moment. I'm going to turn my head here and face the camera for a minute. So you viewers out there, give the guys a little bit of slack when you're calling in there. You know what I mean? It's not their fault. Whatever's happening.
No
their
slack
fault.
necessary. It's okay. It's okay. Because we understand.
Well, I'm doing it for you as like a public service.
Yeah. No, we understand, what we're doing and what we're there for. So it's like when customers are mad about, whatever it may be, to me, it's really okay. I understand they're not mad at me. I would say a lot of our customers are actually extremely respectful, even when things are, I do say all the time, we got the best customers in the business.
You should be. You get a lot more bees with honey than you do with vinegar.
Yeah, that's true. Yeah. But I mean, a lot of people, when it's like, margin call time, they're more just like, like, how do I solve it? Not necessarily like yelling at us, like, why are you putting me in this margin call? Like they understand their risk, and what's happening. And they're just like,
besides closing, just from a high level, what's the easiest way to get out of that kind of margin risk? And forget about what they did in the beginning, trading too big for their account, obviously, if you're having a margin call.
Yeah, because we're here now.
We're here now. Who cares about what you did in the past? Let's not try to repeat that in the future, but who cares? I mean, I would say that buying some sort of option that you don't want to buy in the direction that you don't want the product to go in is probably the easiest way to keep the position on, keep the delta on without closing it. Is that fundamentally high level?
Yeah, no, I would agree. And like I was talking about that a bit on Friday as well, with like a lot of crude oil options going on. If you like have a strangle there and like it moves up insanely high, you can buy a shorter dated call, for example, right? I mean, it's going to be expensive. You're not going to want to pay it, but It will help a lot
At
with the buying
least you
power.
keep some of the delta on.
Yeah, it'll help with a lot of the buying power. You keep the delta on. You're still more susceptible to volatility decay, like with having that strangle on. But if that hedge expires, worthless. It sucks, but
it's not optimal. I get it.
Once you're at that point, like really, what is optimal? It's between rock and a hard place a lot of the time. But yeah, that's what we see most customers do typically is like buy the shorter term options in the direction where you're getting tested.
And for the future, then, if I was trying to put this trade on in a smaller account that I'm leveraging for whatever reason, I could be a multimillionaire and have a small account that I want to leverage. Doesn't have to be somebody that's undercapitalized and has a small account. It could be either way. So if you sold the longer dated option and bought the out of the money shorter dated option, that would use significantly less buying power.
Correct.
Than just putting it on, so you can keep.
And then it depends. So if it's equities, not really, but if it's futures, yeah, for sure.
Yes, I'm sorry. Right, I was talking more like an oil product.
Yeah, so like futures. Even like ES, we have customers that do that sort of like a calendarized ratio kind of play.
Yeah.
And yeah, there's nothing wrong with that. That's a fine strategy if that's what you want to do.
Awesome, man.
Buy that wing.
Buy that wing. That's
The
really
far out wing.
Yeah,
Just
man,
to remove.
It feels because I've been there. I
It
started with a
stinks.
$5,000 account. I would have to.
But then when you get a VIX at 30, you're like, oh, I'm glad that I bought that.
I'm glad I got the hedge on.
Not
you don't
only
get that a lot.
the margin
but
relief.
yes.
Yeah, the margin
Because
relief,
you're-
because then there's opportunity to do the other.
People look at the futures span margining, which is great, but it's all one of the biggest components is the volatility aspect.
Yeah.
If volatility doubles, you're going to see that position at minimum double from a margin requirement. And so if you're sitting there
At very well minimum.
at a very well minimum,
Yeah.
it's going to be more than that because
Yeah.
it's typically going against you. And if you have long delta, et cetera. If you're in a $50,000 account, you might look at an ES position and be like, oh, it's only 12,000. I could do 2 of these. And
That's
there's no problem here. You get a move against you and a pop in volatility, and that $10,000 or $12,000 a contract goes to $40,000, $50,000 a contract, and then you have to buy the wing, which is going to be 5 or 6 times
Very
as
expensive.
expensive.
Yeah.
And so if you just put the wing on to begin with, if something goes wrong, you're not in that position. Your margin goes up from $10,000 a contract to $15,000 a contract, and it's no big deal, and you can still hold the position, and you don't have to pay to hold a position that's now a no-win situation.
Sure. And, under normal circumstances, we got a war going on. Let's call it whatever you want to call it. Under normal circumstances, when volatility would pop up like it has, I would say you're not going to have to worry about this for the next year or two. Right now, things are subject to change with the blink of an eye. So keep that in mind in a smaller account.
Yeah, and then that's like what's beautiful about span margin, right? Is that you get all that leverage, but with great power comes great responsibility. You got to watch it.
Use it for good, not evil. What are you doing over there, son? Spy, Netflix?
So I had some put diagonal spreads in the SPY and in IWM. I closed out half of them yesterday. I closed the rest of them today. They were home run hedge type positions to the downside. You kind of chop around. It doesn't really move all that much. You get this big downside move like this. You make dollars on them. So I closed out of those. I closed out of the Netflix strangle. I think we did this for a what's your assumption trade. So I took like $90 or $100 out of that.
Yeah.
And I closed out of junky stock positions I have in Tilray and QS. I think we've bought those for either for earnings or something. They're like $7 stocks and they're out, $100 or so on each of those. So I just said, bye-bye.
Very nice. Good job. Good job out of you, my friend.
I'm sick of the 3-page scroll here.
Understood. I don't blame you. I don't blame you. Awesome. Let's get to your list. You want to?
Yes, sir. Let's
All right,
do
my
it.
friend.
Top 20 symbols going through the system and their IVR. At number 1, Tesla with a 5, Microsoft 36, Amazon 25, NVIDIA 14, SLV 64, Micron 78, GLD 58, IBIT 54, Netflix 28, Google 19, TQQQ 35, TLT 17, AMD 31, Palantir 20, Meta 20, DDOG 52, Spotify 27, SNDK 60, Oracle 84, and SoFi 24. Oracle finally like out of the hundreds and 90s.
It's about time, man. It's about time.
That's like my favorite one to see on the list every day is Oracle. I'm like, all right, where's the IVR now?
I'm glad you feel that way. And it has earnings after the close today. So
okay, maybe we got some trading inspiration.
Yes, and maybe even more opportunity for it to contract. But we could use a little bit of volatility contraction in there and a little bit upward delta if you have any powers that can be. If you want to talk to somebody, can you do that for me?
I'll call the market.
Beautiful. Please do.
I'll see what I can do.
Awesome. All right, my friend, I'm going to let you go. We're going to go to our next person from the trade desk. How are you, Glenn?
This guy.
What's going on?
You're on fire today, Tony.
I don't know about that.
No, you are.
Feeling good, though.
That's good. You're
He's
wheeling
good.
and dealing.
Good.
Yes,
He's a good sidekick. It's good to have him along.
Good sidekick?
Yeah. I'm just kidding. You're the show dog.
I'm not a show dog.
The thing with the bees and the honey and the vinegar.
Mm-hmm.
Like that?
No, that's good.
Yeah, it's old
Wisdom.
school.
Yeah.
Wisdom.
Even the S&P's up 10, though.
There you
That's
go.
a good 35-point move as foretold.
As
God,
foretold.
you're amazing.
Yes.
How does Daddy do it?
Not well most days, but I try. Volatility in by 71 cents, 22.86, about as low as it's been, as the even the S&Ps are 20 handles off of their highs. So maybe you got a little bit of room here. So keep an eye on volatility, more room to the upside. We'll see. My man Glenn, let's talk about FX and you, my friend.
Let's try. Yeah. Because got me,
My son over there can use a little help in some of his FX.
Oh, no,
he's rolling.
Are you rolling now? You're back?
No, I got the euro pound. I got about $40 out of that. He still owes me about $600 from the Aussie dollar, US dollar.
Ooh.
I knew he owed you something.
We're a little bit, I'm coming to collect.
So you got out of that euro pound?
Yeah, I did. Is it
still going?
Is it still going?
No, it's still going.
It's still going?
And the yen caught a bid?
A little bit, yeah.
From its all-time lows,
Exactly
or flirting
right.
with its all-time lows again. I think around the third or fourth time it's been there this year.
Yeah, right there around, if you're looking at the spot market, right around 158. You're exactly right that this year alone, that is the third time we've stressed it for 1 or 2 days and shaken back out of it. Not to any sort of major degree, still sitting above 157.5. So still some potential room to run there, but you're getting the same story across the board, whether it makes sense or not. To me, it doesn't, but we've had a gap lower over the weekend, or a gap higher for the
You're falling
US
into
dollar.
the trap, like making sense.
Yeah, no, that's, I think,
You
out
don't
the window.
think, and, nobody knows anything.
Yep.
A great man once said that.
And it's not, it might not even be worth trying, just hit and buy and sell as fast as possible. No, but we did see, of course, mapping the story that's affecting all markets seemingly in tandem right now. But we're getting a pretty big reprieve from U.S. dollar strength over the past yesterday and continuing today. Zooming in very tightly, this U.S. session we've seen come back a little bit. But not anything that would match any of the headlines you've seen today regarding the continuing conflict in Iran. Markets gravitating, as they did in oil, to the signal from President Trump that this should be over soon. We'll see if there is a potential taco trade in that. You can look. The nice part about
it is Tuesday.
It is Tuesday.
Taco Tuesday. Yep, we got Flacco's.
But a taco trade might be just the opposite because he said it yesterday, and maybe today.
Front running. He's front running.
Front running.
Yes.
I mean, I think it's wishful thinking. I mean, I hope, and pray that it's true. But
the nice part is, if you are looking at U.S. dollar markets, you don't really have to look further than the euro dollar here for either side, whatever direction you want to get. Now we're sitting up above 116. So if you're mapping that this conflict should shake out, you still have 150 pips to the upside to get back to where we were before the onset of this conflict, around 118, or if you're fading just the past day and a half's worth of price action, that's still over 100 pips back to the downside under 116. So, if you got have conviction,
100 in either direction is what you're saying?
So if you have conviction, there is narrative to support, a pretty big move, risk reward potentially for either direction. Another super interesting market that you're already.
We just bought that euro with one click.
Nice. Booyah, remembers your position size and everything.
It knows how
like
small and puny I am.
Yeah, it remembers that you're a pea shooter.
Whoa, hey.
You're not gonna like this, but a market you're already pinned in, Australian dollar, now back at its highs in rarefied air above 71 cents.
Yes, hurts very much.
But that's similar to this dollar yen we talked about. We've tried it a couple times. So what you are seeing is a lot more conviction in speculative positions here. We had positive consumer sentiment in Australia last night.
Some of the metals probably influencing that too.
Yeah, so a lot more people, it seems like, not willing to let this go, regardless of the geopolitical risk, but also one that's moved 2%, over 2% in the past 2 days here to the upside. So if you're playing the range, that could look really attractive on any sort of jolt back in risk sentiment. Potentially a lot of room to fall there. Otherwise, if we break through this level and sentiment kind of clears out of the way, the fundamental picture for Australia looking pretty strong.
I was going to look at this with the future segment because the euro is kind of at sort of a recent extreme to the downside, I would say.
Exactly. Of the last, euro was 120, 119. If you want to throw out the high, it's throw out the lows, it's 116 and a half. I mean,
on the lower end.
The lower end.
Aussie dollar at an extreme.
Yep.
What about that as a pair? Because that chart and I can pull this up.
I'm glad you called it out because you're absolutely right. When you have sort of this thesis in the back of your mind and you're thinking, euro, is it all that strong? And it's tough to see sometimes when you're looking at just US dollar markets because of the US dollar's status in the world. That can be such a strong driver for a lot of this price action. And you can look directly to some of these cross-currency pairs like Euro British Pound, which has gotten beat up recently.
Yeah, we just
like Euro Australian dollar, which is at highs dating back to 2024 now, to confirm that thesis that the euro is getting banged up regardless of any chop in the euro dollar market specifically. If you're trading ranges there, you could look to that euro pound, which is getting near recent lows, and that.
It's reversed, so I could do that too. Oh God!
That euro Australian dollar.
Oh God! Yeah, we'll do a little small one here.
Australia looking like a strong.
I did the euro Aussie dollar. I'm long the euro against. I just got long the euro 3 different ways.
Nice.
I don't love that. It does not make me feel good.
Seemingly uncorrelated pair to some of that your already positions in your portfolio. US dollar, Canadian dollar also looking interesting from a range perspective. Now we're back below 136 in that market, and even though we've touched that a few times, that's the low dating back to 2024 as well. Okay. And so, sorry, just got a glimpse of your position there.
Oh yeah, that one's not good either. $400 you owe me on that one.
But perhaps some reversion there if the U.S. dollar catches any bid. The risk, really, aside from the geopolitical tension. If that continues to ease, the inflation fears start to ease. We'll get a CPI reading tomorrow morning. And even though that will be, somewhat outdated because it won't price in any of this, just past week of inflation concerns, if that spikes to the upside, then that could have a more reactive potential in the dollar market than a miss to the downside, right? Because that would be perceptually discounted because of the recent oil move. But that's in the back of our minds as well, is this, growing stagflation concern given the state of the non-farm payroll from Friday not looking so good. If inflation proves sticky, that really puts the Fed in a bind. And the nice part for, I guess the Fed is that the dollar's performance in a stagflationary environment is really dependent on, or has been historically, dependent on the Fed's actions, whether they choose to cut or hold firm. So that's what we're looking at this week. A lot going on, of course, but most mapping those
with all this
oil down $10, no inflation anymore.
Yeah,
it's still $88 and change. But yes, you are correct. What did you just cover there?
I just closed another call. I had a in the money call spread 4 points wide in oil. I closed at 302 or you filled at
303.
303.
Same. Mm-hmm.
I mean, that was that you got bailed out for 25% of that value. I mean, that spread was, or you would think it would be at close to $4 just about 24 hours ago.
That's awesome. I mean, really.
Yeah, that's as good as it gets. With 7 days to go till expiration, we took a couple $100 out of the strangle, got bailed out on a bunch of the call spreads. We had jade lizards there. We scalped the calls. I closed the butterfly. This was a fun little.
I mean, when you get movement and you get volatility like this, and by the way, do you, with all the geopolitical risk that's going on, and I hate talking about it, but
sure.
Futures Forex seems to thrive on that for volatility. Did you think there was more or less volatility than you had expected in some of these currency pairs trades?
That's a great question. I would say I'm surprised by the reaction in this euro dollar. I mean, that has moved. We had a 300 pip range there in a week, and just on this.
Surprised by the magnitude of it?
Magnitude, absolutely. It like a lot of things, when you walk through it, makes a little more sense. Euro area, pretty sensitive to some of these supply shocks, potentially. And so it does start to make a little sense, but I am surprised at the magnitude because we've had, as of late, FX volatility be a little bit more compressed. That's starting to come back now, but a pretty stark reaction across the board in the U.S. dollar's favor, which we haven't seen as many multi-day moves in the U.S. dollar's favor. So, yeah, surprised, but again, this kind of environment where you haven't seen a lot of conviction in either direction, I think it behooves spot FX traders to stay as flat as possible and shorten the time frame, because you don't want to get pinned.
You don't want to get stuck in short Aussie dollar.
No,
I would not.
Short time frame, 1 minute.
That's been the strongest of the group, right?
Yeah, no.
Straight up. I just sold a strangle in crude 37 days out.
I see that. Did you ever think you were going to get a almost 60.55, right?
Short delta.
Yeah.
I
120,
sold
65.
The 65, 120. It's $15 out of the money on the put, and $60 or what? $40 out of the money on the call side, and it's 5 short deltas.
Right, and when you sell it for $458 is where you sold it for. That's $4,500, almost $4,600, $4,580.
That's a vol play. That's a skew and vol play.
That is a skew and vol play, and you'd like it to sit a little bit.
Yeah. Stay here, volatility come in.
If we go lower, you would expect volatility to come in too, a little bit.
Yeah.
If you go higher, especially quickly higher, if you just stair step higher, volatility will come in, but or not move as much. But if we zoom back up, that spread will expand. Even the S&P is up 21, Nasdaq up 124.
Should I take off this Nasdaq pair?
Why not? I mean,
so we
had a 0.5% move. Even the S&Ps are up 20. Nasdaq's up 125.
So we're gonna take like $500 out of that.
This is something we did with when we.
This is a clinic,
Greg in
Glenn,
here at
okay?
8:40.
I want you to go back and watch this entire session today. You'll learn a thing or two.
I mean, it's heavy on the future side, right? I mean, I know you sold the spread, but the spread is just like any other spread. It's not going to move as quickly. You wanted a quick move up. You had the NASDAQ pretty much down when you put on this trade.
Yeah. So we just closed that one.
Good job out of you.
Yeah.
You owe Craig more money.
Seriously. Oh, Craig owes me the money.
Good job out of you, Glenn. Great job out of you. I mean, the S&P is up 23, volatility in by 92 cents. It's a 4% move on a relatively small move on the E-mini S&P is a 23.
Unbelievable.
It really is
what
unbelievable.
A week. The start of this week has just been unbelievable.
And it's only Tuesday. We're still in the start of the week.
Yeah.
We're going to take a quick 90-second break. Thank you so much for coming in. You're always a breath of fresh air and make us feel a lot younger when you're here. So I
hey, us, don't group me in to you, brother. Okay, you are
ancient history.
That's you. Me and him are on even footing.
You, him, and Vanessa, same age. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Madrugada chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou.
And welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it has been pretty crazy on the trading floor today.
I mean, they've finally, I think, settled down a little bit. SPOOs are up 30 almost. I mean, we were on the train; they were red. It's been red and green, red and green. It's been a battle out there, and there has been quite a bit of activity. It doesn't seem like it right now, but when you are on the floor, it does kind of ebb and flow, right? There will be moments of when you see all sides of the pit kind of flaring up, and right now we seem to be in an ebb.
I know. And walking in, I was talking to some traders, and they said, yesterday was really a wild ride.
Yeah,
a wild ride down here. They seemed exhausted, and it's only Tuesday. So, but today, SPOOs are up 29, not even 0.5%, but it's been very, very loud. Some big orders going through.
There have been some big orders. And guess what? There should be, because we are in the SPX pit. So the SPX is a very, very, very big animal. So most people using this that you're going to hear are institutional or hedging, because all the smaller orders. So my order that went through today goes electronic. Your order that went through today goes electronic.
Yes.
Most of Tasty Nation's trade small, trade often will go through electronic. And it's a very
Unless you're Jack Tucker.
Unless you're Jack Tucker. It's a very transparent system. So what we hear and what we see and what we feel from being here are those bigger orders.
Yes, you're absolutely right. That's a good point. So when I sold my 2 put spreads this morning, they were filled.
No one was in the back going, buy them!
Who wants to buy this 0 DTE put spread? 2 of them.
I'm at $2. And I would have been like, buy them.
But the big institutional orders are what, or anything over, I think it's anything over 200 contracts. So that's what comes out and open outcry behind us.
Yes, that's what you can see and feel and hear are the bigger orders. And guess what those bigger orders are? Mostly hedges or shots, but this is a very liquid product.
Yes, the Mac Daddy of liquidity. All right, the big mover today, let's pop into the platform. The big mover today, down 11%.
I'll get us in the platform.
Oh, that's what I'm going to say from now on. Let's pop in the platform. Liz, hit that button.
Take us away.
Okay, crude oil down 11.5%. Now we're down to 83. Who thought 2 days ago when oil was 100 and...
Yeah, but this is very...
119.
This isn't that uncommon, though. It's not that uncommon.
No.
When this happens, when these things blip up like this, that's panic.
Right. Panic. Would you say short coverings?
short coverings.
Maybe.
I don't know. I just think it's panic. I think people are like, what is happening? Buy oil now. Buy oil.
So we had 119 yesterday, and now we're down to 84.50. So we threw on a downside broken wing butterfly yesterday, and it looks like a losing trade because we did take some risk.
Oh, I'm very happy with that trade.
But
I don't mind. I would rather, when I place an options trade, lose early than lose late. How about that?
Oh, I'm thrilled with these trades. It's weird because we could put it on at a better price today, but we've got this 70, 68. We want oil down to 68. We want oil to 68 at April expiration. So we're going to keep this trade on and just leave it here for the next 37 days.
Yes, we're gonna sit on this. I mean, we'll talk about it every day, I'm sure.
But we have 37 days to talk about our oil broken wing butterfly.
Can you take a look at natural gas? I just want to explain a couple things about natural gas. It looks like it's an $880 loser. That's a virtual impossibility. See, they're heating up. They're heating up back there.
Yeah.
But that is a virtual impossibility because that is a butterfly that we have on for free.
Looking at the board, trying to see what's going on.
There's a camera in front of mine, so I can never see it.
600 units, March 6790 put. April 5200 puts, April 5300 puts. Oh, a spread. April 5300, 5200 put spread just traded.
A lot? Because if you look at the most active, I'm looking at 40,000, 50,000. I'm going to guess that was a smaller one.
Well, that just that might not be on your on your option activity yet, the most active yet, because that just popped up on the board.
Yeah, but I doubt it was a 50,000.
Yeah, no, it wasn't. it wasn't. But up here you see it broken down. You'll see each trader's quantity.
Yeah, so
this
even if it is a 50,000 lot, you're going to see 10,000, 10,000, 10,000,
right,
10,000.
Right. So you're seeing the different traders. You're seeing 200 to this guy and 200 to this guy.
Yeah.
So. Okay, back to our natural gas position here.
I just wanted to break it down because it was something that I did while you were gone. If you look at that middle strike all the way over where it says days open, the middle strike's only been on for 7 days. TP and I widened out the butterfly, and we did it so this butterfly has 0 credit. Now we cannot win or lose on this if it stays above it.
So this is where natural gas is right now, where this green flag is, and I'm going to the butterfly. The reason why it looks like this is because it's missing the original part.
The original trade.
Yeah.
That's what I'm saying. One was in for 7 days, and that's why it looks like this. You kind of have to understand your options to know what you have here because it looks like a bigger loser than it is when we have it on for even.
For even. And if it ends up in the middle of this, 255, 265, 275, that will be worth $1,000.
Correct.
$1,000 at expiration, so we've got that $1,000 range of making money here, but that's gone on for 0 credit.
So I would argue this is a risk-free butterfly.
Yes, risk-free butterfly. Excellent. Okay. What else do we have moving today? As far as when I go into my own account, I look at anything big in the red or anything big in the green, what's moving for the day. And CL's down, we already looked at that. But Bitcoin, 7150. We're looking at 71,500 right now, right around there for Bitcoin. We've had a decent move in Bitcoin. I heard it got up to 73,000.
Oh, you're an IBIT.
Oh, I know. That's what our position is.
Yeah.
So IBIT's up, Bitcoin's up, and we have just a zebra. So we need it up. That's going to make money 1 for 1 as IBIT goes up.
That will. We have the zebra in there. I mean, I don't know. We'll manage some other things later today.
What I did notice, we usually look at closing trades when they get to be about 50% of profit. We have puts in Rivian that hit the 55% mark because all the EVs, not all, but Rivian, NIO, lots of
Tesla.
these EV companies are up today. It's a lot, but Tesla's not up that much. So we see Rivian up 7.3%. Big move in Rivian today. Look at that jump.
That is a big jump. Yeah, that was a big jump. I mean, they were in the news. That's why a lot of the major EV vehicles are, trying to campaign to get some new grids opened. And I'm not a reporter. I just literally read that.
Yeah.
On the way in on the train today.
So I'm going to close these puts. I'm going to close, and there's only 10 days to go. These are March 16 puts in Rivian. I'm going to close those puts and put new puts on in April.
We've been rolling those up, so yeah, let's close this. I mean, when we say roll is also a reestablish. If you're closing something and re-entering a new position, sometimes we'll call it a roll, but we're not. We're gonna close that and put on a new one.
Yes.
And we'll push all of our trades through after the show today.
Yes, we will. Okay, so I'm closing this March 16. I'm going to go out to April, and in April, what would we want to sell? We can sell the same 16 put.
And that's why I was gonna argue it's not a roll because you're closing one and opening it, but I don't mind continuing a Rivian position. So selling an out of the money put, especially this one, you're getting 93 cents for the 16 put. So if you put that in, and then let's go to the curve view.
Oh, so you want me to cancel the other one?
No. Yeah, just get out of the other one and get this in.
Yeah, these markets are tight. Sometimes rolling is a little bit, you get a little bit more to mid-market, but these markets are pretty tight.
Yeah.
I can probably pay 40 cents and get out of the short. We'll watch my 40 bid go up there.
There it is. There's your 40 bid.
There it is.
Come on, somebody hit it.
And I'm going to go to April and sell the 16 put in April.
Yeah. You're taking in, so if you're buying one for 40 and selling the other one, you're taking in an additional 60 cents for the same strike. And that's just kind of chipping away at the cost basis of Rivian.
Chipping away at your cost basis if you own it or you plan to own it. If not, you're just putting on a high probability trade where you're trying to make some money every month by selling Rivian puts that are out of the money and have, like this one is 35 delta, so 65% probability of ending up out of the money, meaning these puts would be profitable at expiration.
Yeah. Do it.
All right, sending it. 96 cents. So I'm trying to buy the one for
You could
40
put them in as a roll if you wanted. Now just penny the other one down.
Yeah, I'm already filled. I'm in the new April puts. I'll get out of the March puts.
What a major reversal. Look at this. SPOO's up, NASDAQ up, Russell's up, Dow's
I
up,
wouldn't call it major
bonds
reversal.
up.
I only saw SPOO's down like 15, 20.
No, I'm just talking between yesterday and today. SPOO's had a 280 point high to low range yesterday.
You want to see something crazy. I mean, did you look at the bonds yesterday?
And the bonds today are up a couple ticks. The bonds yesterday were a big move.
Okay, so taking a look. I mean, this was look at that bar.
Yep.
Look at the range. The range it had yesterday was nuts.
And that's what I'm saying when I'm looking at these markets. We're getting these big ranges. I mean, even yesterday we got a couple reversals. We went from green to red multiple times yesterday.
Right. Yesterday was a wild ride. Well,
and we've gone from green to red twice already today.
I'm telling you, walking in, I saw one trader and they just looked like they.
I saw somebody crying.
I think we're talking about the same person. I know. I think yesterday was a very busy day for them.
Yeah.
And a wild ride, and it can be emotionally tolling on them.
Oh, it is. It's a very aggressive. I shouldn't say aggressive. It's a very physical business, right? So it is emotionally and mentally taxing when you're yelling all day long.
Right. Yeah. True. You're yelling all day long. You might have some things going against you. Let's say you have, because I remember being in the pit, and orders come in and you're filling orders, and at the same time you're trying to hedge your orders. So if let's say they're selling a bunch of calls and they have to hedge it on their own, there's no magical hedge that appears in their account, so then they're hedging their orders, and let's say they don't get their hedge off, and
the next order comes in.
And the SPOOs move 50 points. So we are having these wild moves. You're trying to hedge something you just filled, and you're trying to get off your hedge, and then the SPOOs have a big move, and you didn't get your hedge off, and then that winning trade or profitable trade turns into a losing trade.
And I will say, I can almost say with certainty, and I think you're going to agree with me, that even on your best of best days, there were still trades that didn't win.
Sure,
even on the best of the best days that you've ever had in your entire life, there were still a couple that didn't go your way, right? So, and you have to kind of understand that. So it is an emotionally and physically taxing. It's a physical,
100%.
Bet there is a physical game still.
Right. Yeah. It's interesting. If you don't get your hedge off and things move so fast and you can't get filled at the price, then you wouldn't have sold the options at that price. They would have been a different price. Mm-hmm. So we've seen it all down here, but I think it was an exhausting day for them yesterday. And are they all here today? It's pretty full. It's pretty full.
Who would take a day off after yesterday? Like, you know what? I worked hard enough yesterday.
You know what? I'm so tired I can't get out of bed.
There were days like this when people didn't leave the pit.
Never.
You didn't go to the bathroom. You didn't eat. You didn't go get a glass of water. And that's when you leaned on your clerks because technically there was no food that was allowed in.
Oh,
so they had to illegally bring it to you.
Technically, there was no food allowed in.
Yeah.
I saw plenty of food on. I've seen.
Technically.
Food, drinks, lot. I've seen it all.
Yeah.
Okay, so. Anything else? So Rivian, we adjusted.
Somebody from the chat said, please look at your Disney. It is a profit. We put it on yesterday. It is. It's up 28%. And you know what? Because they brought it up in the chat, let's just close it. We can always get back into it.
Hey, they're right. 28% overnight.
Yeah.
Why wouldn't we take it? Thanks for bringing it to our attention. It's going to free up some buying power.
20% overnight. We'll gladly take that.
Get $1,000 back. Filled. We have quite a bit to do today. I pulled some pieces from the research corner.
Great.
I don't know if you're interested.
I'm always interested.
So let's take a look. I thought this was, so the week of 223 and the week of 32 down. Everything was down. Every index was down. So we're down. Now this week, what's this going to bring? Are we going to finally have a week in the green?
I don't know. I mean, especially because you look at, and we talk about this all the time. I love this segment because one of my favorite slides is coming up when it shows the SPX's expected move for the week. Because it's Tuesday, so it's showing what it was on Friday.
Right.
And a lot of times, even when you get those big days, we had huge reversals yesterday, but even you just saw it in TLT. It was huge moves, but at the end of the day.
Right, we've had some big swings, but honestly, with VIX, yesterday we saw VIX as high as 36. Now, let's guess. Let's guess.
Okay, I won't press enter.
What?
I won't press enter. I think it's 24.
24. I was going to guess 26.
Okay. It's 23.
Whoa.
23 even right now.
So with the VIX at 23, and you know what? I'm going to pop in here. If we take a look at the VIX and we see when this was made, okay, yesterday was the big day, but then on Friday, VIX was as high as 29. So when they were looking at these numbers and on Friday seeing what's the expected move for next week, they were looking at it with a VIX where it was as high as 29.
Yeah, but it was Friday really at the end of the day, so VIX could have been lower. We're not exactly sure where it was when they were looking at it. So that's one of my favorite slides that he does, and I like that we do it on Tuesday because a couple days have gone by already.
And we've had vol come in. Now look, 22.88. It's going down as we speak.
Yeah, because Spoos are keeping their wings up.
Yes,
they're up
24. Crazy what?
Do you know what's funny is you have this screen right in front of me, but my eye line, whenever you say where are the Spoos, I will instantly go like that. It's the one number I can see because everything else, all the rest of the board is kind of covered by a camera.
So when we hit 30, when we were in the 30s yesterday, it's very rare that we have consecutive days they're in the 30s in volatility in the VIX. I mean, COVID's a different story. That was a different year. But it's very rare to have so many days VIX in the 30s.
I mean, take a look at that, though. That last little blip up April 1st, we had what? It looks like maybe a week in the 30s. So just go over there. It's maybe a week, 7 days, 10 days? From April 7th through,
4,
just give me the date.
6,
2 weeks maybe.
7, 8, 9.
2 weeks.
9 days. Yeah, 9 days. You're right, 2 weeks. 10 days would be two full.
Yeah, because if you look at it, it was from April whatever to the 21st. Yeah.
Where it stayed in the 30s. And that was a big move down. We had a big move down in April.
Yeah.
2 weeks it stayed in the 30s. This time we've hit 1 day. We'll see.
Yeah, we will see. You know what I was going to say? And I got to give a huge shout out to the Tasty Trade platform because I guess I never put two and two together. They move in tandem. And you would think there would be a lag between what we see there and what we see here, and we don't.
All right, I'm going to test you. Where are they now?
Oh, which way do you want me to look?
You look at the board.
30.50, 30.25.
Yeah.
30.75. 29. They hit 29 for a second. Yeah. Now keep in mind, one eye Willie, and I can still read that.
All right, so going to the expected move, which we were just looking at the last 2 weeks, and we have here. Oh, that's the weekly performance. Here's the expected move.
Yes, this is what I was excited for.
So you take a look up or down 197.
Yesterday.
Oh, and he tells you the VIX was 29.5.
Yesterday, intraday, we had a 280-point move.
Did we really?
Yes.
It was that big?
From like
Low to high.
Low to high. Pre-market, everything. Mhm.
Oh,
I heard it. Like from nighttime, like the lowest at night.
Yeah.
Yeah.
Crazy. And now we look from now to the end of the week, and we're looking at only 100 points, 104 points. We could see that today.
That's nothing.
Yeah, I know. We'll see. It's funny. When we started rallying, we were sitting at home. We finished our show. We were sitting at our computers talking to each other. And when we started to rally, we both said, okay, like, what positions can we put on right now in case we really rally and oil falls and this happens and this happens and this happens? And we were almost in like
I didn't put anything in.
It's funny because Spoos were up 60. And I put something on. And then 5 minutes later, Spoos were only up 30. And I was like, I closed it for I'm closing this. We're not going to be up at the end of the day. And I closed it because then I lost faith. I lost faith in the rally.
Yeah. I mean, honestly, that's what we talked about this a little bit yesterday. In these market conditions, and I will still say, VIX is 22.76 right now. But with VIX, even in this high level, I love what we did in Disney. You've got to get into and out of. You almost have to be like nimble in these markets. Take your profits and get out.
I've never thought of you as being nimble.
I'm nimble.
Now, I was nimble when I rolled down this, when I in the rain, I tripped, I had the painting, didn't want to ruin the painting, and I protected the painting and rolled.
She did do a football roll with a painting in her hand.
Yeah, the painting didn't
She protected the ball as if it were a baby.
Yeah, nothing happened to the painting. All right, so expect to move 100. It's funny because today's expected move from here to the end of the day is only 20, up or down 27.
Yeah, today's move. And we're up 31 right now.
Yeah. I don't know.
So that is my favorite that he does. And you know what? It's something that we could look at on our own if we wanted to. He's not gaming the system. He's looking at where SPX is for the week next week. And we could do this, but it's written down for me, and I really appreciate it, Kai.
But you see how vol affects. Look at how vol affects the option prices. When you had a VIX at 19, the weekly expected move was 124. With the VIX at 29, the weekly expected move was 197. It went from 124 to 197. That's a big change.
Yeah, that is a big change.
All right, indices retreat to December levels. With the exception of the NASDAQ, the most major indices erased all of 2026 gains and returned to December levels.
Yeah, we did see that. We saw that last week.
Yeah.
Facts.
Next. Oh, and the 10-year yield rose. So here's an easy way if you want to watch this 10-year yield. You can just take a look and type in /10Y. So here it gives you the 10-year yield futures right here. Hold on. Go to the chart. And you can see the move that they're talking about, the rise in the yield. We had, on March 2nd, the yield was as low as 3.875, and the peak was yesterday at about 4.2. So it's a big move for something that...
Well, that if you go on yesterday's bar from up to down, that was a huge move.
Yeah.
Yeah, from high to low. Big move.
So what is there to do? If I take a look at some of these bonds that we could trade, I don't think there's a high rank.
No, there isn't.
15 rank in TLT. We've got TLT trading right around 89 and only a 15 rank.
So TLT, I mean, as much as it's been participating and a lot of eyes are on bonds, it hasn't been what we have haven't been going to because of 15 rank. We've got volatility inflated across the board and lots of other things, which gives us opportunities, but we're still trading small in these. You have to keep your size small. Right. And this is something that we look at. I like to know where the bonds are, and I love when TP's on because he's our Bondolini expert.
Oh yeah, I've got, the day I had my in-laws account up and TP was on, I've got some short puts in TLT. Yeah. Rank be damned.
Yeah.
15 rank be damned. I've got short puts in TLT. In their account, because again, his point was, if those puts get in trouble, then they're going to be then the yields are up, so they're going to be making more on the boxes.
Yeah, there you go.
I mean, TP, he's a smart guy.
Yeah.
All right, what else do we have going on here? Earnings in review. I like to look at this. It's again. 49% winners, 51% losers, about 50-50. It seems like it's usually about 50-50. When these companies come out with earnings, we're always looking at about half and half.
I mean, it has been pretty half and half. Now, what I will say is that we've had some movers that were outside the expected move.
What were the big earnings movers last week?
Marvell.
Oh, Marvell.
But so that's the one that I remember because it was in my account. But when I look at this, 50-50 just means they were up or down. It doesn't necessarily mean their expected move. They just printed green on the printed green.
Positive or negative. Yeah. And that's it for the option jive. We also have an SPX study that we'll get to, but do you want to get into Twitter first?
I do. Let's pop into Twitter.
Let me make sure I've got it up here.
And I also think the option volume, the SIBO's most active, is also a good thing to do, and you can pull that up while we're talking. There are some good tweets coming in. We do take live tweets during the show. Put the hashtag LIZJNY on there. We've also, Bob on Fire is always coming in with our potential earnings trades. Now, Bob, I love it, but a lot of times I'm not going to be trading earnings when there is implied volatility all over, unless there's something I'm dying to get into. You know what I mean? So that's a lot of times we will do this. And I'm glad we're on full screen right now. No, you can leave it if you want to. I'm glad we're on full screen right now. Because if you take a look at this, they've been active in pods all across the floor this morning. And you can see that section over there, which is right behind Jenny's shoulder, has been heating up. And you'll see them kind of go in waves. I think it is very beneficial to have the live shot to see how much action there is. It's been right now lull. But I wish they were on there when you hear the big buy 'em and the big sell 'em.
No, it does look busy though. I mean, it's full. It's full. It's crowded. Soon we'll be in summer, and it'll be, third. The guys will be on vacation.
Not if the markets stay like this.
But no, not if
You're
the
just saying if the summer doldrums
If we get to a slow, boring summer, it'll get empty down here. Not empty, but it's not going to be as crowded as it is right now.
Yeah. Unless the markets stay. Okay, let's pop into.
All right, so in Twitter, Bob, thank you for sending these. Oracle and AVAV.
I actually thought Oracle was already this morning. What was yesterday? HPE.
Yesterday we had Hewlett Packard, HPE, and then we had that like EUC or ECU or
ECU. It was yes, and we're on last call today, so we're not doing earnings right now.
Oh. Thanks for the reminder.
I say it so she can't forget.
Thanks for the reminder. Hewlett Packard didn't really move. Kohl's had earnings too, and they are up 7%. Which is, I thought they were down after earnings came out.
That's what you were telling me. You're like, Kohl's is down huge. And then every time we looked at it, they were up. That's probably right after earnings.
I thought I heard they were down about 9%, but I was just listening to something. So I didn't go on my platform at the time. Market wasn't open yet.
I'm not dying to get into Kohl's, though.
No, I'm not dying to get into Kohl's.
I'm not dying to get into Kohl's. So, Bob, thank you very much. We're going to put a little bit of a pause in this. We'll be looking at these for sure in last call today. And then if you want to go down, let's take a look at Blue Wackadoo.
Oh, happy Tuesday. IVR at 39.3. It wasn't as good as yesterday, right? I loved the getting 100 points lower and still getting decent credit on put spreads. Today wasn't the case. They were maybe 85 points lower.
So you're just not going to the expected move. You're trying to go as far as you can.
I'm trying to go as far as I can, get about $2 on $20 wide.
So as the volatility gets sucked out of that, you will be getting closer and closer to the at the monies.
Well, that's why I would have loved to, given the opportunity, we had so many days where you could go 100 points down on the open, sell a $20 wide put spread, get $2, and I kept telling myself, size up, size up, size up, size up, and I never sized up much.
Well, the hard part about sizing up.
Hard.
The hard part about sizing up, and I think you and I are so ingrained in this because we've been at Tasty for so long, that when you size up, you're saying that's the one that's going to win, and really we don't know.
But I do think research shows when vol at 30, VIX at 30,
that's true.
Then when you're getting that big vol handed to you on a silver platter, that's when it might be time to size up a little bit. But again, never more than your comfort zone. So if I'm putting these on and I'm thinking, okay, each has $1,800 in risk, how much risk do I want to take in these? I can't. I'm not a Jack Tucker. I can't.
No, that's true. I mean, it's probably because every day we say trade small, trade often.
I would have loved to do.
Yeah, but it's always
more.
It's always woulda, shoulda, coulda, because then it worked out and you're like, oh, I should have done more.
No, but we've had multiple days in a row where on the open you can go 100 points lower and get a decent credit for those put spreads. Today it was tighter, closer. If VIX keeps getting lower and lower and lower, you're going to keep getting closer and closer, where it's not going to look as good. And maybe I'll change my strategy. Maybe I'll make the put spreads a little narrower.
You're going to have to change your strategy because you're going to be right on top instead of 100 points wide for $2. You're going to be right next to it. Yeah. Okay, so Blue Wackadoo, he's got opened 2 1 lots between 12 and 16 deltas, 130 to 140 points between the shorts. So he's got the iron condor.
He was getting 200 points between the shorts a few days ago. I do remember that. 200 points between the shorts. So we went from 200 points between the shorts to 130 points between the shorts.
Not bought positions because I didn't realize. Okay. I don't know what that means.
I don't know.
But nonetheless, Blue Wackadoo is doing. Blue Wackadoo has been following. I mean, he's very Jack Tucker-esque, right?
Oh, and here comes news from Frank. 1 p.m. Treasury to sell, 58 billion in 30s.
Oh, 1 p.m. today. Now Frank gives us that time in New York time because I think he's.
Yeah.
So it's noon, high noon.
Do you know that Frank is 2 hours?
He's in Arizona, yeah.
I thought he was just 1 hour different from us.
Arizona's 2 hours.
2 hours. He's 2 hours. So this morning.
But sometimes he's in Wisconsin, so he's like a Wile E. Coyote.
No, but this morning he was teamsing. It was 6 a.m. our time, and I texted him. I said, Frank, the early bird, the first teams chat of the day. What time is it there? And it was 4 a.m. there.
Yeah.
Frank doesn't sleep.
Frank's up with the chickens. I like it.
Yeah. All right, so I pulled up the most active. We could see if there's anything big that looks interesting. You mostly see SPY, SPX, VIX.
Let's take a look. Okay, so this is what my eye line goes to. Is you've got the March 13th, which is not today because today's March 10th, which is Friday's puts. The 660, 650, 84,000 of them. Let's take a look at that.
March 13th.
Which is Friday. I got it up. I'll take a look at it when you go back in there.
Okay. Isn't that what I was that what I was reading off the
April.
Oh, it was April. So maybe it was the roll. It might have been a roll.
It could have been a roll.
660, 650.
No, this is SPY. So let's go to SPY.
Huh, that's interesting.
That's very interesting. Go to SPY, 660.
660, March 13th.
So she definitely wasn't reading it off the board because SPY isn't in this crowd. Okay, SPY. It's the March 13th. So that's Friday, right? Fridays.
I'm going to pull up volume.
Ooh, is it Friday the 13th then?
Yes.
Dun, dun, dun. Okay.
Didn't we have one last month? I feel like we just had a Friday the 13th. Where's my volume?
Well, today's the 10th. Yeah.
650.
660.
And I don't know if they bought them or sold them, but
no, we don't know.
Here's the volume. 92,000, 92,000, and let me pull up open interest.
And you usually don't see those in SPY. That size, right?
You're not going to be able to tell anything.
No, you can't tell
it was closing. It was closing.
There you go.
Open interest.
Well,
because the open interest won't update till tomorrow.
So tomorrow, when we look at this, it's either going to say 233, or it's going to be 93,000 less. I bet it's closing.
I think it's a closing order.
But it's a closing order.
So closing order doesn't do us much good.
No, but it's still interesting to see somebody had that on in SPY, right? Mm-hmm. And that's kind of what we were talking about back here. When you see and feel these are the big orders. Let's take a look at the biggest in the SPX today. So here's your April orders, I think, Jenny.
Biggest in the SPX.
Go to
today.
SPX puts. I'll keep this up.
Okay.
And I'm just trying to find the April. So the SPX puts, it's April the 24th.
Got it.
Which is an odd cycle. You have 44,000 of the 5,200, 5,300 puts. Look at how far down that is. Look at that.
Here they are. That's kind of crazy. What's the price of that? 5,200, 5,300. So if you're selling it, you're collecting, $125 with $9,800 in risk. You think
somebody bought it?
You think so?
Yeah, because if you get a pop down, you're going to get out of these for $150.
I mean, if I had the choice to buy this or sell this, I would sell this.
Oh, 100%, we would. But I'm saying, like, if you get a down move, or this could be units, or it could be something they're trying to protect.
I don't know.
Because if you get a slight down move in this, if you're paying $124, you can get out of it for $150, 44,000 times.
Yeah.
So I understand what you're saying because
No,
we
but
trade
I'm just
small
thinking
trade
with the
often.
VIX as high as it's been,
Yeah.
with the VIX as high as it's been, if VIX continues to fall, this is going to get cheaper and cheaper and cheaper and cheaper until
If the VIX
yeah.
continues to rise, it's the opposite.
Yeah, if we get another big move to the downside, then they can get out of this.
Yes. So it's just kind of fascinating to look at these.
So speaking of SPX and our everyone's trades, I'm going to actually pull up a piece that we got about best comparing selling SPX on the open or waiting till 9, which we've talked about that a lot. Do we sell it on the open or wait till 9?
I have not seen this yet.
Yeah, no,
it's new to me.
Hold on, let me find it. I know I've got it in here somewhere.
Okay.
All right. Are you ready for deep dive into entry time? 8:30 versus 9.
8:30 versus 9. Now we've done studies on this with the iron condors and with just the puts.
We have, but they're breaking down, I think, comparing month to month and to see, some months are better, some months are. Is there a clear winner?
Is there a clear winner? Oh, this is months, not time?
Well, I think they're looking at it. Here, let's get
Okay.
into it. Let's get into it. Okay, here, January versus February. We observed that entering trades at 9 a.m. Central Time outperformed the 8:30 a.m. start in February. However, January to the opposite story.
Which is interesting. So we've kind of, with our Jacob, have gone through, we don't look month by month, we look at them just as a general whole instead of, breaking it down by months. And Jacob has kind of established that 9, give or take, is the time because there is a little bit of shakeout on the open.
I know, but lately, and maybe it depends on the vol, lately I've been selling mine at 8:30.
You're doing just the puts.
Right.
I think there's a big difference with an iron condor versus just the puts.
So I think
it's a massive difference because you've got both sides with the iron condor.
But I also think depending on what the market's doing, it depends. Now, you're right. With the iron condor, I think our research has shown it's
9
better
o'clock.
off waiting till about 9.
No, they're not. Like I said, our research did not break it down by month.
No.
And sometimes I don't necessarily know that you need to break it down by month, but any edge you can give yourself is good.
But again, it's kind of like any given day. If the market's up 50 points, I'm not jumping in on the open and selling my put spread. It's only been on down days where I feel
the
like
market was up today and I sold my put spread.
I mean,
The market was up 20 points.
I don't think so.
It was right on the open.
I feel like I was but I think, and again, it depends on the vol. What I've learned from this trade is it doesn't have to be you do the same thing every day, no matter what your circumstances, because VIX changes, the vol is changing, your strategy can change, the market conditions change.
Yeah.
You don't have to do the same thing every day at the same time. If you want to. Some people want to be very mechanical, but you don't have to.
No, you don't. But I did like the 9 o'clock time frame. I think it makes sense for an iron condor. Or I did like when they're aggressive put spreads. So Jenny's being very, and I'm not saying non-aggressive, but you're very conservative in your trying to go down as far as you can.
Okay.
Because the study also showed that between the 9 o'clock and 10 o'clock hour, there are more 5-minute up bars than there are 5-minute down bars.
And that's when you're getting close with the put spreads and taking a low amount of risk.
Yes.
And collecting it. Right. That's kind of a different trade.
It's a different trade, right? So there's always different sides to the coin, and everybody can come up with their parameters.
So, and this one is comparing. They said it right here: 20 delta, $20 wide iron condors.
Okay, let's see it.
Okay, so over a broader sample, entering at 8:30 and 9 produced very similar results in terms of profitability, win rate, and downside risk.
Okay, that's very similar. I would agree.
Yeah, so you're looking at median P&L, win rate, largest loss. And this is over a broader sample.
Okay, but it doesn't say what the broader sample is. Despite the different outcomes in January and February, the long-term performance is remarkably close. Now let's examine the differences by looking at several key metrics.
Okay. All right, so looking at profit target hit rates, both approaches have almost identical results at around 88%.
Oh, great.
Yeah. Only about 1% of trades that could not be managed earlier eventually became profitable at expiration, which is not statistically significant. The results suggest that the chance of a losing trade recovering by holding to expiration is quite small.
Now, is this they closed it at 20%?
So let's profit target. You can see their profit target.
But what was the profit target?
It didn't say what the profit target is.
Did it say it in the beginning?
I'm going to guess 50%. It doesn't say what their profit target is.
It didn't say in the beginning?
median P&L win rate, largest loss. With a median P&L of 140, I'm going to guess 50%.
It's got to be 50%, and they're probably collecting. If you've got, what is it, 25?
Yeah, if you're doing 20 delta, $20 wide, maybe you're collecting $5.
$6. Yeah.
Okay.
It could be 20%.
We'll have to. We'll call them.
Yeah, because I think that's huge. Like, you have to make sure you're collecting enough, and I think an average P&L of 150 is pretty good. That's decent.
All right, looking at now. I mean, it's not. I know it's late in the day, but if they're doing $20 wide, 20 delta.
No, it'll just come in, so you understand that, right? Like, it won't be as far out, but it'll still be almost the same prices.
Yeah, right. So give me delta. 20 delta. 85.65. $20 wide.
195. So then they're taking about 50%.
And then 20 delta. 50.70.
Yeah, you're taking
425. So I mean, earlier in the day, say $5. I mean,
maybe, but the delta, you're just going to be farther.
I know, but I feel like these give you close to $5.
Yeah, ish, like wrapped around. I agree.
So it's got to be 50% because if they're only taking 20%, that's $80, and there's no way their like average P&L is 140. If they're taking only $80.
Yeah, that's right.
It's got to be 50%. Okay, so looking at the total number of large losses, the difference between the two approaches was only 3 occurrences. When we break these losses down by severity levels, the distribution remains very similar, indicating no meaningful difference.
Okay.
And I feel like the big difference in a study might have been a put spread study where
the 9 a.m. time frame. But I will tell you, what I don't want is this to be like, oh, well, I'm not going to do that because it's the time and I missed it. It's 8:33. And 8:30 in February is better.
8:30 or 9, it didn't matter. The results were similar.
It doesn't matter, right? Like, and I think that's been proven time and time again. I mean, you've got Jack Tucker who does sometimes at 10 o'clock. Like he does it when he's available,
well,
instead of setting his watch by it.
If we take a look at their times, because we have I'm going back to Twitter here. You'll see various times. You'll see 9, 9:30, 10. Blue Wackadoo had his on today.
6:30 a.m., which means he is at 8:30 a.m.
Oh, he did them right on the open.
He did it one right on the open and one at 6:48.
Okay. Yeah.
So that's what I was going to say is I love the studies and I love the breakdown because some people want every detail before they're willing to even enter a trade. I don't necessarily know that I need that.
And again, it's kind of like sometimes it depends on where we are. Sometimes we are on the train and we can't put the trade on at 9 a.m. and then we've got to wait till 9:15 a.m. I don't think it makes that big of a difference. And I kind of think that's what this study's saying. Like
I agree, and it was a good study by Kai. That's probably what the takeaways say.
Okay, to better understand downside risk, we analyzed the 10 worst trading days.
They look identical.
Yeah, here we go. They're the same.
Well, because if you're going to lose, if it's going to be a bad day, it's going to be a bad day if you entered it at 8:30 or you entered it at 9.
Right. I kind of think either one, entering at 8:30 or entering at 9, you're probably getting out close to the same time. I bet the exit time is not that different.
Well, and that was proven because that first 30 minutes of the day, the theta decay doesn't start yet.
Really
it's kind of a flatter curve.
So that might be the case. The distribution of trade durations are also very similar. The 8:30 start generated slightly higher P&L and better efficiency during the first hour, but the difference becomes minimal as the session progresses.
Yeah.
Yeah.
I agree.
So average time in trade, 80 minutes, 140 minutes, 135 minutes?
Yeah. That all tracks. I like it. Let's see the takeaways.
Okay, so basically, the 8:30 trade, your average time in that 8:30 trade, 140 minutes.
And your average time in the other one is 139
minutes.
Yeah.
It's
same.
Here we go again. I'm glad this is all just like reinforcing their
it is.
Their study.
Examining all trading days shows that the two approaches behave almost like mirror images of one another.
Nearly identical percentage of winning days, nearly identical percentage of losing days, a small number of sessions where one start time outperforms the other, but the percentages are almost the same. So if someone would rather wait till 9 and see how the market shakes out, there's nothing wrong with that.
I actually like that they did that because people want specifics. They want specificity, and I don't necessarily know that you get it in these. So
Right.
I appreciate them doing this study.
Okay.
Not bad.
That's it. That's it for our 2 studies today. We've got a little bit of time.
I would like to manage some things if that's okay. Let's pop into the platform.
So we did manage, and I think anything that really needed management. The only other position that could come off is Marvell
or Hood. I want to either roll Hood or manage Hood.
Okay, got it. So we have a short put in Marvell. We sold that after the pop. It was, Marvell was already up, but it was kind of like, how can we get in or make some money in Marvell if we feel like we missed the move? And it did have a big move, and it's continuing. Oh, hold on, I'm in Hood here. MRVL. Look at the move, and it keeps going. So since the move up, it's continued.
Yeah,
it's
has.
run.
So we've got 50%, almost 50% on an out of the money put with 38 days left. You've got 2 choices, in my opinion. You take it and wait for a pullback. You take it and roll it up if it's something you want to stay in, or you close it and move on.
I would say with the 23 rank, I would look at the rank. If the rank were high, if the rank were 50, I would say roll the put up.
It's not.
It's not. So now I say take it and wait for a pullback.
Sure.
I don't know. What would you say?
I mean, that makes sense because you're looking at this, and that's kind of exactly what we've said in this market. I want to be nimble. We want to get in. We want to get out. We want to bob and weave with these.
I start calling you Jack.
Because you can't say, like, I don't need this extra. We have 50% of it. When I put it on, we were looking for 50%. We're probably going to do the same thing in Robinhood. So let's close that now.
Okay. Close this. 92 cents. We're getting a lot of buying power back.
We're getting a lot of buying power back. That's good.
Then Hood, we have 1 short 70 put. We're at our 50%
This
mark.
might be a tale of 2 cities because we still have $295 left in that put.
And the Hood rank is slightly higher. I think Marvell was about 23.
23,
22,
yeah. 23.
And so 23. And Hood is 32. And remember our benchmark was like if it's over 35. We were like 35 was kind of, it's got to be over 35.
And then when we got in the doldrums, our benchmark kept going lower and lower and lower.
And it's going to, again, if the market settles down, this boost in vol that we had is going to make those ranks lower when the vol comes down everywhere.
It will.
So Hood, did we really? This had to be a roll.
No, this had to be. Let's take a look at it on the trade page. Now Hood is. I understand that it's Robinhood. I'm well aware of that, but it almost follows a little bit of the Bitcoin.
Right. It does move with the crypto. We had some big bounces when the cryptos had a bounce.
It's got a high correlation to it.
Looking at this chart, I'm okay saying let's stay in it. Let's roll it up. I don't know. They're $5 white strikes.
You'd start here.
Yeah.
But taking a look at this, would you alter your trade at all? So, okay, we've been in Hood for a little bit, and we're clearly attempting to make back money because we are still down on the year in it.
Right.
Would you alter the trade? Or would this be where you start? So we've got, the hard part is if it was somebody else's trade, it's easy. If you've got 53% of a new trade you put on, part of us would say take it off.
If we didn't have this trade on, if that position weren't there and we opened Hood and said, we feel like getting in Hood, it's trading 79, the rank is 32, we would take a look at this chart, and honestly, I would sell the 65 or 60.
So even taking it down, right?
Right.
Yeah,
which might seem weird. Or maybe we change our trade slightly to...
Can you take it out in time? What happens in May? How far out is May? I just want to see it.
I think it's...
I know.
I feel like May's too far.
And you're going through earnings.
And you're going through earnings.
I think May's too far, too. We're right at that weird spot where it's like, we could roll it out 1 week if you wanted to.
Or we could just leave it. I know we take things at 50%, but 285 is a lot.
285 is a lot. 285 is a lot. But what leads me to believe this, okay, so we were talking about how this is a Bitcoin proxy. We don't have any puts sold against our IBIT. So kind of taking this and going into another trade, I might leave that Hood. When we open it up and there's still $295 left in premium that can come out of this, and it's just 1 strike out of the money, that might have been where we would have started if we opened it up.
I'd like to say I'd high five you for a great idea, because I bid, but I don't want my hand to hurt the rest of the day. IBIT rank is 53, so I'd rather still put in IBIT. Let's close our Hood.
Especially if they're a proxy, right? So we could leave the Hood, you can do whatever, but...
we better just close.
Yeah.
It pains me, though, to close it, because we are trying to... It's funny. In Marvell, we're up money. We're not trying to dig our way out of a hole. In Hood, we're trying to dig our way out of a hole.
I know.
That's why I'm tempted to leave that.
I know. Well, let's put on premium and IBIT right now because we're taking a look at this. And we have notoriously, so IBIT, we have a Zebra, which is a 0 extrinsic back ratio, which is a true
We have to move it.
stock replacement. Okay, it's got 10 days left. We're
yeah,
going to move
that's
that
our
out
rule.
in time. And we're also going to take that out in time. And we're going to sell premium in the 10-day.
Our rule with the Zebra is once it hits 10 days till expiration, we move it out in time. We
Yes.
never want that Zebra to get less than 10 days till expiration.
Okay.
There are reasons behind that. I'm not going to go into them right now.
Those are stories for another day.
So I don't have enough. It's already 10:47. We don't have time for that right now. So I'll close the 10-day Zebra, put on a new one, sell 150 Delta, buy 270 Deltas. This is going to cost us some money.
Yeah. It's fine. This is going to pick up 1-for-1 with stock. We're still not using as much as it would if we owned IBIT, but this is going to pick up at 41, wherever we are. Perfect.
So now we have this April Zebra in IBIT. And honestly, I don't care if we sell the April 36 put just for a little extra premium.
I want to sell it in the 10-day.
I know. I'm getting tired of those jade lizards, those weekly jade lizards.
I think we can just sell puts.
Because
And then you can roll them out in time.
I want to see. I'm curious what our IBIT has. Again, we've had bullish positions on an IBIT.
But we've premium sold against it. I'll tell you what our IBIT is. I'll tell you what our year-to-date in IBIT is. You don't even have to do it. You don't want to look.
It's ugly. I know. And I think those weekly jade lizards, on top of being bullish, weren't great.
They've actually helped us a lot because a lot of them we didn't take off for a loss.
I don't know. But a lot of them we didn't take off for a big win, $20, $30, and then we had big losses.
The big losses are in the stock replacement. When you have a stock replacement and IBIT went from, where did it go from? Let me see. If you have, I can't get my...
If you want to stay in the 10-day, I'm okay doing 50 cents, like 10-day, 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 50 cents.
Yes.
But I'm kind of tired of the jade lizards because I feel like many times we're trying to make money back and it goes through the calls. And
Well, we had a problem before with capital. We don't have a problem with capital now.
Yeah.
You can actually pull it up for $1. We were looking at those jade lizards because we had this is a capital intensive trade for a $39 product. It's holding up $1,400. We will be the first one to take this off if we need the capital.
So we're just going to sell that 39 put, 91 cents, and great. Hopefully it stays out of the money. But then at least we're getting something to chip away at that cost of that 0 extrinsic back ratio that we paid for.
So when you think about it, hold on one second. As we're talking about this, I know we paid $4 for the Zebra.
To roll it.
To roll it. Okay, so let's just assume it's a $5 or $6 investment in IBIT, okay?
You can see right here, it's worth $728 right now.
There you go,
$730.
$700. So if in every 10 days we can do something to chip away at the cost of that Zebra, that's smart options trading.
Right. So when we get to 38 days, we've at least taken in maybe $250 away from that cost. That's cost basis reduction.
And I'm going to get on my little bit of a high horse here again. What I want people to realize is this isn't hard. It sounds hard what we're talking about. If we can do it, anyone can do it. It's a small learning curve to show you how to use much less capital and control 100 shares of stock.
If your 19-year-old son can do it, and my 22-year-old son can do it, and my 17-year-old daughter cannot wait to start trading, and your daughter is a few months away from, if our kids can do it, people can do this.
Look, my numbnut son discovered a mole that he's had his entire life on the back of his head yesterday. Entire life. He sent me a picture of the back of his head and said, "Whoa, what is this?" And
I said,
said,
that you've had since you were 3 years old.
No, I think since he was born. He was born with it. It got a little bit bigger, but he was born with it. And I know because every time you cut his hair, it gets inflamed. And so if he can do this.
This isn't hard, and everyone should learn it so they can have better footing and better control over their finances.
Okay,
and learn how to make money if the market continues to go down or stay volatile or doesn't just have another bull run. People should learn how to do this.
Okay, so I just
But people watching us are learning how to do this.
Let's use do we have an ETHA position?
Okay, so I'm going to sell
Ship
that
this.
put. Let me sell that put. Sell this put for 90. Look at that market, 90 at 91. We're going to get 90 cents on that put. And boy, does it make me happy to just sell a naked put in IBIT and not have to buy it.
I know. Now, just for a quick showing of this, go to ETHA because we don't have a position in it right now.
I thought we usually
This is
do.
Ethereum. We don't have anything in it right now.
Or we just took it off.
Okay, go buy 100 shares of stock, please. Sorry.
$1,174 for 100 shares of Ether.
Yes. So that's actually pretty cheap.
That's
But
not bad.
it's so $1,147. So with that, you get 100 shares of stock. Every point up for Ether, you're going to make it's 1 for 1. Now let's go and see if this zebra sets up.
Okay, so we sell a 50 delta, buy 270 deltas. It's going to be $350 to mimic 100 shares of stock. Instead of, what was it, $1,100?
$1,100 and change.
We're putting, it's a third, right? I mean, it's
usually
a third.
it's usually like a third to 40%.
Yeah, so $350 to control 100 shares of Ether if we wanted to.
And this will have the exact 1 for 1 up move to the upside with Ethereum, but it has a defined risk setup to the downside. So you can only lose 300.
This is crazy that
we're not going to put it in. I just wanted to go through it.
No,
real quick.
I'm not saying you're crazy for pulling this up. I just wanted to see. So Ether, at least it's over 2,000.
Yeah.
At least it's over 2,000.
Yeah.
That's kind of nuts.
Yeah. Yeah, it's low. But so that's why we just want to drive home the fact that using options gives you options, and it gives you leverage in a controlled environment, in my opinion, if you use them appropriately. So a lot of people tell you options are too dangerous. They're not. If you put in that zebra, your risk is $300 and some. That's it.
If someone tells you options are too dangerous, they don't understand them.
They don't understand them.
So find a different friend. Find a different friend. All right, I'm going to make sure that. Did we get to everybody?
I think so. We only have about a minute left.
Yeah, we're out of time today. Patty. Good. And Patty, my aunt's name is Patty, so every time I see you up here on Twitter, I think of my Aunt Patty.
And I love her picture. I love it, Patty Handy.
I know. Good morning, ladies. Thanks for the SPX study. Good stuff. Question, do you look at the daily chart and determining timing with indicators? So people do, we don't, but there are people that do. You can. Nothing wrong with that.
No, there's absolutely nothing wrong with that. And a lot of people, what I love is if it gives people a reason to jump in or jump out, wonderful. I'm never going to knock that.
Hey, you know, Jajun, who made the original Jajun trade, he would watch for a certain point in the morning for things to settle down or level off before he would enter his trade.
Yeah.
So everyone's got their own method, right? If you want to use Bollinger Bands or whatever,
Mac.
the Mac Daddy, whatever you want to use, go ahead.
Yeah, absolutely. I like it, Patty Handy.
All right, on that, Liz, we are out of time. Spoos are up 26. We'll see where they end the day.
Where do you think they're going to end? I like the prediction markets.
I kind of think, I feel like they're going to be unchanged. I think.
You mean unchanged, like not unchanged from here? You mean unched, like
closer
between
to
red and green.
Closer to unched or red, because I think if we were going to really rally, it would have happened already.
I'm going to go counter to you, and I'm going to say we're going to be up 47 on the close.
Okay. All right. We will see. We will see. Everybody, thanks for watching. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny's show.
See you tomorrow,
everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, madrugada chegou. Madrugada, madrugada, madrugada chegou. Madrugada, madrugada, madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou. Madrugada chegou. Madrugada. Não quero mais, não quero mais, não quero mais. Madrugada chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou.
What's up, TC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. Hi. And of course, Thomas Westwater, as it is Thomas Tuesday. And
Thomas Tuesday!
Apparently it's White Shirt Tuesday as well.
Yeah.
I like
We're in sync,
clean shave. I like it.
Yeah. It's a little different. I did it, and my toddler saw me, and he's like, "Your mustache fell off."
Where'd it go? Let's find
I'm like, "Can you help me find it?"
Yeah, that's amazing.
Yeah.
I know. I saw you from the side of profile of your earlier. I was like, "Wait, who is that guy?"
Yeah. It's been like 3 or 4 years since I haven't had it, so it's been a while. So.
That's what's so funny is like I don't see you and think like, I mean, what did you normally have? Just a mustache? Or
No, I had a pretty good
beard, right?
going.
Oh yeah, I guess you did. Yeah.
Yeah, everything.
I guess you did. But it's funny. I knew something was different. I just didn't know exactly your original facial hair configuration.
Well, the winter it's nice because you're outside. You get a little insulation, from the wind. But I don't know. I'm trying something different.
Yeah.
You've had yours on for a while. I haven't gone with one in a while.
Yeah, I will not shave this. The last time I shaved this completely was when I dressed up as Sting, the wrestling character, and I completely shaved my face, did the whole like face paint
Makeup
thing.
and everything.
But I'm not kidding you when I tell you, if I have no facial hair, I look like I'm 10 years old.
Start getting ID'd, and
it's really troubling.
Yeah, I don't like not having facial. Like I gotta have at least some version of this. I don't like how I look without it. And I don't like doing just the mustache. Like I don't think I'm a mustache kind of guy.
There's some people in this office that rock the big mustache.
Yeah, and it works for them, I think. Yeah. I can't do it. I'm not one of them.
That's fair. What a market we've had. I'm very interested to hear your thoughts, Thomas, on these futures markets. But do you guys remember when crude oil was trading at 120? Yesterday?
If I didn't see it, I wouldn't believe it.
And now it's just like, that didn't happen. We're fine. Everything's fine. Now sitting at 82. E-minis and NASDAQ rallying higher. Bitcoin rallying higher. And we actually are seeing a little bit of a vol crush here in the futures market. Yesterday, we were in pretty decent backwardation for the time being. I mean, we had like a point between all of these near-term contracts relative to the back months, but now we are sliding back into contango between the J, the K, and the M contract. I mean, it's very slight. I'll call this flat. We're still a little backwardated in the near-term contract, but I mean, definitely interesting to see the VIX pop yesterday, followed by the VIX drop. And yeah, I mean, crude oil continues to be the shock factor of the market. After the Sunday open, it was up 20%, and now we are back down to 83. Got to be the biggest rally and fall in one trading session in the history of crude oil.
It has to be.
I think it has to be.
It's an absolutely massive candle.
Yeah.
I don't understand it. I really
said
don't.
yesterday, is this a fun blowing up? I mean, I think it could be. I haven't seen anything, but I mean, like, these are the candles where it's like, this is a short covering and a fund just going berserk.
I would say, it's a good point. I would say first of all, there definitely are some people who blew up yesterday. There's no doubt about that. I don't know if this caused that, but as a result of this, definitely some people blew up.
It's definitely the geopolitical tension caused the rally, and then the rally was exacerbated through the move, through Sunday, forced closings. I can only imagine. I mean, it's the only thing that makes sense to me in terms of why we were up 20%, but then we were only up 10% yesterday, and now we're back down to like normal levels. I just not much has changed really, if you consider the tensions that are still ongoing. It's not like anything insane happened in that period of time from Sunday night to yesterday.
Yeah, I mean, that's my thing. I would love to hear what you think about this too, but that's my thing. I mean, not much has changed. And to come out and say this morning that today will be the most intense days of bombings, I mean, that I just thought that was going to raise oil prices too, and not, but I don't know.
Yeah, I mean, this is something that I think is going to take weeks to months to kind of explain just the insanity of the move.
the last estimate I saw was around like 22 million barrels per day have been, taken off the market, either through refineries being bombed, oil infrastructure, the Strait of Hormuz. I think there was 3 ships that got through yesterday. It's usually like 100, somewhere around there. There's a ton. I think it's up to like 300 ships are waiting to go through now. So, if you can't load ships, you got to start filling up your storage. If your storage fills up, you got to stop producing that oil because you have nowhere to put it. And on top of that, I think all the strike data and everything is still being assessed on how damaged some of these facilities are. So, there's going to be second order effects here that last for months, if not years. So I think we could still expect some volatility to continue, especially from the start of the year. Maybe the volatility cools down from the past week, but compared to the past few months, we're still going to be in a volatile oil environment.
I did sell an iron condor in USO today. I was like, you know what? If this is what's going to happen, if this is what we're going to watch here, this market that doesn't really make sense to me, then I'm going to pretend not to make sense, at least to some degree. I was a little nervous to sell USO before because it was moving way too much, but now, usually when you have the huge shock move and then you see the pullback, much like we've done with SLV, all starts to calm down. So I was like, what the hell? I'm going to go with an iron condor. 85 and 130 are my strikes, and $10 wide.
Yeah, the last 4 trading sessions, you've seen spikes in implied volatility in USO, followed by short collapses. So, yeah, maybe we chop around here in terms of implied volatility and collapse from here. But, yeah, USO certainly going to be helped by crude oil's backwardation, which still persists even with the sell-off that we saw. So, if we look at all these contracts lined up, we've got 85, 69, 83, 69, 80, 77, 75, 73. So you've got 2 points, 3 points, 3 points. Like, this is a pretty steep backwardation. And crude oil has been backwardated for a little bit now, but the steepening of this backwardation helps USO really rocket ship to the upside. And historically, one of the better trades I've made was back in COVID when VIX futures were like 15 points in backwardation, and I was just buying out of the money calls in VIX and VXX. Same story here. Like, when crude oil was ripping higher, if you look at the price change of some of these options in USO, like, it's absolutely astounding how expensive these got. So like USO reached a high of 125, we'll call it. If you look at the Jan 2027 125 calls, these were trading for $2,600 yesterday. And literally a week ago, these were trading for $300, $300. So when you have backwardated markets and the move continues, this is where you can really make 10x on a debit paid. It's a lot harder to do that in any other environment, but just something to call out. If you ever see it again and you're willing to take the risk and the move does continue, those can be really strong lotto ticket type trades that actually play out more often than a lotto ticket, for sure.
I completely agree. I love that you said that because these are those times. Well, yesterday was those times. I don't know if they come back, but the things when you see like the big moves, those are the times to like take a calculated shot, right? Like a risk-defined calculated shot, because that's when you could possibly get those big moves. I mean, even when silver did pull back, eventually started making moves again. I'm not saying that's what's going to happen here, but I totally wouldn't blame anybody for taking a short-term shot within the next week or so that oil does have some resurgence again. To that point of backwardation, though, remember yesterday when you pulled that up, it was like $5 difference between the front month and the second month. And now it's like, you've seen the J contract come in a whole lot, the K come in, but not nearly as much. So it's just wild to see that.
Yeah, and all this will do is, let's say crude chops here, like crude's down 9 points right now. Let's say it rallies 9 points tomorrow. USO is going to explode to the upside again because we're still in a backwardated environment. And when you have backwardation, it only helps these funds in terms of the price action staying afloat. It helps them stay afloat and rip higher in periods of strong backwardation. Even if crude oil just chops up and down, up and down, up and down, you should expect to see USO kind of outperform in that sense. But yeah, E-minis and NASDAQ tried to sell off this morning, and then the market said, no, can't do it. E-minis up 25, NASDAQ up 140. Bitcoin staying afloat here, catching a bid. Love to see it. Up 2K. ETH up about 40 points as well. Silver, though, back to the silver story. Up 6%, leading the charge here. Gold also catching a bid here, up almost 3%. And then to the downside, of course, crude oil, anything related to energy, natty gas, heating oil, gasoline futures, you name it, they're all down substantially. And then you're seeing the ags kind of take a hit as well.
Are we wasting our time trading all these equities? Should we just be trading oil, gold, and silver?
Yes. Unless you're trading Adobe, which I just wrote an earnings preview for just a few minutes ago. That's on the Tasty Live News and Insights tab. They have earnings on Thursday.
Yes, they do.
One of the few this week that have a decent implied volatility with plenty of volume and action in the options market. But
it could and should be an interesting one. I mean, the stock has rebounded, right? And again, there's all this negative news around Anthropic all of a sudden. Shouldn't that be good for these software stocks? Isn't that why they were falling?
Yeah.
Just saying.
The narrative shift was real. That's for sure. But yeah, I think Adobe it'll be very interesting to see what they say, what they report. I mean, last quarter they hit record numbers, and even still, the stock sold off aggressively. But it's rebounded from the lows.
If you notice, they're all down today, by the way. Microsoft, Intuit, Adobe, they're all down today. Remember how they were getting bought up when the market was down? I don't know what the hell is going on in this market, dude. I don't understand it. I see the trends, but they just don't make sense to me.
Yeah, I mean, IGV down today. That was one that actually kind of found some upside during the sell-off, just because it was being down so much, down 2% today. So it seems like some of the there was like a counter trend to the rotation that we saw.
Indeed. I haven't done too much in this portfolio today. I did actually close the Rivian short put we put on from Fast Market on Friday.
Mm-hmm.
That was nice. 50% winner, 85 cents. And that was nice to close, taking some risk off there. What did you do today?
I closed the SPX Butterfly, the call Butterfly that we had, 6,800, 6,850. I just closed that this morning. Just sold that USO the Iron Condor. That's pretty much it.
Love it. Thomas, I see you put something on yesterday.
Yeah, I just rolled my my copper put spread, short put spread, more duration. So I'm staying, I think I stayed at the same prices, but just giving myself more time because I like the copper trade. I think if it doesn't go up, it'll just meander sideways. I also got into a Iron Condor like you, Jamal, on crude oil between 68 and 110. And then I sold a put spread on soybeans at 1170, 1160. And, soybeans is really helped by oil prices going up so much because the biofuel component, you increase that that demand on soybeans to get all that fuel because as diesel prices get so much higher, it incentivizes you to switch to that the biofuel made from soybeans.
What is diesel made of, do you know?
It comes from crude. It's just like a heavier, like they have the stack column, and there's like on the bottom there's like asphalt or it's called bitumen or something, and then on
it's
top,
it's like less than it's less than like 75% crude, right? Like it's like something like that, right?
It's like the less filtered version of It's like a thicker.
Mm-hmm. For some reason, I have in my head from being a kid. Maybe somebody told me this, this is why you shouldn't tell kids bad things, okay? I feel like somebody told me like it has a lot more water content than regular crude or something like that. And that's why if you put it in your regular combustible engine, that's one of the reasons why like the engine will act up. But I don't even know if that's true. But obviously the makeup is different. I don't know if you guys have ever known anybody who's done this. I remember my friend's wife did this by accident. She was like 100 miles away. We had to go get her, but she put diesel accidentally in the regular car. It did not go well.
Yeah. I can't imagine that was any good for the internals of that car.
No.
I think you can't now they do it where the diesel nozzle is too big to put in a regular gas because people used to do that all the time, and then you see your exhaust smoking and you'd be like, what's going on? And then you get people calling their dad like, Dad, something is wrong with my car.
Yeah.
It's like,
it was a regular
what gas
occurrence.
did you put in?
I love that. I love that they human proofed the gas pump.
Yeah.
That's when you know. Oh, man. But yeah, markets are catching a bid today, most of them. But we do have some slides for you. We can take a look at some of these futures markets specifically. I've got the Refer a Friend program pinned to the top of the YouTube chat. If you want to join us on the YouTube channel, we're streaming live on the Tasty Live channel. Just head over to that. You'll see the chat open on the right-hand side. You can throw in your trade ideas and questions. We'll get to them shortly. What are we talking about today, Thomas?
Yeah, I got an order in for the yen, and I'm trying to do an iron condor on it. Usually when you see oil prices spike, I mean, it's not as true as people think actually anymore. When oil gets super high, the yen falls because they're importing all of that oil. And, Japan imports most things actually, so food. So the inflation expectations for America, yes, you get, it's reflected in like the long-term yield and everything. But for Japan, that's an importer versus an exporter, the impact on inflation expectations is usually a lot more drastic. So, you're taking all that yen out to buy that oil. So it usually has a little downward effect, but it's not as strong as people think. And I think since the yen is down so much already this year, that we're going to be in a good spot for it to kind of just chop around. So that's what I'm doing, This order hasn't filled yet, but I'm doing it between 63 and 65. So, it's like a 38% POP, but, the risk to reward is pretty good there. So I'm going to take a shot at that just because oil prices have shot up and the yen, it's taken a little bit of a hit, but not as much as you would really expect. And I think that's kind of like how you played IGV during the sell-off. It was already sold off so much, so it didn't take a lot of the pain. The pain was absorbed in other parts of the market. But if we go to the first chart, we'll just see, kind of the relationship of how they move.
You can pop over to the first slide.
First slide, please.
Pretty please? Pretty please?
To the slide.
We'll get there.
Yeah, I have a Japanese yen position already to the upside, so I'm interested to see what you got here.
So yeah, the orange line is yellow. The green line is Japanese yen futures. And back in 2008 financial crisis or whatever that was back there, oil it had a really big pop, then it had a really big drop. The yen continued to go up, and that was safe haven buying. We see the latest oil pop after the big drop back there in 2020, circa. The oil price did shoot up a lot, and the yen did decline. So, the last time we got a big oil shock or oil prices rose a lot, the yen did sell off. But now we're seeing this, this big spike again. And the yen is already, near its lows for the past few years, for a lot longer than that, actually. So, it's not taking as much pain as, in these previous episodes. And let's go to the second slide, and it's kind of some data on how these moves happen. So these are the orange line is anytime oil has risen 10% or more in a week. The green line is 15% or more in a week, and this is the yen's reaction to it. So the first 3 weeks, you get a little bit down. It's like 0.2%, but it really just there's not a huge reaction, and it's not until you get a really big oil shock where it's down 20%. 3 weeks after is where you get that big drop off. And there's only 8 data points going back to 1983 to run this off of, so that red line has a lot less instances of this happening in the market than the orange or green lines. So, in 3 weeks to 4 weeks, or actually 4 weeks, we can expect the yen to maybe start losing some steam. But if you're doing an iron condor and you want to hold it now to get 3 weeks out of it, I think that, the data shows that's a pretty good bet. So, there's a new government in Japan after the elections last month. It's a more fiscally stimulative party in there, and that kind of goes at odds with trying to hike rates. So it's like it puts the BOJ in a weird spot. It's like they're kind of throttling their ability to hike rates. So I mean that's why I don't think we've seen the yen stage a huge rebound yet. Is for a couple of years now, we've been expecting the BOJ to really hike aggressively. Wages have gone up at a pretty good clip. Food inflation too, just like everywhere else. And now the BOJ is kind of constrained a little bit, so a lot of upside, I'm not really seeing it. Then we get this big oil pressure on it, so that limits upside even more. But at the same time, we're already at these multi-year lows. So my goal here is to just trade that iron condor, expect prices to continue to chop around in that range between 63 and 65, hopefully. And that's my trade.
I like it. Yeah, I think both of these options expirations, actually all three of these options expirations for 6J going all the way out, 87 days, 59 days, 24 days, all three of them settle to the M contract, which is nice. So you can get some nice exposure there if you're looking for a longer term neutral trade, or the 59 days kind of on that tail end of where we would sell premium for an iron condor. I have this calendar spread, the 65 strike, long the 59 day, short the 24 day. It's up a little bit, but it's a very negligible cost. So I'm probably going to hold on to this and see if we get a little bigger of a pop here, but definitely looking to close it if we get, 50, 60, 70 bucks out of it, somewhere along those lines, which doesn't require that much of a move to the upside. But yeah, you can see it's been chopping in this range here for all of this year. Hasn't really left this channel. Hit a low of 64, we'll call it, 63, a little bit under that actually, and then 66. So yeah, nice narrow range if you're looking to trade this, and we'll see if we just keep chopping. Beautiful.
Chopping.
Chopping
broccoli.
Yeah, chopping broccoli. Silver. Have you made any adjustments in silver to your positions?
Me? No, I haven't done a thing. This is so great. I haven't touched it. The 70, 100 strangle, have not touched it. It's just humming along. And vol is still elevated to some degree, mostly from the recent move. So I'm just leaving it. But I mean, it's still elevated, but it's still coming in for us. So
yeah,
no, I have had no reason to touch it.
Yeah, I've got the 87 100. You can still see there's plenty of premium in this 100 strike, still about $300. Yes, it is close to 50%, but I'd rather lean bullish here by not rolling yet and see if we get a continuation higher. If this 87 put moves out of the money and a couple weeks pass, I'll just roll from April to May and collect even more premium. But even through all this crazy variance, and I put this strangle on literally day, on this day, and then we saw this huge massive sell-off. It's still profitable right now because we collected so much premium. So I'm gonna stay in this trade for sure. This will probably just be another year-long trade here.
It just might be.
And I don't see a reason to stop doing it. But yeah, someone in the YouTube chat asked us to review our SPX trades. So, I mean, I'm all over the place in SPX. I have a bunch of active positions on, but yesterday I closed this butterfly. So I had this 6,400, 6,500, 6,600 butterfly. I sold it for, actually, no, I had a call butterfly that I closed. It was for like $120 profit, something like that. But I have this put butterfly on now, 9 days to go. It's down about half of the value because I put it on before the big rally yesterday. But still, going to hold on to this. We've got about 200 points to the downside, 9 days to go. This will come in quickly if we do get a reversal in the market. I've got this call calendar spread that I converted to a diagonal spread. So I had the 7,300 calendar. I moved that short call up and out 50 points and out to the 45 day. So it's basically a vertical spread now, but just wanted to give myself more wiggle room for profitability in case this market continued to rally in a big way. I've got an iron condor that's just neutral. Another iron condor here that is 9 days to go. This P&L is a little wonky because I overlapped it with a butterfly.
Yeah, I got one of those too.
Yeah.
So yeah, I think maybe not the same one, but I have a similar situation as well.
Yeah,
it's all weird.
It's up like $100 because we collected like $3 for this. So I'm gonna hold on to this though because we got 120 points to the downside and endless room to the upside over 9 days, and we can keep all this value if we stay in this channel here. So gonna leave that. I've got another Iron Condor that's working out well, $120, and then I have this Super Bowl short put spread to finance a long call spread that is looking okay now. 25 points until we're out of the money here. So if we get up to like 6,900 or above, all these positions will look really good.
Mm-hmm. Yeah, I mean, I have basically left over. I got 3 Iron Condors, 2 of which are in next week March expiration. Both of them are out of the danger zone now. I mean, my downside put spread is 6,700, 6,690. And then the other is 66.75, 66.65. So obviously was feeling some heat early in the week, which feels like a year ago. And now I'm just, I thought about rolling up call spreads today, but I'm not going to do it. I'm just going to chill. If we get another move to the upside, maybe I'll think about it. But for now, both of my call spreads are, 70, 90. They start with 70, 90, and 71, 10. So way out. And then I also have an April Iron Condor. That's one I put on when we were on the floor, 6,400 to the downside. So 6,450 is my put, $10 wide, and then upside is 7,150 is the call and $10 upside. So yeah, it's just like a gang of Iron Condors I got going on.
Yeah, we just layered them on like into this crazy volatility. We've just been throwing them on, so it's been nice.
What do you call a pack of condors?
Flock, right?
Technically,
it's gotta be
a group of condors is known as a condo.
Condo?
Or simply a flock. All right. I don't know.
Condo.
Some people, only if you're in the know, maybe you call it. Yeah. Did you know that the flock of California condors is called a condo?
A lot of people think there's condors in Illinois, but they're really turkey vultures. Mm-hmm. You see the ones circling like really high, just gliding for a while, and there's like 5 or 6 of them.
Yeah. Turkey vultures, yeah. Bald ones. They're kind of bald a little bit. They're kind of bald.
I don't know. I've never seen them up close. I'm just like...
You're right.
Yeah.
They keep their distance.
Someone looking at the put diagonal in USO. Similar put diagonal that we have, the 95 July long and the 80 short April for $9. So yeah, we have the 90 June, 75 April. Even if it goes halfway in the money, are we going to get decimated from the IV crush? No. Because if it goes halfway in the money, that would mean it is at like 83. And regardless of the IV crush, I paid $7.27 for mine. It'll be trading for a small profit. Like honestly, if there's an IV crush, it doesn't matter because if it's 7 points in the money, it's going to trade for $7 or around there. So I'm not too worried about it. And this option has so much time left associated with it, 100 days, that even if there is a vol crush, it's more than likely going to happen in this near-term cycle that we're short. Like if you look at these options, the 72% in June, and then you look at these further dated cycles, that we get down to the 40s and 50s. But these near-term cycles are over 100 or at 100. So that just tells you that the near-term implied volatility is super inflated relative to the further out of the money premium. And any vol crush from here is going to greatly affect this short option, which has a 20% differential in terms of where we're short relative to being long. So even if this 93 goes down to like 60 and the long option goes from 72 to 60, you're going to get a lot more premium from your short option collapsing than the long option. So I'm not worried about it.
I forgot you had that on.
Yeah, same. Until just now. But we'll take it. We'll take it. Let's see. Oklo is green.
Isn't there a story on nuclear energy right now?
I hadn't heard it.
New nuclear plant got approved for like the first time in a while.
Good. I need SMR to be at 40. So
Isn't it interesting how all these other stories go away when something else just comes and grabs the spotlight? Yeah. You haven't heard one real thing about AI in the last 3 days.
Right.
Amazing.
We are moths to the flame.
Yeah.
That's it.
Nuclear. I haven't heard really much about that in a while.
It's crazy. Traders are eyeing CL, which is more or less in counter lockstep with the E-minis. For now, yeah. For now, that is true. You're seeing the market rally. You were seeing the market sell off because oil was exploding, and that really could only have meant one thing, and that's just more turmoil, higher prices. I don't think a lot of people realize how much crude oil permeates through everything in terms of inflating asset prices, inflating the cost of things.
Yeah.
Yeah, I mean, I always explain it to people that don't know markets, but if you know fantasy books and stuff, it's like Dune, Spice, everything in the universe depends on Spice. I think that's the parallel that Frank Herbert was drawing there.
Yeah.
Good parallel.
Yeah, there's a sweet spot, as they say, for crude oil prices, and it's not at 120. That's for sure.
No.
Are you going to do the landman thing? Is that what you're about to do?
Thank God we have Billy Bob Thornton down there.
Yeah, I'll watch that.
Oh
man.
great.
Fantastic.
Yeah, you'll love it. All right, new trade idea, long diagonal and Palantir. IV is pretty low. It's still pretty far off of the highs. Let's take a look. Palantir. Long diagonal, so bullish diagonal. So the setup is interesting because you've got an earnings report priced into the May cycle. So if you bought an option in May, let's just say the 150 right at the money, and then you sold April, you can get a good amount of premium here. And I like the way that these set up, where you can buy the option in the earnings cycle and sell the option in a cycle that's just before it, because you get the full theta decay, IV crush capability in the short option, but your long option will hold on to a lot of extrinsic value because it's in the earnings cycle. So even if Palantir sells off, you will lose a lot more value on the short call that you sold, and you'll maintain some extrinsic value in this long option because it's not going to lose a lot of implied volatility until the earnings announcement happens. So I like these setups if you're willing to take the risk, buying in the earnings cycle, selling in the cycle that's just before it. And as you can see, I've got a 20-point wide diagonal here that I paid $13 for. You could also go to a 15-point wide for $11, or even a 10-point wide for $10. I think any of these three are viable if you're buying this 150 call right at the money. Of course, you can adjust it how you see fit. But yeah, I think it's a fair setup.
I like it. I think it's great. I would do it. I already have an NVIDIA one, and while those names aren't the same, again, I am short strangle, mostly heavy short a put and MNQ, so I don't really feel the need to get too crazy. But I mean, I already got an NVIDIA diagonal. I got the Apple diagonal we put on last week. I'm good. Yep. I like that one.
Diesel has a much lower flash point and much slower burn. That's why Diesel use glow plugs and not spark plugs. I mean, yeah, Diesel does if you have a diesel car, you're getting 60, 70 miles per gallon. It's nothing to scoff at, especially if you're driving across the country.
Yeah.
Hitting that diesel.
Yeah.
Let's see. It's funny how we you never really realize the interests and specialties that a lot of people that watch the show have. There's so many people talking about crude oil and gasoline. Love to see it.
I know. I love that. Love our people.
Pump my IBIT leaps. Yeah. Yeah, we actually got into this short put after Ryan's segment yesterday. I sold this 100-day short put at the 30 strike because I have 100 shares at 65. So thought process is I have no problem taking more shares at 30, picking up a decent premium. I assume that this option won't even get touched and it'll just expire worthless, in which case I'll just keep that extra premium. But if I do get tagged on this and I take the shares, my basis will go down from 65 to 42.5. which would be great because then I can sell multiple calls against those 200 shares and get out a lot sooner for some kind of decent profit, even though this is all profitable right now because the break even here on these 100 shares is at like 30, 35 with all the premium we collected last year. Oh. SPX positions are like an 18-hole golf course with all those flags. Yep. Yep. It is pretty wild.
Yep.
There they are.
Yep.
Just wrapping around the old price. Yeah, a lot of positions there.
It's such a weird day. It's such a weird day.
Yeah. A lot of these positions are going to expire in 9 days, but if we look at the Theo risk, it says these are all losers, which is not correct. We'll have to go to expiration.
What's an expiration?
Yeah. Yeah, all these are, I think I messed it up when I was wrapping around that butterfly around my existing strikes, but either way. Crude oil, almost down 10, down to 81. Any other futures products you got your eyes on?
I'm still in, it looks like corn, a short put spread.
Yeah, those grains got bid.
It's getting beat down a little bit the past 2 days, but my position is at 425, 435, so I'm still, 13 above or 13 below, so I'm fine there. And then I am short ZN with a long put spread. We're kind of getting that retracement today, but I don't know. I don't know if this is over, So if oil prices go higher, these treasuries go lower, kind of still betting that there's enough volatility to keep us pinned down. And ZN is trading. It's trying to get above its 9 and 21 day EMAs, getting rejected right there intraday. So if we stay under there, I'll feel fine. Stay in there. I am in lean hogs. I'm long there via short put spread 93, 94. So we're at 96. I feel fine keeping that on. 36 days left. And I am long a put spread in the euro as well. 115, 115.5, 59 days out. So I'm going to keep that on too. So I'm pretty much playing for more war volatility to continue through the market. I think the market is getting a little too antsy on this ending right away, and I think Trump said the war is complete or something, but, we're still doing strikes, and it looks like, what the DOD is saying is a few more weeks at least. I don't know. I think there's still some of this war trade left in the market.
I am with you on that.
Yeah. Yeah. I think if all these other prices aside, if you just look at volatility is still backwardated. We're flat. We're above 20, decently above 20. So yeah, the volatility futures are telling us that this is not over yet. If we were to have seen the same exact move that we saw yesterday, where we were down aggressively and then we ended up like flat, up a little bit, down a little bit, whatever, and now we're up again today. If the market was pricing in that this was done and we were just going to go back to being up 30 points every day, you would see the VIX futures in the teens. You would see a 1 or 2 point contango in the VIX futures, and we're not seeing that.
Oh.
So that's why we always look at volatility futures regardless of the price action, because the vol futures, like this you would think would bring us back into the vol in the teens and everything's fine. But that's just not happening. So yeah, I totally agree with you guys. I think even though we've seen a big drop in the current VIX price, it's still elevated to levels that we were at a week ago when this thing was really kicking off. So, I mean, yeah, until the VIX drops back into the teens and VIX futures go to the teens and we go to contango, all signs point to more volatility every day, which is good for two-sided markets. But I think it's important to not react to this rally in the sense of like everything's over, we're going to 7,000 again, which is possible. We could, but the vol futures are saying not so fast.
Yeah. God, I would love that if we went to 2,000 real quick. I would definitely fade some stuff there. A lot of things there.
Yeah. Yeah, vol futures right now do not match this 2-day rally, at least for now.
And oil is still at 80 plus, so that's the other thing.
Yep. That is that other thing that we have. Can't believe that move yesterday was crazy. Still can't believe it.
Oh, I can't.
Is it too early to sell calls against my ETH A leaps? Depends on where your leaps are. But yeah, I mean, this thing is basically just tracking around the lows. So, I mean, if you have leaps that are at like 10 or 15 and you want to sell something against it above the market right now, you technically could, but I would be waiting to sell leaps or sell something against leaps like if we rip higher to 25 in a couple days. Because that's when all this premium that's currently worthless will be worth, like the 25 strike that's literally worthless right now and the 30 strike that's worthless. If you get a rip from 15 to 20 or 22 or 23, these options will be trading for way more value, and it makes a lot more sense to sell into that kind of rip than just a small rally. But it's up to you. And until vol futures change, we saw premium. Yeah.
Yes.
There's plenty of opportunity across any market you're looking at. Just got to be careful. Keep that risk in check, especially if you're doing undefined risk. But yeah, the vol pops are nice for getting into positions in like SPY or QQQ. Like these are the only times where I'm really selling undefined risk premium in these products if I'm doing it, because when you had these big sell-offs, like the sell-off we had yesterday, if you look at these options in SPY, like let's go way out of the money here. Let's go to the 600 strike. What do you think this was trading for yesterday without looking? It's trading for 277 now. 600 strike.
SPY 600 put when SPY was trading what?
When SPY was at 665 yesterday.
What month was that? Oh, April?
April.
I don't know. $10.
Yeah.
I'd say like 5 or 6.
Yeah, it's got to be over 5. Got to be over 5. Let's see. And
survey says
waiting for data. There you go.
Oh, there you go.
Yeah, got up to 7.
7.
So you split the difference.
Split the difference.
Over 5, $10, $7 yesterday. So
actual retail price?
Yeah, actual retail price is $6.99.
There you go.
So yeah, this just goes to show like that's when you get your opportunity to sell premium. When markets are seemingly tanking, when vol futures go into backwardation, these far out of the money options, this was triple the price yesterday. Yes, we did rally from the bottom, but it wasn't anything crazy.
Yeah.
It was 150 points, 200 points. If you exclude today's rally of 30 points, it's 200 points from the bottom, and you got 75% of the value of that option. That wasn't even close to being tested, even at the lows.
That's crazy.
So, and that's going to even be more true if we look at, that was the 600 we just looked at. 550 is going to be the same story. This is probably trading for like $4, something like that. The 550, data. Yeah, $3 and change, trading for $1 now. So those are the nice opportunities. And if you have the account balance to do so, like even if you get tested down there, you're probably wanting to take shares anyways, if it actually sustains.
Yeah, your point about the VIX futures is definitely a good call out, and that's the other reason on top of that I know this is not over yet is because when you look at diamonds, you look at SPYs, you look at Qs, they're all hanging out. IVRs are still in the 30s.
Yeah,
I mean, I think that's your cue. So it's not saying it can't be over in the next couple of days. It's not saying that. We're just saying that's why we don't believe it's over, because that's what volatility is telling us.
Yeah, we could see Trump on an aircraft carrier with the mission accomplished.
I know, right?
Behind him, you know.
Is this AI? Potentially.
Essentially what it was.
Well, I mean, the White House Twitter account's ripping out AI videos now. So it's like, what are we doing here? It's crazy.
Yeah.
Baba, Baidu, and JD all seeing strong rallies today.
Really now?
In the last few days.
Haven't looked at them in a while.
Yeah, I haven't traded any of these recently. How about you, Thomas?
I have not traded Baba. I traded Baba a good amount last year, and I just haven't looked at it lately. But I mean, it's kind of playing it off the 130 low here seems like a decent thing to do.
Yeah. I haven't traded these in quite some time. I personally would rather trade something that's not at the mercy of political decisions, whimsical political decisions of the government. So I haven't traded these in quite some time. But because you have that unknown factor, these products do tend to carry higher implied volatility. Even at an IV rank of 27, which is pretty low, you still have decent implied volatility, 40% in JD, 45% in BABA, 50% in Baidu. So plenty of premium there if you want to sell premium or have some kind of short premium component. But it's not something that I'm diving into at this point in time.
Yeah, you're one tweet away from just going somewhere crazy.
Yeah. But yeah, we do have some more earnings this week. Few and far between. Adobe, Thursday after the close. Again, I wrote an earnings preview that's on the tastylive News and Insights tab. I will put a link in the YouTube chat right now.
Dollar Tree and Dollar General, I don't really trade them for earnings, but they're always, well, I have definitely in the past. I used to do some call calendars in these, but they're just always interesting to hear from, just as companies, considering the regions that they serve.
Yeah. I like waiting for one and then trading the other.
Yeah.
So like Dollar General's first, Dollar Tree is the 16th before the market opens next week. So I kind of like the idea of seeing what Dollar General does and then trading Dollar Tree a similar way. It's not perfect, of course. There's still risk, but these two are very similar in terms of business models, at least.
And Williams-Sonoma couldn't be more different than the two of those companies.
Are those stores still around?
What's that, Williams-Sonoma?
Yeah.
I believe so. Yeah, I believe so.
Yeah. On the outskirts.
I don't even
Potentially.
know.
Outlet stores, maybe.
You could cobble 100 things together between those two stores, Dollar General and Dollar Tree, and equal something priced in Williams-Sonoma.
True.
Williams-Sonoma bucks.
True. Oracle today after the close. Let's check that out. Oracle, 150. Wow. Down from 300 late last year. How do we trade this?
I don't know.
14-point implied move, almost 10% of the notional, which is a big implied volatility, especially when you consider May is 30 points. So similar story in Adobe. You're getting about half of the implied volatility range in 1 week that is priced into the 66-day cycle. So plenty of implied volatility here. And if we just look at setting up like a diagonal or calendar spread, yeah, similar story. You can get a 15-point wide, 20-point wide spread here for under a debit that's under the width of the spread. If you're willing to take that risk, I'm going to hold off on this one just because it's a little expensive to get all the way out there, and I don't have a feel or an assumption on Oracle at all.
It dropped big on last earnings. It's trading 220. It dropped as low as 180.
Yep.
Close,
right here.
30 points lower.
Yeah. Similar story for Adobe. Adobe, I think December 10th was the earnings announcement right here. Yeah. Dropped initially and then rallied, but then eventually tanked. And then we had that software low here, rally, and now we're kind of just chopping around here. But today's definitely a weak day for software names. We'll see what happens.
I got enough volatility in my portfolio right now that I don't need to run to Adobe or Oracle for earnings volatility.
That's fair. Yeah, I think for Oracle, if you're trying to just play it and get some more exposure in your portfolio to the upside or downside, I kind of like just setting up a calendar spread. I mean, it's a cheap way to get exposure.
Mm-hmm.
Couple $100, reducing cost basis by 30% on that 66-day option, which is really nice. And if it goes wrong or if it chops around here, you have the ability to roll this short option into May or into April and continue to reduce basis here. You could roll into a 10-point wide diagonal spread, something like that. But yeah, or if you wanted to get into more of a long-term exposure, you could do like an upside or downside crab trade, something along those lines. You could go to the 10-day to just pick up some more premium here. It's like a 150, 165, 180, 15-point wide crab trade for $10. Something like that I think is interesting. But yeah, defined risk is definitely where I'd go in this current market state, just because anything can happen really. And we're kind of in this zone where Oracle could report good earnings, Adobe could report good earnings, but then the market's crashing anyways, and it just wipes out whatever was supposed to be meaningful for these stocks.
Yeah. No doubt.
Yep.
What are we doing with the rest of this day where crude is now trading 82 and change and the markets are moving higher? And we're still in backwardation, still are, but it's close. It's really close.
Yeah.
What do you do with a day like this?
I think you wait.
Right?
Feels like a wait.
Gold and silver just booming. Business is booming again.
Yeah. Feels like a wait and see. Crude's
I
sitting
do want to
at session
take a
lows.
stab at 82 and change. I will not lie about that. The low of the
crude?
day. Yeah, I do kind of.
Yeah, I mean this is just a wacky chart, but yeah, I don't fault you. There's still stuff going on.
There's still stuff going on.
Craziness persists.
It's like buying a put in a way.
Yeah. I feel like this, just like we were talking about how markets are waiting for continuation of the downside to really pop the vol structure, I think now markets are going to want to see continuation to the upside here to get rid of this premium price into the vol structure. So that's why I'm saying it feels like a wait and see day. But yeah, I mean, if you want to take a shot in crude or silver or gold, like those are the movers today.
Maybe.
Yeah, we'll see. But that's it for us. Thanks for tuning in. If you've got any further questions, you can always find us on the Twitter sphere. I'm at Trader Mikey B, Jamal's at Jamal Chandler, and Thomas is at FX Westwater. Yeah, we'll keep an eye on these earnings. Oracle's after the close today. Adobe is after the close on Thursday. Check out the News and Insights tab on tastylive.com. I'll put a link in the YouTube chat so you guys can check out all of the articles that we're writing. A lot of earnings previews in there, a lot of summaries from the week, what's going on with crude oil, et cetera, et cetera, et cetera, et cetera. So check that out. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year is even better because it's 3.1415. I've never before, but this year, there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Just circles are great.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Shedding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you, love you. What would love do? Love would love you. What would love me? Love would love me. Love would love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path. And if you need me, I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you. Love would love you.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got another nice rally in the market, volatility coming back in a little bit more here. So it'll be a fun 30 minutes. Let us know what you're looking at. Let us know what you're trading. We'll start getting into the weeds of things in a moment. But Brother Gus, how are we doing today?
Doing good. Yeah. Seems winter may be over. We could be rising right back to the highs. Volatility getting sucked out. Happy I got short VIX when I did. Rivian's flying, Meta is flying,
Everything's flying.
So I'm mighty content over here.
Everything's flying. It almost feels like Chicago, somewhere right around the corner. It's kind of feeling like synonymous with the market.
We got juked out yesterday though. It was so nice. You think it's springtime, and
I went out.
It's not. I wake up this morning, go to check the weather. It says 3 out of 5 tornado risk.
Yeah.
It said tornado risk.
I made sure to be outside yesterday. I went and I ran down all the way to the park, to the Bean. Just ran around, kind of explored for a little bit. So it was really nice to get out and do that.
Yeah. Good to be able to get outside before we return to our Puxatawny Phil 6 more weeks of winter before we go back to the warmth again. I'm a happy camper over here. I do have a trade idea we can open up with here.
Yeah, absolutely. You can jump over to Gus's platform right
Let's
here.
go for it. This is on Neo. Neo Automotive. They pop every now and then. They just had a really good earnings report. It's their first profitable quarter ever. They've been turning a loss this whole time, as new companies often do. No shame in that. But they have turned a profit for the first time, and the market is absolutely loving it. I think that is bullish. Don't get me wrong, but I just think that maybe you've gone a little bit too far here on a company that is still not super well established on the world stage. So I want to get short here, very short dated short. I was just looking at these before we hopped on air here. I just want to go something risk defined, short call verticals is what I'm looking at, structured around this 550 strike, which is the price that we're just below right now, currently trading at like 547. With a stock that is this cheap, I'm not really expecting some cataclysmic fall off back to the lows or anything like that. Turning a profitable quarter is a legitimately substantiated reason for an upside move. It just seems to be running out of steam at this 550 range, and I wouldn't be at all surprised to see us just have a little tiny bleed back to like the $5 range over the next week, 10 days. So I was eyeing positions here. My first thought was to go for these 3 DTEs at 6 and 550, but this is $38 of buying power for $12 in credit, so I don't really that risk profile just doesn't really do it for me. Am I like 3-to-1 risk profile sure that this thing doesn't go up again tomorrow? No, I'm not, and they're so short dated that I could easily just lose that in a day. So then I'm zooming out to the 10 days, which feels kind of like the Goldilocks situation where I think we could see some sell-off, but not, it's not so much room that I think it could sell off and then begin to recover again and burn me on the back end. We're at a 2-to-1 risk profile on these. So then I start thinking, well, what if I go for the 17 days, which is a much more tolerable risk profile at, just under 2-to-1. But it's like, we're not saving enough there. And I certainly don't want to go longer than 17 days. So all of that to explain my thesis, I'm going to target this 10-day expiration cycle, March 20th. And we're going to throw on like 5 of these. They're very cheap. 170 in buying power for 16 times 5 is 80. Just a little over 2-to-1 risk profile, but I just really don't see how this thing could leg much higher. This is like the best news they could have possibly had in this earnings call, and it just really seems to be running out of steam here. I think that this is very close to a top tick for this. It does not seem to want to push higher intraday. I would be surprised to see it open higher tomorrow. What more bullish news could you possibly have than turning the first profitable quarter in the history of your company? So I'm going to fire on these. We'll hope we get a fill. It's like I don't really want myself getting slipped
slight adjustment
too much here, but we might have to. I don't know. I'll let that eat for just a minute, and then we can we might revisit. But that's my opening thesis.
I like it. I'm curious what their float is. 93 million shares traded on the day. It seems super active. I don't know what the relative volume on that is, but good Lord, almost 100 million shares, and we got a few hours left to market open, so definitely active. Should get a feel soon.
Yeah, Jared said, I haven't seen Neo in a hot minute. Yeah, I thought the same thing when I saw this thing trending in the news today and on the fast movers list and everywhere else. I was like, Neo? I haven't thought about this in forever. I actually had to sit there and think, and the name is escaping me right now, but for a moment I thought it was, what was the company that rolled the car down the hill, rolled the truck down the hill?
Oh, yes. Yeah, that came to mind as well.
Yeah.
That was...
somebody tell us in chat.
100%. Oh, no. Yes, it's right
Nikola.
There.
Nikola.
Yes,
that's
there.
Yeah, that's what it is.
It's right there.
I initially had it confused with Nikola, and I was like, this company's back. But no. Speaking of, that company isn't still around.
Is this not a Chinese company, Neo?
Yes, Neo
okay,
is.
It is.
Yes,
is this not the company that has like a weird car, like a 3-wheel or a weird shaped car? I don't know.
I can't speak to that. Okay, I do not know.
I don't know. Well, I'll have to search them up, see what kind of vehicles they.
And also, if somebody could tell me, is Neo the same thing as Li Auto, or does Neo's founder just also happen to have the last name Li? I'm confused. Does he own both? I'm very confused. But they're like Neo is one of these like freaky, luxurious for the price point Chinese EVs that would just dismantle the U.S. EV market if we started to allow them to be sold.
Yeah.
I'm not bearish on the company in the long term. I'm just trying to play the dolphin dive here, as we like to say.
I wonder how many
I'm getting
short
slipped.
Elon has on all these EV companies outside of his own.
Yeah, that's true. He's got the he only gets paid through the tranches. Maybe he's just taking those Tesla shares and converting them straight over.
I legitimately,
you know how many short Neo shares you can get for one share of Tesla?
I legitimately wonder like what goes on behind the scenes. If I'm not mistaken, not to bring it up, but like the whole like Epstein and like Bill Gates and just hearing about whatever. Hey, we all, it's all on our front headlines. We're all aware.
How the hell does that correlate?
So with Epstein and like Bill Gates, there's a lot of like rumors about how
Oh yes, like they short the hell out of each other's companies.
Absolutely, 100%. So I think it's kind of funny. We don't know what's kind of going on behind the scenes, and with Elon being a very mischievous person sometimes, and having the largest amount of capital in this world, I know he does things for shits and giggles sometimes.
Oh,
so
for sure. And
I'm curious
the amount of short pressure you
are.
can generate when you have billions and billions of dollars is like immense. I mean,
Exactly.
You can put a legit amount.
And again,
of short pressure on stock.
Elon can literally little bro every single CEO out there.
Yeah.
So I wonder what he does just because he's in the position to do so. But anyways, funny to think about.
Yeah, Rivian catching a sentiment move alongside Neo as well.
Yeah,
always pleased to see that. It's doing the Rivian thing, guys.
Yeah.
You just gotta wait. It does this. It'll do this a couple more times, and then boom, 25. It'll happen.
It's a volatile one. I mean,
that's how Rivian operates.
They take those shareholders on a roller coaster, no doubt, for Rivian.
But yeah, looking good there. Happy to have the fill in on Neo. And yeah, that's pretty much it for me. Still got the USO shorts open. I see Jared saying, Elon, he said Elon bought Twitter as a troll. That's true.
Good point.
That is true.
Yeah.
And then, there was another company.
I mean, imagine being in that position, just scoop up one of the major
Was it
social
OpenAI?
media
There was a company that Elon put in like a ridiculously high bid on just to raise their tax burden.
Dang.
Was it OpenAI? Somebody knows.
I don't doubt if it
could tell me. But yeah, I see Jared saying 90% out of USO shorts. I still have mine on, letting this run a little bit. Just from a chart perspective, I just think that there's more downside here. I'm kind of targeting like under 95. I think would be a viable exit for me. Up like 12% on those right now. 12, 13%. Oh, I guess it's 15%. Math is hard sometimes. Yeah, and then crypto is moving a little bit for me as well. We seem to be maybe wanting to leg higher. Maybe perhaps the new ceiling is in at this 74 ballpark. Hopefully we go up and test that here. But we do seem to be out of the 70 ceiling at the very least. So, I'm pleased with that, even if it's just a tiny new level. New levels are always good. That's pretty much everything on my end. Yeah, and then these VIX shorts that I put on, I mentioned, waiting for sub 20.
What's the VIX chart looking like right now? I know we got volatility coming in a little bit more here now.
Yeah, about how you'd expect on the daily chart. I mean, it looks like we're at a low of day right now. We can get a little bit more granular with this thing. Putting in some new lows on the day on VIX, 22.55 at the moment, and seems to be sinking. The whole market seems to be taking Trump's comments on the war yesterday at face value. We are rolling with that until proven otherwise, which isn't a strategy I can say I disagree with. So yeah, moving back towards the highs on SPX, VIX dropping. And yeah, I'd like to see sub 20 on VIX. I left myself plenty of room on these contracts as far as DTE to give ourselves plenty of room to run there. I think sub 20 VIX is imminent, perhaps by the end of the week, barring something making it look like this conflict is going to reaccelerate overseas. But yeah, that's pretty much the synopsis for me. Green days are good for me, being as long delta as I am. Only thing I'm sad about is that a firm is having a good day. Just go to zero already.
Eventually.
Nobody likes you. I guess it actually isn't having a great day. Just opened higher.
Count your days, Affirm. Count your days. What's going on,
All my
big deal?
homies hate Affirm.
Yeah.
What's going on, nice boy? Big deal. Good to see everybody.
Yeah, with that being said, we can jump over here to the TradingView platform and check out kind of what had gone on today. A trailing stop would have worked wonders today, right? I mean, we cut the position, didn't really catch the meat of the move, but we got a little bit of something. We were trading above our value area high here. Market pulls into the value area high. We initially take a couple of contracts to get long. And because we didn't sweep the low from yesterday, I was a little uncertain and I didn't like the risk on it, so I took it off and then re-entered with one contract. Sold that one a little bit early, and then, we rip to the upside with no pullbacks in sight. So, what an impressive day, right? Volatility definitely expanding into the market. And this is one of those markets that you can, if you're not executing properly and without hesitation, there's going to be a lot of opportunity cost being missed. So that's one of the things with an expansion and volatility. But it's another green day. We'll log, and I like the volatility that we're experiencing. We'll see if the market can make it to this value area alone. We'll see what we get here.
Yeah, and I will die on the hill that VIX should go up on days like this. Okay, when we're ripping to the downside,
no fear.
Like yesterday, we're ripping to the downside. Everybody's short. It's clear that we're going to keep moving down, and then all of a sudden, wham! One comment, we rip 100 points on SPX in like 15 minutes, and VIX collapses. VIX shouldn't collapse. That is still volatility. I will die on this hill.
No, I completely agree.
As much as I'm happy VIX collapsed, being short VIX, but it's like.
Yeah, no, I mean, I completely agree. I mean, it just seems so. There's just no fear in the market, especially whenever we get any type of bid. And I will even say the sell-offs that we got over the last weekends with rumors of war. I mean, legitimate missiles flying in the world, and I mean, we got a VIX up to 33, a measly 33. So, it's almost scary at the same time because if it's like if that can't spook the market, it's like what will? So it's like, do we really need something treacherous to happen to see like a 40 VIX again or whatever it might be? So it's going to be interesting. But I mean, I am loving the volatility though. I mean, the intraday ranges that we're getting. Good Lord, I haven't seen this in a while. I don't think I've seen this type of volatility since the year started. So I think this week getting into being used to this expansion of volatility, it'll help ease into the new normal in terms of volatility. So we'll see what we get.
Yeah, I'm a fan. This is the type of volatility we expect from the Trump administration. We saw it all through the 2020 or my years, correct? We saw it all through the 2016 admin. Now we're beginning to see it again in the 2024 admin. It's volatility, but it's also aggressive to the upside. To go along with the volatility. So that's sort of how I've always tried to position myself: is long bias, but ready for those volatility swings. And it's and really, quite frankly, we're just back into this 68.50 cycle that SPX loves so much at the moment. We obviously have yet to log higher highs, but they could be coming.
100%.
Big Deal said Hims is a firm. Dang, bad joke I made. Hims is a firm. Trying to see if there's a connection that I'm missing there. I suppose they are sort of similar companies. People always need debt, and on the other side, people always need weight loss drugs. People always want to regrow their hair. People always need boners.
Government needs debt.
Yeah, debt is a fundamental part of American society at this point, as are weight loss drugs and boner pills, I suppose.
Yesterday, after all the FOMO, we didn't get any opportunities yesterday in the afternoon session for any short side opportunity. Clearly, we're at higher highs today. But we took a few more trades down here at the value area low. So I know yesterday we were looking at the market and we were recognizing how we missed out on most of the opportunity. To the upside and to the downside, we weren't able to catch most of the meat of the move. And then down here near this value area low, we started getting a little bit more opportunity. So that's really a testament. Sometimes, even if we miss a move that we're waiting for, that we're looking for, that we're being patient for, sometimes the afternoon session or the next morning session will give you a little bit of a surprise in terms of opportunity sometimes. So being a little bit patient into the end of the day allowed us to be able to at least execute on this one over here. So with that being said, we'll continue to be patient and see what kind of opportunity we get into this afternoon session for NASDAQ.
Big Deal said because he's a firm.
Yeah.
Because Hims makes you firm.
Oh, that's good.
Yeah.
There we go.
Yeah.
There we go.
I see.
There we go.
Nice boy. I bought 5x VIX 27 yesterday. Looking like a waste of money at the money. Oops. Considered closing at minus 50%, but now might just keep as an insurance. Yeah, I often implement that strategy. Nice boy. If things run away too far and it starts to get to the point of like, oh well, what's even I mean, obviously it's all relative to your portfolio size and everything. I assume this isn't a 50% port YOLO you're talking about here, in which case exiting at 50% would still be worthwhile. But if it's a relatively small position based on the size of your portfolio, I don't think it would hurt anything to keep it as an insurance. Yeah, as you said. Still got 7 days. Anything can happen right now. Absolutely, yes. In this environment, anything can happen.
I mean, literally.
Yeah. No reason to necessarily exit those just yet.
I feel with the headlines yesterday, especially when it came down to oil and Trump coming out, I mean, that was such a testament to the randomness of the market. So absolutely anything can happen.
Yeah.
Big Deal. I forget the question that you had asked earlier. You asked if we could go over it today at noon. Was it from yesterday or was it from the price action from today? If you could quickly remind me, but I know you asked earlier today.
See what else
Silver is recovering just a little bit more. I know the SLV position is finally playing out. I know it's a premium position. It was going to be really difficult to time those with the futures products, but kind of happy with how some of the metals are playing out. I mean, the theta's at least cooking on some of those positions. So since we haven't had such a directional move, at least we get theta in our pocket. It's finally dripping in there. Same thing with gold over here. We can check out some of the gold futures. We'll go ahead and check out some of the crypto. Was it yesterday? I got you. We'll pull that back up here in a quick moment. But yeah, what's up?
Yeah, SLV just can't quite get into my range here. I appreciate the slight consolidation that we're seeing. It's just like chart action wise, I still feel good, but these metals are just so scary to be short. I've lost a lot shorting silver. Pretty much made it all back when we finally got the big dip in, and I had all those naked puts on, so that worked out. But it's sketchy.
It most definitely can be. I mean, it still seems like gold is holding a little bit more volatility than silver over here. It's looking like gold is making some higher highs. Was it 2 p.m. big deal? We can go ahead and check that out real quick before we shift gears to some crypto. MNQ. I'm like, wait, what were we trading? MNQ. Let's see. Yesterday, was it near highs? You said 2 p.m. Are you out here in Chicago, big deal? Central time?
Yeah, time zones do become a question there.
Yeah, 2 p.m. So 2 p.m. is going to be, so we got 12:31. We got 2:14 right here. Oh, this is right before the announcement. Good Lord. Oh my gosh. Imagine having some long positions in here. Just an absolute surprise. That'd be awesome, wouldn't it? I'm not going to lie. I was even a little bit surprised on how the market behaved over here. If I can find this marker. Kind of just how the market behaved over here. We started to pick up a lot of momentum into the market. And I think maybe Trump was starting to speak around this time. And then this is when things really let loose to the upside. So this is also another testament. I mean, if you have a short look, I know a lot don't advocate for a stop loss. A lot of people are against a stop loss, but this is my testament to why a hard stop, in my opinion, is so necessary. Because, I mean, there can be just one trade that blows you out the water. Not only does it affect your account, but it absolutely affects your psychology. So with things like this, especially under the administration that we're in, I don't know. I'm always advocate for a hard stop.
Yeah, I mean these are 15-second candles.
These are 15-second candles.
I mean,
right?
it would have been hard if you were in a short position here and did not have a hard stop loss on. I mean, it would have been hard to even get a fill until we start to see some consolidation at the top there. But I mean, this is like, 60, 70 points in.
That was one of the most insane.
A minute and a half. Yeah, no, it was insane. I was sitting out there and Nick and I were both just like, what's going on? what is happening right now? We're just ripping through.
It's all right. We got Tim Knight. Tim Knight's our Jim Cramer. I'm just playing Tim Knight. I'm just playing. No, I mean, just the absolute. I mean, who would have expected that? But no, I mean, even
that's a good point though. He had stops, which
absolutely,
which saved him right there.
Absolutely. But no, I mean, even in these ranges, like we're starting to see volatility expand a little bit more, and it's really not forgiving. Even when you take multiple paper cuts on multiple contracts or on a size that you're not sizing correctly. Even over here, this is a pretty small range for us to trade in, relative to the other ranges that we have. And I mean, this entire range is booking over 50, 60, 70 points in that really small range, very small time window. So volatility is expanding, and we don't want to have to learn our lesson to the downside if we don't have to. But 2 p.m., let's go back to that real quick big deal. I know you were talking about right before, I think, the rip. I mean, we didn't come down here to test the value area low. I think you were talking about order flow. I forget. No, yeah, I mean,
obviously.
If you're somebody,
there was no way to predict that at all.
If you're somebody that is sitting in front of the charts and you create content or something like that, it's going to happen to you at some point.
Your surface area is so big.
It's so big. You're literally on live talking about your trades 24/7. So, I mean, I think it was Friday. I bought a put on USO on Friday. What do we get that night? We're going to war, and we see one of the largest moves oil puts in a single day. So I'm just teasing, but I literally did that on Friday when it came down to oil. So I wish I could have had some stops on that options contract.
USO absolutely cratering right now, by the way. It's just fallen from 102 to now testing 95 in the last 30 minutes, down another $3 since we've hopped on air. I just noticed it all of a sudden go shooting to the top of my portfolio. 95 is sort of the price that I'm hunting here. So if we get that, I will go ahead and get out. It's just insane action. Now it's back over 96. We're just doing 50-cent moves in a second here.
Is that some oil? I'd look at some oil over here.
Yeah. Oh, yeah. Just USO would work too.
Oh, my word.
Yeah.
Zoom out a little bit here. Let's go to the 1 minute.
I catch a little tiny bounce now, but I don't know what just happened to make it fall.
Yeah, and I mean, to that point, right, Tim Knight is probably one of the smartest people that has been on this network. But this is where I got to lean on where Tom's perspective, where honestly, I don't know. I think it comes down to discipline, right? Tim Knight has a lot of discipline, and I think that discipline is really what sets him apart. And I think it's all that experience, especially through all this time, to be able to even, consistently put those things in the market after all that time in the market is really a testament to be able to stick to your system.
Yeah, and Jared, to your point, that's why I got at 90%. I'll take that money and run with one runner on there. Yeah, absolutely. That's the way to do it if you have multiple. I just only have one.
Yeah.
So
if you're still in the trading game,
yeah,
after 10 years, after 20 years, like you're doing something right.
Oh,
I
yes.
haven't been alive that long. So.
Yes.
I mean, shout out to Jesse Livermore. I mean, he went down as one of the most greatest traders ever, and at the tail end of his career, I mean, it ended horribly. So,
you can
it
crash
forces
and
you
burn.
to show up every single day, so. But yeah, oil down here at its lows, Gus. How we feeling, brother?
Feeling good.
Yeah,
just sitting here
at its lows as we speak.
Yeah, watching these numbers move. Oh, well, there's 95 right there. Cookies. Get me out. Holy cow. Get me out.
There we go. Look, we got another leg down.
Yeah. I'm out.
Easy. A nice fill at the lows.
Yeah. Oh, yeah. Big time. Maybe should have held longer, but not going to get FOMO. That was a really good trade. I'm pleased with that. That was in, let's see, in 430, out 590. So, yeah, 160 on 430 in 2 days. I'll take that every day of the week as it just dies. Holy cow, what is going on?
Absolutely cratering. What is the
1 minute? What's happening?
What is NASDAQ doing right now? Is it ripping? Exactly. To stay profitable as permabear, that takes skill, 100%. And once again, to be in the market that long in your career is second to none. Like, I know a lot of us probably aren't or haven't been in the market as long as some of these guys over here on the desk have been. But legitimately, to stay in the game that long, it really is a testament to them being able to stay true to their process for that long, because you have your discipline slip up, you can end your career for real. So.
I see Neo breaking the news here. U.S. Energy Secretary Wright, the U.S. escorted an oil tanker through the Strait of Hormuz. So we're just believing that they're not going to be able to contain the Strait of Hormuz at this point. Well, yeah, I will take it. Kind of moving back towards 95 now. So yeah, mighty pleased with the exit I just got. That was like 94.70 spot. So
beautiful.
Yeah, whether that's low of day or not, I don't care. I will take that premium every day.
What a nice. I mean, I don't know what nice volatility we're getting in many different sectors. Who knew we would have been talking about crypto? We would have been talking about the indices. We would have been talking about the metals. Now we're getting a lot of action in oil in such a short time frame.
Yeah, crypto seems to be pushing a little bit higher against this as well.
Yeah, pretty resilient right now.
And I just see my IBIT is jumping up a little bit. Yeah, 71.5 now, up from 71.3 is what we were looking at earlier. Glorious.
Beautiful. We got some eyes up here, so I guess we'll watch. I don't know who put those there.
I never even, you don't even put all these on air. Sometimes you just pull up charts and there's and you got.
No, I put this one on air yesterday. I think.
Oh yeah.
I just slipped on there.
Yeah, I don't remember that. They're looking the wrong way. They're looking back. We need eyeballs that look right. Oh yeah, can we do a flip?
Oh,
yeah.
Did you see that?
There we go. Oh.
What's going on over here?
We have fun on the show. U.S. tanker or Greek? Doubt it could have been anyone else. So I bet Greek.
Go ahead and quantify that for us, Jared. Quantify the market rallying during our show. U.S. tanker or Greek? Oh, I see.
My board always moves when Gus and Errol are on.
I see. No,
yeah, we usually make the call before we hop on. Friends in high places, you know.
Somewhere up there. Somewhere up there. No, but with that being said, we are running out of time here. Anything else top of mind before we hop for the day?
Yeah, no, nothing else. Happy to be out of that oil. I hope the vol crush continues. This Neo trade is interesting. That's a little bit more short-term speculative than I generally like to attack things, but I just really think the top is in. So we'll see what comes of it.
Yeah, we're trading at our value area low. We're getting a little bit of reaction over here, so try to manage the position best as possible. You kind of see that wick reacting off of it. But too bad we got to hop off, guys. So, if we're getting stopped out or managing the trade, we'll see what we do when we roll back around here tomorrow.
Yeah, absolutely.
Cool.
Imagine the gaming channel if they're like this here. Well, yeah, if you just took all the rules away, we'd be totally different people.
This isn't a gaming channel. Trading feels like a game sometimes. I thought this was gaming.
I'm gonna bring a Nintendo DS in here. Yeah. And
this is the best game of all time.
I'll sit here and commentate my Mario Kart as we trade.
But no, with that being said, we got some stops in at the highs as well. We'll see what we get. Reposition if we need to, but if we don't accept inside this level of value, take some shorts and be patient with it. Nice boy, big deal, Jared. Grumpy Mike, Hanai, everybody else, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We will catch you guys next time. Peace.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was not a paid, you're not getting paid
Right.
for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Love will love you. Love will love me. Love will love me. Love will love you. Love you. Love will love you. Love you. Love you. Love will love you. Love will love you. Love will love you. Love you. Love will love you. Love you. Love will love you. Love you. Love will love me. Love will love me.
We are back. It is Tuesday, March 10th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Jamal Chandler. And Jamal, there was ever a time to have a futures show, it might be after oil had a 7 handle on it again.
This is the best time for the future show, man. Are you serious right now? There's so many different things that are going on that futures can help you solve.
Apparently, Jamal, the war is over, as we've come to learn from the price of oil today, trading down to a 77 figure here just a few moments ago. The move in oil for the past hour has been fast and furious, to say the least. I don't really know if I had another word there or phrase to use, because that's the only thing I can be thinking about right now is how quick this return has been. And it's on the back of a fairly significant headline. This morning, there were rumors, and we talked about this in the daily, there were 36 tankers trying to make their way through the Strait of Hormuz. However, it now seems that the U.S. Navy has begun escorting those tankers, which, if you've been following the contours of this fight, Jamal, the U.S. Navy wasn't doing that previously because it was too dangerous. So perhaps there is a turn here. It's driving the market. Stocks are up. Bonds are up a little bit. Gold, silver are back to the upside. Copper's up. Growth things are leading the way. The Russell is surging. Got to say, I didn't have it on my bingo card on Sunday night with 119.48 as the high that we'd be looking at $77 today, but here we are.
No, of course not. Not at all. And as we always been saying since this whole thing started, oil, the price of oil was your VIX. It was your clue to follow everything that was going to happen in markets, and that's exactly what's happened. I'm still confused, Chris. I really am. I'm just confused that it came down so fast, honestly. It's not like I want oil to stay high. It's not like I want there to be conflict. It's just the whole thing is a little confusing to see such a massive contract like oil move so quickly. It's astonishing.
It's astonishing, and it's moving the entire market. It's moving the market so much that we're seeing a knock-on effect into a place that we haven't looked at in a little while, because what was the point? But CME FedWatch odds here, that's still a 75% chance for a July cut. The June cut was pushed back. It's trading less than 50-50 right now. But the shift from yesterday to today, that's what I care about most. Jamal, the odds of a July rate cut are up from 66% at yesterday's lows to 75% today. The odds of a June rate cut up from about 40% to 47% right now. So the market isn't just looking at oil, it's extrapolating another of other knock-on effects from what oil prices being constrained and not running up to $110, $120, $130 a barrel may mean for inflation. This could just be a short-term hiccup and really nothing more than that. And in turn, the Fed might not have a reason to say no to cuts in the first half of this year, especially in the context of some of that jobs data we've seen recently. So early days still yet to say that a June cut's back as the central tendency, but the shift is real and oil is the driver.
Yeah, that's it. I mean, the shift is real, and clearly oil is the driver. It's driving everything right now. I mean, it drove these rate cuts, chances out the window to now it's possible again. But like you said, it's early days. I don't even know if this is something we're going to have to revisit by the end of the week, right? I mean, things are just changing that fast as we watch the price of oil move around. This is absolutely crazy, Chris. And as you would expect, we're seeing a big change here in rate expectations too, which was one of the bigger things, the bigger, scarier things that happened from Friday to Monday when you watched how that 10-year yield was below 4% and it went up to almost 4.2. So, I mean, this is just a developing situation.
We're going to have to keep an eye on it because another headline just hit. A Ghana-flagged tanker also successfully transited the Strait of Hormuz, according to CNBC. So if we're looking for a driver for these oil moves right now, the spice has started to flow again here, Jamal. Oil is back to 80, and we're starting there before we get over to the equity market, because there was a point this morning, in fact, where we were trading still 8:30 this morning, right around $90 a barrel. So we had come in from yesterday still somewhat. But the news flow here with the idea that it's now safe for the Navy to help escort ships through the straits, the traffic is starting to pick back up. It's still early days. We were looking at, 60, 70, maybe 80 ships at the high end for transiting the strait in any given day from west to east, those ships leaving the Gulf area. We've only been around 3, 4, 5, but if we start to get into a double-digit territory again, you could see the market running ahead and saying, okay, this thing is over. This problem is solved. Oil vol 93.2. So it's a day in which we don't have another push into like a 120 or 130 IVR. And I think that sets the stage for this stock market recovery that we're seeing play out today with an S&P at 6830 here, really taking a leg up over the past hour or two, and oil prices have come in. Jamal, is the worst over? Are you ready to go full bore, or is this a good opportunity for traders to perhaps sell some upside here?
That's the hard part. The idea of those, I think those are two different questions in a way, because am I ready to go full bore? Certainly not. I mean, by the way, I'm already kind of long. I already kind of have been heading into this thing. The idea of selling upside here, I don't know if I want to do that because of the velocity that we've seen the markets move up, the velocity we've seen oil move down. Obviously, those things are tied together. Makes me wonder if we're going to go above 68.50, right? We're still in that channel. I mean, let's just set that expectation, first of all. 6,800 to 7,000 has been the channel that we've been in for the better part of 3 months. As far as futures go, we haven't even touched 68.50. So I'm curious about that. I think if we were to get to there, I think that's the area that I would choose to probably start looking to sell some upside, particularly if you have some longs. I think that's a good area because we've struggled with that area. So I would wait for that, honestly, until that point. I mean, the way the crude is continuing to drop, the way that markets are continuing to find it positive, I would say I would wait for that at this point.
Well, getting a nice little bounce here. Maybe stocks running into a little bit of a headwind. The Energy Secretary, Chris Wright, just deleted his tweet saying that the U.S. Navy successfully escorted a tanker through the Strait of Hormuz. One of those days, Jamal.
I mean, it's
got to be one of those days.
It's become real headline driven at this point, right? Starting with yesterday from the president, and then again, even this morning. I mean, oil was ticking back up. We were hearing this was going to be the worst of the strikes, and then we just got the news, as you mentioned, in the last 25 minutes or so, where that has released the pressure of oil, which led to markets going higher. But now we see another pullback. I think that's just the window that we're going to be in. So it's going to be a little volatile. That, at the very least, I think I expected. I mean, given that volatility futures are still kind of elevated, where it's backwardation-ish, meaning I say that because we're backwardated in the front 2 months, but not so much in month 2 to month 3. So I don't know, Chris. This is real no man's territory right now, and I think you have to trade it as such.
It is, and it's still not exactly the place. I mean, when VIX or volatility futures are up above 20, it's not exactly the best place to lay out simple long S&P 500 position, right? You don't want to just go long delta, still being somewhat directionally neutral and looking to sell the vol. Historically has been a way to express the view that the market's going to rally perhaps, but we're going to see vol compress along the way.
Yeah.
To that point, recent trading range that we've had going back over the past, we'll call it 6 months here now. The lows that we touched earlier this week, the highs that we had back in January, once again, we find ourselves trading near that midpoint. So I have not been taking on directional beta here, Jamal. I've been, I still have an MES position on that I've just been riding. But as we've made our moves lower to the downside and vols expanded, I've been selling these iron condors. Again, if I didn't do that at the start of the week, would I think that this is a good place to do so? And given the 30 IVR and where we sit, 200 points from the highs, 200 points from the lows, I mean, this is pretty close to the midpoint of that trading range. So 45 days, where could we look? We could go on the other side. And unfortunately, this is given the weekly expiration, we're not going to have the 25 or 50 or 75 strikes here. But you could go above the highs and lows and start to line up a trade where nothing happens, the range holds, risking one to make one, a little bit worse than that, but it's still effectively saying that we're going to chop around and move sideways and not make any significant progress to the upside or the downside.
My man, I got on iron condors and spades right now, but particularly in SPX. I got a couple of them. I got two in basically similar type strikes. Let's just call it that for argument's sake. But I got a couple in March, and then I got one in April. And so that's the trade that I've been, living in for a while. I'm kind of rethinking a little bit what I just said to you about the idea of a short position. I think I would like the idea of using that 68.50 area as a possible short position because I am so long. And I've been fond of these super bulls that we've talked about quite a bit. Maybe I look at one that involves selling the 6850, 6860 call spread to finance buying the 6800, 6785 put spread. And now that's in SPX. I'm sure you can line up the similar deal in ES futures options as well. But just kind of utilizing that area, right? Like that 6850 area has been an area, at least in the past week, that has been kind of troublesome to get over and stay over. Maybe that's probably the best play here to see if we're going to actually do that. And maybe for the end of the week, or you could even use it for, at the end of the week, it lines up better. Right now, it's a 60-cent credit. Maybe a little bit higher becomes something like $1 credit, which I usually like to do. But I think maybe that's one small opportunity. If you're long, it's not crazy to get short against 6850, I would say.
I'm curious before we do a little bit of position management here, because there was a short iron condor that we put on several weeks ago here on the show, Jamal. And just looking at the tea leaves, it looked like it was a high dispersion environment. That means a lot of churn beneath the surface. The indexes don't necessarily go anywhere. You had this big gamma wall that was built up that helped keep the indexes pinned. So we had a 71.25, 6,600, 66.25. Short iron condor put on, and now it's a 21 DTE, so it is a day to manage that position because it was a very typical tasty 45 and 21 out type of deal. Before we get there, though, I did want to ask the Chicago king of calendar call spreads, a question.
Yeah, yes, sir.
Given the volatility and the way that you've seen the volatility structure, with this kink at the front of it, where we're effectively saying between that and oil, this is not going to be a longer term problem. I mean, hell, December oil is trading at like $70 right now. It's not like we're thinking this is a significant long-term disruption. So do you find this environment where we still have some of this vol sticking around in the front month contract, maybe long calendar call spread is appropriate to express any view where like the market's not necessarily going to get much higher over the next week, 2, 3, but 2-3 months from now, we are absolutely breaking to new highs?
Yeah, I do. And I assume you're talking about like ES futures, or are you talking about just even oil?
Yes, thank you.
I do actually. I think it's, again, we're elevated in the front month. It's easy to sell some upside against upside that you're long further out, because at some point you assume, I shouldn't say that. You don't assume we're going to break out of this range to the upside, but if we do, I think that's a nice way to finance that long call option by selling that near term upside that's juicy, especially as we're moving up into this move here. I think that helps.
I think that may be one way to crack this nut as we're looking at how the market's playing out, particularly on the technical side. Before we go back to the charts, though, position management time here. The short iron condor position, only 25 points wide. I'm pretty content with how it worked out, all things considered. Vol didn't necessarily stay down during the duration of this trade, right? And if it had come in as opposed to going up, more money would have been made. But the fact is it gets pinned right around the midpoint of this trading range that we've been in. And, we can go to the charts right now, Jamal. The midpoint is 68.20. We're at 68.31. I mean, if you told me when we put this trade on at 45 days in, you'll be able to get it at 21 days, 10 points from the midpoint, I would say this trade must have worked out fantastically.
Yeah.
But wonderful, right? So maybe more money could have been made, but we're going to just take what we've got here. We could squeeze a little bit more profit out, Jamal. I suppose we could run this up to like maybe a $300 winner. But is that worth it? Or is it worth redeploying new capital in a different volatility regime where this was put on with a 20-ish IVR? Now it's a 30.6. I think the buying power is better used, and it's just take the money, run, stick to the typical tasty mechanics, and find the next opportunity to leg into, which in this case, it very well could be that long calendar call spread.
Sometimes it's just that
but we
simple.
need to do a little more investigation. Yeah, that's simple. Keep it simple. Next trade.
You have to in this environment. And I think the ability to take off trades that work and win quickly is like such a plus. If you can just do that and then wait for the next opportunity, because we do get the opportunities in this market. I mean, that's the one nice thing about it. So being nimble is good.
Is the S&P out of the woods yet? It's a great question, Jamal. We have covered the gap from the open when the market obviously traded lower at the start of this week and the start of last week. We may have also returned into the uptrend from the lows that we had in November and again here in February. And so I don't want to dismiss the fact that this is a market where we just clean this up a little bit here. We may have seen the flush, right? We lose the uptrend. You move back to the base of support. We bounce from there, and now we're back in the uptrend. That's a really sharp V-shaped recovery. A little bit further from here, and all of a sudden, this is a market that's on solid footing in my view. I mean, I would really like to see 6,900 print before I go, yeah, this thing's over. Let's buy 7,100 calls. Time to book it. We're now in the seasonal plus window, which, by the way, today is the last day of the bearish window of seasonality from now until August.
Really?
This is when the market has past 20 years. Today is the low for the bearish seasonal window from Valentine's Day into March. So if we're going to get a market rally from here henceforth, you get a 6,900 seasonal tailwinds, Navy frigates escorting super tankers through the straits. I mean, it's a neoliberal's dream, Jamal. And we can just go to 7,100 again.
Well, now that I know that, why would I even put on any short positions here?
Oh, well. That's why the long calendar calls for it to me in this environment so appealing. I know that kind of benefits when the market gets a little bit of a volatility expansion. But a little stability goes a long way.
But what's the strikes? What are you thinking? 60,
70.
Oh, 7K, huh? Oh, how far out you going then? Oh, the end of the month. Okay, all right. Okay.
Calendar call. Yeah, let's go 7,000 here. Let's go. We're at 51. Let's go 7,000 here. What did you just jump on me for? Get back here. Scratch that. Anyway, while I'm sizing this up, Jamal, what do you think of the pitfalls with doing a trade like this? Let's just say it's at the money, 6,900. What's my risk?
I mean, your risk is what you paid. That's the one thing. And I mean, in that situation, it's a decent amount of capital. But I mean, I say if you do it, that's why I like to do, when I do these, I like to go, I guess it really all depends on the expiration, but I mean, why wouldn't you go 7,000? Honestly, give yourself a little bit more upside from here where we are. I mean, this is 50 days out. I don't know. I guess, I mean, honestly, you know what? I take that back. Given this situation, it just really depends on what you're selling. You're selling March, and how much is that trading over? 26 vol right now versus what's April? I think that's the more interesting way to do this, because this is a real situation of how much vol could
25.
collapse, and we just might not move.
25.2.
Yeah, that's not as high as I would have thought, honestly, for the end of March. But that's high enough when it gives the EA. I mean, it just really depends. The only thought process is how much are things going to calm down, and are we really not going to move all that much from where we are now? I mean, 6,500 obviously isn't that much, but that wouldn't be a crazy gamble. We really haven't moved a whole lot. So in this case, you're just depending on volatility to completely collapse more near term than far term. And again, your biggest risk is how much you paid for how much you paid for the spread, right? And if it really moves far out of the money or in the money, that's really what it boils down to. Just your premium, you're paying for it. So it's really an amount of how much you're going to lose on what you paid.
Yeah. So then the question is, if my max loss is the net debit incurred to put on the position, then is, putting out $3,000 of buying power for the typical retail trader. We know
That's
what
a
the
lot.
account sizes are.
Yeah.
It's a lot. So might be a decent idea in terms of executing it for the portfolio constraints that people run into. This is why I think the short iron condors, you and I talked about this at the start of the equity segment, that feels like the typical tasty trade right now. It feels like the right mechanics. You could still find reasonable risk to reward. I myself, this is like all I'm laying out.
I mean,
66,
honestly,
65,
for that
50.
trade, I think you have to go March. I think you have to go regular March expiration versus end of the month March.
Yeah, and there may be ways to reduce the buying power here, but it's not just whether or not the idea can be executed, it's whether or not it can be executed in a way that doesn't hamstring you. So watch list idea, I don't know if it's other people's forte. At 38, 51 days here, we just took off that other iron condor. I've been layering these in. As you say, you got you got them for days. I have several here. Do I want to put a new one on? No. It's why I'm waiting for 6,900, because if we punch through 6,900, then it's in my view that we're going to do a topside range test. And so I'm going to want to layer in some more upside convexity so that if we do go to 7,000, 7,100 quickly, at least the iron condors aren't going to bust out, because there's plenty of time here. I mean, 51 days from now, Feels like we lived lifetimes since Sunday's open and oil traded up to 119.48.
Yeah.
Maybe that's just me. But a lot can change in 51 days. So we start to get the momentum to the upside. We're in the seasonally bullish window. We just avoided World War III. AI is back on the menu. All that jazz.
That's when you're really going to know it's over, when the storylines become AI all over again. That's when you're going to know.
That's a great point. When the storylines, when Steve Leisman is up there talking about AI and not Iran, then we will know we have turned the corner. With respect to yesterday's decision-making as well, the Russell here, we hit the halfway mark yesterday, Jamal. I put on a short iron condor position. I got burned on being directionally long. That feels like a prudent decision because IVRs are coming from near 60 to about 35 today. And yes, we've bounced a little bit here, but looking at the strikes at 45 days to expiration, 2750 down to 2300. It's effectively saying that the lows that we had here in November and the highs that we had here in January, they're not breaking anytime soon. And I'm happy to make that trade right now, given the real economic consequences of what a disruption looks like in the Middle East and how that could mess with supply chains as every day goes by and those risks pile up more and more and more. The candlesticks themselves, though, that is a beautiful triplet there. A nice little Morningstar candlestick cluster suggesting a bottom is in place. Stocks are looking like they're getting their groove back real quick here with today's headlines. I just don't know if you can trust it.
That's the hard part. Just personally, it's been hard for me to trust it, but that's the other thing about it. I mean, I've already been long. I was long heading into this. I probably got a little bit longer the week before. So I do have to figure out ways as we get closer to 68.50 to try and get a little bit of short delta or possibly take things off. Because it is looking more and more real. I mean, we got 2 days in a row where we've seen just this fall in oil and markets rise back. What else can you do, Chris? I guess at some point you got to believe it's real.
Got to believe it's real. I just want to know when we can start worrying about AI taking all of our jobs again. I mean, that is really going to be the tell that this market is. That's really freaking out. Hey, IGV software is down 2% today, Jamal. Maybe that's the harbinger of things are turning back to normal. Software is up 15% from low to high during the Iran war period. And of course, the first day where it looks like the war may be winding down, if you believe the market's tea leaves, software is down. There's a horrible irony to that. Otherwise, though, you have to like the distribution here. I really like the fact, you have your Mag 7 names. They are leading the broader market. We're not there yet, but we could be looking at a close above our 1 month moving average, something that rebuffed us just recently here at the end of February. We really haven't traded on the north side of it since late January when the market went into its correction mode. So again, little tea leaves here. If you see vol futures break below 20, Mag 7 back above 63, S&P at 6,900, all of a sudden, the news media is going to be very different than what the charts are suggesting. And you're going to be hearing a lot of, the war continues, this and that. And maybe we've just benchmarked it and we're pricing in the off ramp fully. I mean, you can't argue with that on a day like today when you look at oil.
Yeah, no, that's true. I mean, and you talk about that distribution. I mean, you see the Mag 7s, you see the consumer staples names, you see the financials. Those are all contributing to this rally right here. And I think that's what makes you start to wonder if maybe things have de-escalated to some degree. I don't know if it's completely over, but certainly de-escalation is taking place just based on what we're seeing. Now, again, I mean, we're conflicted by this because we always have been taught that the market is forward-looking and can kind of see through a lot of the things that we're looking at real time happen. I would say the one thing that still has yet to happen, still close, is the backwardation in the VIX. That is still kind of holding steady. And I know that doesn't necessarily mean it's a prerequisite to markets going down. It just means that there's still some elevated volatility out there. There's still some buyers of puts out there in SPX. And so it's something to keep in mind in the meantime. But look, man, if oil prices keep falling like this and markets keep going higher and we get this participation from a lot of stocks in the S&P 500 from different sectors, well, what else can you say? But it's done.
For now.
So
I feel like we got this wrong with the NVIDIA earnings too, but even zero hedge, U.S. Energy Secretary Chris Wright deletes ex-post announcing U.S. Navy has escorted an oil tanker.
Oops.
I mean, it's zero hedge. They're not exactly going to make the administration look bad given their disposition. So, given that, we move off of this bounce here in stocks and we go to, hold on a second, bonds. What's going on with you guys? Why aren't you rallying more? I thought this was a big decline. Wait, oil is down and bonds are down on the day? Okay. This is a disconnect we need to look into. Not that I'm mad because I am still leaning short deltas, short volatility in the short iron condor positions here. And we're at the halfway point of these positions. So like whatever, but I'm just confused. Something that you pointed out, I would be, well, by the way, while we were texting the other day, markets are going to recover. Oil's going to be back. No one's going to know what's going on. Everyone's confused. Here I am, Jamal.
I told you, man.
Oil is off 15, 13.
You know why you're confused? Because this is
15%.
confusing as hell. That's why.
Okay, so that's fair. So when you see a market like this, which was so sensitive to oil when oil was surging, right? Bonds go from 119, drop into the 114 handle. What do you make of a market that is not getting any sort of relief on a day like today?
I don't know what to make of it. I will say, I mean, just to, keep it with bonds, but just looking at yields, I mean, the 10-year yield is I mean, it's down 0.2%, but it really hasn't moved as much as you would think, right? Given what we've seen. And I guess to be fair, I mean, oil is still plateauing out at $80 a barrel. I mean, it was in the 60s before all of this began. So I guess there's still some premium there. And maybe that's what we're seeing. We're seeing some risk premium, not in the term of volatility, even though there's a little bit of that, but just in terms of the price of bonds hanging at these levels, 116 for ZB, 112 and change for ZN. I think that's why they're just hanging out there, because we're still hanging out at the 80 level in oil. So I guess we can kind of, keep it in perspective to some degree. But you're right. I mean, massive moves with bonds getting faded really hard when oil is moving up. You would expect a little bit more move to the upside or maybe something else. But honestly, I guess it's really keeping it in check. 116 apparently is the plateau level with oil is at 80.
116 in bonds, 112, 112 and a half in notes. We talk about those iron condors, Jamal, in stocks, and we're going to talk about them here in the treasury market as well. We are sitting at the halfway point of the 2026 year-to-date trading range in ZN. That gives you lows right around under 111, right around 115 at the highs. That's why I'm here in for the short iron condor for a trade which is actually way less appealing now, given how the market volatility has moved, because it's no longer a 40 IVR. This is the right place to put these strikes for what it's worth if you're doing a short iron condor, just right around the highs and lows if you're at that halfway mark. But the pricing here is no longer giving you a 2-to-1. It's now a 4-to-1 risk to reward. It's now laying out $406 to make 93. So it's worse than a 4-to-1, despite there being a similar probability of profit sitting around 60%. A few days ago, this was viable. One of the questions we ask ourselves, Jamal, would I put this trade on again today?
Mm-hmm.
The price is at the right place to put this trade on. The pricing for the options is not nearly tantalizing enough, given other opportunities in other asset classes right now. So for me, it's a hold them if you got them. If you don't have them, the buying power probably could be used better elsewhere.
I've had those similar discussions with myself on a lot of trades more recently. And yeah, if it doesn't fit anymore, it's time to close it out, time to move on.
Time to close it out, time to move on. I'm going to hold them if the market's getting pinned here and vol's getting sucked out. That is the ideal outcome for short iron condors. So we're not going to complain about this, the fact that the market is doing exactly what we would want it to do. But it is odd that oil's down 15% and bonds, which had proved so sensitive to oil markets, they're not coming back to a place of 113 and a half in notes, 117, 118 in bond. That wouldn't be crazy given the move we've seen.
No,
and yet here we are.
I'm trying to remember. I mean, is this? I feel like this might have been where it was when you go back to 3.5. I mean, we were. I think we were around 116. So I don't know. It might be right, Chris. I mean, it's actually right. I mean, when I look at 3.5, that's when oil was 80, and we were at 116. That's where we're holding right now, honestly. I'm with you. The velocity of the move feels like bonds should be higher, but I don't know. Let's look at the tape. It tells you, I mean, 3.5, we were at 80 in crude oil, even in the April contract, and this is kind of where we were in bonds, 116. I told you it was going to be confusing, didn't I? I said it.
Oh, yeah. I asked you for the, and you nailed it yesterday. You're like, oh, this is going to be, no one's going to know what's happened. I asked you for the lotto numbers, which, by the way, you didn't send me. So I'm assuming you won and you're not sharing that. Okay. All right. But yeah, no, this is probably the most confused reaction I'm having today. Oil down, stocks up. Okay. Gold up, silver up, copper up, fine. Dollar down, makes a ton of sense. Bonds doing nothing. Sure, maybe it's a little bit of a risk on. The safe haven of treasuries is being abandoned. That would be good, I guess. But kind of careful what you wish for, right? So the oil trades off, but global growth may be dented in the short term. You swing your attention, Jamal, back to a Federal Reserve that's eyeing labor market data instead of oil concerns. And then we start thinking about AI and recession again, and we can go into AI taking our jobs and the economy going into high productivity where no one can afford anything.
Everything can go right back to normal.
So where the prescribed path before the strikes was rising notes, rising bonds. I'd be curious to see if after a little bit of a washout and recalibration, we get there. But I have a feeling this move isn't over in oil. The story doesn't feel like it's done being written yet, even if what we're watching in the oil market today is historic by we're going to be talking about the last 2 or 3 days for many years.
Do you think the AI fears come back, though? It's a legit question.
Let me answer that question with a question. Do you think that the rise in energy prices and the insecurity around energy prices is enough to feed into concerns that there isn't enough energy supply available to hearken the AI revolution? Like, could the Iran war be a limiting factor for AI returning as a supreme narrative? Because, hey, all of a sudden, look how sensitive we are to our energy problems here in the US. And we're going to layer in more demand on top of that. Maybe we need to upgrade the grid first. Maybe we need to do these other things first before we go full bore into more data centers. I wonder. Don't have an answer.
Yeah.
Certainly don't have an answer for this price action, Jamal. 16% lower on the day here in oil.
Yeah, the other thing too, I wonder if this whole situation with this sort of, public spat with Anthropic and Department of Defense, I wonder if that becomes center stage at some point too, and a different narrative for AI.
It definitely has implications. I almost think it has implications beyond AI, and it's more about, can the Department of War incur these supply chain threats against companies to coerce them to cooperate with the US government? And because if the answer is yes, we know that the administration already has a penchant for a little bit more, we'll call it state capitalism, given what they've done with Intel and MP and a number of other companies with the right? So you could see this having all of a sudden the Anthropic gets the courts and Congress to get on their side. Maybe the administration isn't able to take golden shares and stuff moving forward or make these kind of investments in the industrials, the mining companies, what have you, that has been a driver of the market. We've seen Intel stock, we've seen MP stock. They have surged since the federal government started backstopping them. It's I'm more interested in the tradable assets because Anthropic, of course, is still private.
The follow-on effects, if you will.
Yes. Which follow-on effects here today, Jamal? Was there a Navy escort through the Strait of Hormuz? According to Secretary Wright of the Energy Department, yes. And then no, which is why the title of the show is The War is Over, asterisk, because we have no idea. No one knows what's going on, apparently, not even the Trump administration. But it's $80 oil again, Jamal. It was nearly 120 at the open the other night, 119.48. So now that we've come in by a third, 33%, what do we do here? Do we buy the dip?
I mean, it's interesting. It can serve as a put option, if you will, if you're long deltas. It certainly, seems to be the case, right? I mean, if you're getting long here, you're obviously playing the other side of the market move. So I think that's one way to look at it. I think the easiest thing is just selling vol, right? I mean, even after this huge move, you can see vol is still elevated. You can pick whatever you want, whether it's CL, whether it's MCL, whether it's USO. All of those options are bid right now. I'm in MCL options. I'm sorry, I'm in CL options, and I'm also in USO options. Both iron condors. I could have easily just sold upside, right? Upside call spreads, but I wanted to use both. I mean, I think, it's just bid all around, whether it's upside and downside. So iron condor seems appropriate.
Iron Condor seems appropriate. I mean, that makes a good deal of sense. We were looking yesterday about getting to some Iron Condors here, recentering strikes, given the moves we've seen. Jamal, one of those such positions now, which hard to believe, but this is the way the market's moving. Yesterday, we were able to go out to 70.72 on the downside, $25 away. Same thing to the upside, up near 120. Got a little short iron condor going. Now we're only $8 away from the strikes, but that is the nature of this market. So what say you? Are we moving too fast to hold this position, or hell, people who have been calm and trading this sideways throughout last week and into this one, they're feeling pretty vindicated today if they've been able to keep their cool.
That's the thing. I mean, I think you have time on your side with trades like these to kind of wait it out and see. I mean, you and I both are not sure how to feel about it right now. I mean, maybe those downside plays you have are exactly where you want to be right now, and just see if this thing bounces back up. I mean, why change anything? I wouldn't change anything right now. The only thing I'm thinking about changing is, do I want to, as we into this downside move, I'm short. And I have two iron condors on in CL. One of them, I'm short the 60.59 put spread. I'm thinking about rolling that up to a different put spread into this down move. I think that's something to consider. But I mean, where you are, I don't think it's necessarily, there's no reason to change it. I mean, this is just such a huge move, and it's happening pretty fast. Best thing to do is possibly take advantage of that move, especially down here, if you are really further downside like I am in one of them. And I think I will.
Commander of the now sunk Iranian Revolutionary Guard Navy says, and it's not Iranian Revolutionary Guard, it's the Islamic Revolutionary Guard Navy, Josh. That's what the I and IRGC stands for. They claim
real-time correction. Ooh.
I think it's an important distinction just from like a political economy perspective.
Josh.
Like these aren't the Iranian people. The Iranian people are good people. The IRGC are a bunch of militants who have been holding the country hostage since 1979. He's
so close to punching me when he sees me, I'm sure.
That's fine. In fairness, both of us have earned it. They tweet out to the energy secretary, claim of an oil tanker passing through the Strait of Hormuz escorted by the U.S. military is false.
Oh. Yahtzee.
There we go. Okay.
But
Jamal,
when that came out, though, when that headline originally came out, we were already down. I feel like that headline came out when oil was trading like 82. So I don't know. That wasn't the initial push, huge push lower earlier today.
And I had some oil sitting here just for like a high convexity hedge. It's not doing much of anything. This was put on a little bit too early in the cycle when oil was on its way up. I want to get this off my books here. Maybe that gets filled and cleared today. We could sell some. There's still a pretty decent amount of volatility in this market, Jamal. I mean, not for nothing. We could sell the 60-62 put spread and do a 4-to-1.
I know.
I mean, do we think oil's getting back to $62 in the next 37 days, given the stresses and pressures that we're seeing around the world?
I mean, I that's not where we were. That's lower than where we were before all of this, right? It's hard. I'm having a hard time remembering. I mean, we were in the 66, 65 range, right? I'm just trying to, I think you can feel safe about 62.60.
The low for February is $61. Do we think we're going to clear the February lows? No. If the market wants to gift us, and you could see the pricing starting to run a little bit because of the bounce, but if the market wants to give us something to work with down here, this is very tempting. Maybe someone wants to fill the order for me.
Well, again, what I'm going to do in addition to what you're doing, I I have, like I said, one of the put sides of my iron condor was 60.59. I'm actually rolling that up to the 67.66, if that makes you feel any better. Matter of fact, I'll do it the same. I'll do 65.64. It's the same strike as another one. I'm doing that into this down move.
You know what's
No
fun
other
about
reason
this
than-
down move? I'm looking at a short call spread side here at the 37 DT that I have on here in the Iron Condor. I could get that leg off right now for a quick $100.
Yeah.
This was put up when oil was trading like, I don't know, it's $35 higher.
I mean, that's it's amazing how big some of these strikes are up here. I mean, honestly, still like, wow. I want to do that. Right.
I asked you something yesterday, and this is, I've got to work on this myself. And I like to think that we're evolving as traders, Jamal, every single day. But I was pointing out to you that the 140 calls in oil yesterday morning at 11 a.m. were trading at 431, and the 150s were trading at 347.
Remember,
right? Those are coming like $2.50 each.
Yeah.
So the call skew that we're seeing likewise is starting to abate as well. This is not just like an ebb and flow in the oil market where the pressures that have been driving us higher here, they remain in place. It's a parallel shift. It's not so much a parallel shift anymore. We're beginning to see that call skew deflate. So if we think about this burdening energy crisis, maybe turning a corner, again, the market pricing is offering these little breadcrumbs here today that this is, yes, obviously 15% down on oil is going to do something to the options market, but there are little reasons to think that maybe the market has sniffed out something that we as individuals haven't fully digested or learned about thus far.
Yeah, I mean, that's 100% the thing, and that's part of the confusion, right? Like as people who watch market every day, like you and I mean, it seems crazy that oil could move this fast without there being some sort of shock value for about to bounce back, but maybe we just don't know it all. Wow, it just bounced like $3, by the way.
And you get that IRGC comment, right? Oh no, you didn't. That's a false report. 79 up to 83. I mean,
in oil,
look,
oil, all the oil options just like moved big time, so it's like really wide now.
Yeah,
like I'm showing big P&L swings. This is what we're talking about. This is exactly what we're talking about, though. It's not over, people. It's very confusing. There's a lot of headlines. Not over.
I really would like to get filled on this short put spread.
You're gonna have to be aggressive now. 84.5. Boom. It's just running higher now.
It's just running. That's going to be the market today.
Yeah.
All day long. Rumors, shouts and murmurs.
I mean, don't get me wrong. I'm here for it. I'm here for it.
I think we're all here for it. But the question is, hey, should we buy some 90? Should we buy some 90, 95?
That's great. Yeah. Swing. Oh, look at that. Market just tanked, bro. Oh, yeah. Yeah. The news just never stops. That's right, Grumpy Mike. It just never stops.
The news never stops. 68.10 here on the S&P. I don't want to pat myself on the back. I think that traders, like I said, 6,900 in ES to lay out new directional longs. The market may look good. Give yourself a clear plan to operate in times like these. Write things out. I have the benefit, Jamal, where every single morning I'm writing this morning note for internal circulation now.
Yep.
And so I am forced to write down what's support, what's resistance. Like I have it all written out in front of me now, as opposed to being thrown away in one of these like many little journals that I keep. Like you can't even see that because of the greasy, but like I keep all these little trading journals around, just scribbling notes in them. And my plan for today was directional betas above 6,900. We didn't know this Iran news was going to come out, but stick to your plan. Stick to your plan in times like these. Don't get over your skis. It was just a 16% loss for oil. Now it's only 10, 11. If we're back to 90 later today, or we're back under 78, Jamal, I think both things would be equally as likely right now, given the news flow. So let's, Chris Wright tweets out another thing. No, actually, here's video of us transiting a super tanker.
Yeah, that's good. That's what we need next. We need actual video proof.
Right back down to 80. So I think that is the nature of the game don't get married. We're speed dating here, Jamal. I know 2 weeks ago you didn't like that expression, some folks in the chat, but hey.
I loved it. No, the contrary. I loved it.
In this market, don't get married to any position.
Speaking of CL options, March 13th.
Hold on a second. U.S. intelligence assets are beginning to see indications Iran is taking steps to deploy mines in the Strait of Hormuz shipping lane. CBS News. Do we own enough oil?
Well, it sucks because you can't get any options off in any of these near-term expiries. Look how wide these things are going, man. This is wild.
I know.
This is.
You tell me I could buy the $90 strike for $9.30 right now? Oh, now it's $3.79.
It's crazy. Yeah. It's just moving all over the place in the near term. I am glad that I did get off the super bear trade. Thanks, Chris, for making me think about that today. As soon as we got to that 68.50 level, in SPX, I sold the 68.50, 68.60 call spread to finance the 6,800, 67.85 put spread. And that's working out well. So thanks for that, my friend.
Maybe bonds are the tell here, Jamal.
Yeah, what are they doing? Oh, they tanked, huh?
They weren't giving us that rally today when oil was down, and now that oil is going back up, they are immediately taking it on the chin.
There you go. I mean, it's probably a good segue into the next thing.
Yeah, I mean, we did oil first before we went over to the metals.
Well, backwards, I would almost say metals. Have you seen that?
We have not touched them thus far today. Well, if you're mining the Strait of Hormuz, maybe that's a little notch in the column of our theory that you need to be able to ship metal into the Middle East. And despite what some astute viewers have said over email, no, you can't take camels. No, the camels will not be able to carry all the oil and the gold. Okay, jokes aside, oil up, gold punched in the face, dollar demand coming back in. We're going to speed run a little bit of everything here on the other side of this last 5 minutes because you're seeing a lot of the market move in tandem right now.
Yeah.
Whether or not the news flow is legitimate is one thing, but you can see that there is a clear, sincere reaction to the comments from this Iranian naval commander. I thought the Navy was sunk. And we have the CBS News report that Iran is taking steps to mine the Strait, which would make you wonder if we know they're mining the Strait, how can we just blow them up or something? I digress. I don't know much about the military. What I do know here is, the Jets just traded for Geno Smith. Could this day be going any worse? Okay. So we have an S&P 500.
Oh, God.
Yeah.
So you don't trade for him the year before, but you trade for him now. Why? Like what? Oh my God. God. That's the worst news of the day. And we're dealing with war right now. It's the worst news of the day. Not to make light of war, but my God, that is why. You know what? Never mind.
We have gold and silver here tanking, Jamal. The open outcry close for silver was 89.59, and it was right through that zone where the past week we've been saying, get us through 87, we feel better. Below 79.5, we feel worse.
That's funny.
And now we're dancing, twirling towards that former level here. So first blush, right? Yesterday on the show, we're saying, what if we get a breakout through 87? What's the plan? The game plan would be to buy more silver. Could I get it off yesterday or today? No, I could not. However, we have an opportunity to do it now, and we're going to do it live on the show. We do have an opportunity for maybe $90 here.
Do it live.
So I'm going to go 90, 91, a quick, tight little call spread, risking 1 to make 2. Let's get it shot off. Tight stop. If we're down below 87, we're giving this $1. $1 in silver, we're done. That's it. And if we have to check back in after new headlines, so be it. But the technicals here, range breakout, move up to new highs, pull back to support. This is where we should be getting long.
So
I'm not going to miss the opportunity.
I like that idea, mostly because you're giving yourself clear, defined stops. I think that's one of the things that right now, if you're going to try and scalp anything, particularly any of these futures, whether it's oil, whether it's gold and silver, heck, even equity futures, I think you just got to give yourself quick stops for sure, and maybe even specific areas, like Chris said, 91. So I mean, it's got to be like that because these moves are happening so far and so quickly and so fast. half the time we're not even sure how real they are. But I think that's just the way you got to play it.
That is the way that we have to play it. So a gold bounce today, silver bounce today. Up until the last few minutes, they were looking fairly healthy, Jamal. Today's gold rejection, though, we can try to slice a trend line in a number of different manners, and we've done that here. These are very subjective, of course, but you could see that failure up here would mean that we failed to break out of a range. Maybe this is where we're catching ourselves on this cluster of moving averages. It happens. That's what momentum traders do. But this is the place where the market needs to stop falling and continue to break out. That is done for most of today's session. But gold at 5,200, silver through 87. Good news for those that are trading the market similar to how I am. Same thing for copper, where we've had the bounce away from 5.5, 5.6, where there's been short put spread interest. Overall, today, a lot of what's doing is actually just kind of what we want to happen across a broad spectrum of assets, even though the past 10 minutes of news flow hasn't necessarily been accretive to our success.
I'm going to take gold and silver out of this, but the three things I think we kind of just figured out here, I think 68.50 in ES, 116 in ZB, and $80 in oil. Until we get a meaningful break in any one of those, everything's still on the table.
Everything's still on the table. We go over to the dollar here, where the reversal today was gathering pace prior to the most recent bit of news. Iran potentially getting ready to mine the Strait of Hormuz here. The pullback, Jamal, we talk about a turnaround right now that is on pace intraday to be a bullish engulfing bar or key reversal, whereby we would close above the prior 4-hour candle's high after moving below the low. What environment has been defined by the dollar rallying in the past 2 weeks? Oil up, stocks down. A little birdie's whispering to you here, Jamal. Do you hear it tweeting? Saying be careful out there. Don't get married to directional beta on the long side of the equity market just yet. This is going to be a two-way street. And we said it yesterday. We said it the day before. Jamal, I know that you and I have talked about this. I know that you're of this mind. Jamal, if you're in a fight with someone and one person says fight's over and the other person says it's not, does the fight continue?
Yeah.
It does. Trump can declare victory. If Iran doesn't stop lobbing missiles at Qatar, Dubai, UAE, Saudi Arabia, we're not done. The war's not over. Takes two to tango.
Yeah, and I think until there is any resolution, we're going to get a lot of moving around just like this in a lot of different assets, right? And dollar is also one of them. I mean, I flipped out of some positions yesterday that I was, that I had that basically was winning because I can and because it's that type of market. I still didn't believe everything that I was seeing, and I still don't. And until I get some serious confirmation bias, I'm going to continue to try and trade these positions quickly and swiftly.
The Aussie here today broke out to a new high,
big time. Which
for all talk of an anti-dollar move, I would point out that the 2023 high in the spot market comes in right around 71.50. So the area in which we bounced, actually, Aussie dollar itself may be the better place to look at this as we wind down the show. But just quickly scrolling back here, we'll go to that weekly chart. Up. Okay, we just traded through the 2024 highs. We then spent the past few weeks consolidating above those 2024 highs. And then today we broke out into a fresh high for 2026. The 2023 high is right here at 71.5. If we go a little bit further, your Australian dollar, which is a barometer of commodities, risk appetite, inflation, that's going to be moving to the upside. So big picture, Jamal, FX is the world's largest market, nearly $7 trillion a day exchanging hands. The commodities themselves would be on the up and up, and you're looking at a higher floor in commodities after the war if something like the Aussie dollar is able to sustain itself near the high. So I just kind of reading the tea leaves here, thinking about like those short put spreads in oil. I'm going to work those now. Those need to get filled. I'm pretty confident we're not going down to $62 in the next 37 days. I'd be happy to be wrong, because if we do, it means that we're probably at 7,100 in ES and I'm having a good time elsewhere.
Exactly.
But let's look at this is not Aussie breaking out in this environment. This is not a risk move. This is a commodities are going to stay elevated for the foreseeable future move.
Yeah, I think I like the way you're thinking about oil in that case. I think That's the way everybody should be looking at it right now. Think about how oil is moving compared to the positions you have, and adjust your shelf accordingly, honestly. And that's what I've tried to do at times too. I think it's the best way to play.
What's next on the calendar for tomorrow? We do have inflation data coming out. Fun. Good. Is it during the war period or not? It's not. Pre-war inflation. So what's the market mechanism then? Like NFPs, we want to see something that tells us the Fed is fine. Fed's fine. It doesn't need to do anything. Runaway inflation here, probably not going to help, right? Because we just got that jobs data suggesting that we need cuts. So soft inflation data, the economy is starting to deal with the oil price rise from a lower base. It's not going to be as painful, at least the headwinds. Well, they were headwinds, not tailwinds. The psychological framing matters. The numbers themselves do not. And with that, I bid you adieu, Mr. Chandler. I know that we're still sticking around here on Tasty Live. More programming coming up next. Dr. Jim Schultz with From Theory to Practice coming at you. Jamal, keep an eye on oil. Good luck trading, buddy.
Later.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Growing up in Brooklyn, New York, in Bensonhurst, Brooklyn, where I was born, there's no social climbing of the ladder. So if your father's a bricklayer, you become a bricklayer. If your father's a doctor, you become a doctor. If your father's a hoodlum, you become a hoodlum. My dad was, he was an original market maker, let's put it that way. Only not an exchange-regulated entity. My mom was a waitress, just trying to make ends meet. My parents were divorced when I was 11. And my mom did everything, legit did everything for me. But I idolized my dad. I was a good student. I didn't want to disappoint my mom. I was boy leader of Arista and Archon, which is the honor society in junior high school. I wanted to be a police officer or an attorney. And then I realized we were on the opposite side of the street to become a police officer, but that my dad was going to need the attorney. So I wanted to be an attorney. I did go to college for 3 months. I became the best air hockey player that John Jay College of Criminal Justice had ever seen, but I wasn't learning anything, and I just didn't think I was going to go anywhere. So I had a cousin who was working on the New York Stock Exchange, and they transferred him to Chicago for a new exchange that was opening up, the Chicago Board Options Exchange. He said, hey, why don't you, stop hanging out on the street corners, come out here and I'll get you a job, maybe make something of yourself. I left on a Thursday. I started working on a Monday as a runner. I always thought when I bought my seat in 1987, I actually bought my seat the day of the
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Man, welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the All is Right in the World edition of what it is that we are trying to do. The markets are green. Oil is crashing, man, and you guys are here, so thank you so much for being a part of what it is that we are trying to do, because we could not do any of this without you guys. So thank you guys so much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and you can join the discussion here in real time. If it is March 10th, right around 2:30 Eastern time, give or take a couple of hours, you can communicate with your brethren who are also watching the program. Man, you can celebrate if you are a bull, you can commiserate if you are indeed a bear, but it is a good time had by most. And don't forget, you can ask me whatever questions you have. I'll try to get to as many as I can right around the halfway mark of the show. The expected move on the number of questions I get to per show is somewhere between 0.001 and 0.003. So the earlier that you get that question, question in, the higher the delta that I will get to said question. So, Josh, bring us into the market, man. What is going on out there? Man, it's crazy stuff. Like all day, it was just super quiet. Like we were just kind of meandering higher, and then all of a sudden we just kind of dropped like a little bit of a stone there a couple of minutes ago. But it appears that we have indeed righted the ship, pun intended. Even the S&P's up 15. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product if you're brand new to trading or brand new to the show. That is my very weak, mediocre attempt at internet sarcasm. NASDAQ up 95. You got the boomers up 210. You got the Russell 2000 futures index up $9 on the day. You got bonds down a little bit. You got notes up a little bit. You got oil down $11. Man, just cannot get out of its own way. I mean, this is one of the nastier oil bear markets that I've ever seen personally, and I've been trading for quite some time. Down $45 off of its highs, or $35 off of its highs. That's a pretty nasty bear market. UB40 down 17. You got the shifties, like gold up 109, just quietly up a little over a honey. You got silver. Look at the Hunt Brothers up $4 today, up to 88 and some change. So the metals are back. The market is back. You guys are back. I mean, man, all is right in the world. You've even got the British pound is up. Man, you got the euro is up. Look at the Bitcoin bros up $300 today. I didn't know that they were still in business, but look at it, man. Bitcoin is 70,000. Man, we are all back. You got volatility obviously going to be getting hit pretty hard on daily today. You got volatility futures down 17 cents. And then spot volatility, the old VIX down $1.60, down to 23.88. And so it's going to be 14 again before you know it. And man, we are going to be lamenting. We are all going to be crying together in the corner that we don't have volatility back at 23, 24. So take advantage of it. Take advantage of it. Guys, I mean, we've talked about this so many times, but let me remind you, this is why you do all those extra sets of dumbbell walking lunges. This is why you do all those extra sets of Bulgarian split squats. It's for markets like this. It's for moments like the one that we're in right now, the VIX at 23, 24, 25. I mean, this is a premium seller's dream. So pounce on the opportunity, man. You got to go ahead and strike while the iron is tested. Okay, so what I want to do today, let's go ahead. Let's continue on going through the portfolio. We'll go through the portfolio and then, oh my gosh, hold on a second, guys. If you're multitasking, come back to me. Listen, I mean, we've had a pretty good run. Like you, me, I mean, man, we've had some really special times together, but I fear that it's all going to be over. I fear that we have indeed reached the end of the road. I think the water may have run dry. I think it's very possible that it's all going to be over tomorrow morning at 8:30 Eastern time when we have the most important CPI print of our lifetimes that's going to drop. Guys, I mean, you thought that the oil spook on Sunday night was bad. You haven't seen anything yet. You thought that the oil shock today was bad. You haven't seen anything yet. This CPI print that is going to drop tomorrow morning at 8:30. Yes, it's all made up. Yes, it's all imaginary. Yes, it's completely fictitious, but I have never seen a more important economic data point than the one that is coming on down the chutes tomorrow morning at 8:30 Eastern. And so, just in case this is the end, I love each and every one of you. Just know that you all will always hold a very special place in my heart, since this might be the final 18 to 20 hours that we have together. So that's coming on down the chutes tomorrow. Should we make it through to the other side, which is only about a 30-35 delta. If you check Polymarket, we'll have a show tomorrow, but again, it's only about a 30-35% chance. So maybe we'll trade some CPI today. Maybe we'll do a little something. Maybe we'll trade CPI. I mean, how would you trade CPI? I mean, let's just think about this. Let's just use common sense. Do you really think that King Trump is going to let it drop? Do you really think he's going to let it go down? Nah, man, there's no way. Got to play it to the upside. And so all right, let's go through a couple of positions here, and we'll kind of see where the wind blows us. Let's talk about oil a little bit, because we did go inverted. We have an inverted strangle right here, 62.5 call, 87.5 put, and you can see we went inverted on this MCL. We had the short straddle on, and then obviously we were getting, kind of torched on the call side, and I decided to kind of be, I wanted to be a bit more directionally aware. I wanted to be a bit more like, okay, let's take some directional risk off the table. Let's go ahead and roll that put up and go inverted. And I'm still glad that we did it. I mean, obviously, if we were holding the short straddle still, we would have made more money back in the last couple of days, but it could have potentially been even worse, obviously, if oil would have stayed at 120 or gone to 140 or gone to 160 or what have you. And so the fact that we went inverted, still feel like that was the right move at the time. And it was definitely a strategic move that we could have made and did make. And so for us right now, this is great. Like, this is a great spot to be in. You can see we have a lot of extrinsic value left in the position. We have some really nice daily theta. And so we're in a position where it's very much just kind of a sit and do nothing. It's very much just kind of a sit. Let's stew in the filth a little bit, and let's see if we can't claw our way back in this position. And so right now, with oil at 82, that's totally fine for us. Any price between the strikes is going to be good. The more centered it is, that's the better it's going to be. But essentially, ultimately, at the end, it doesn't matter. Any price between the strikes is going to be totally fine. So MCL at 82.70 is good for us, and I will 100% take it. And so, all right, so that is 62.5 call, 87.5 put, inverted strangle. That's MCL. Okay, so that is a do nothing type of conclusion. Let's go to MES and MNQ. And so, both of these guys are obviously being helped on a day like today because we have a short put on in MES. We have a short put on in MNQ. And, right now you've got the market up, NASDAQ up 100, E-mini S&P's up 17. That's going to be good for these two positions. And so our short put in MES and our short put in MNQ, we do nothing. We sit tight and we continue to target 50% of max profit. So you can see that we did the MES for 131 points. I'll look to take that off around 65, 66 points, I guess. And then MNQ, we sold that guy for 590 points. I'm looking to buy it back for just a titch, just a skosh, maybe a half a skosh under 300. And that would be good. So right now we sit tight, we do nothing. And that is our go-to move there. So that's MES. And MNQ, man, look at AMD. Wow, look at AMD, guys. Man, this is it. This is our in the money short put, right? I mean, I talk about this all the time on the show, and from time to time, we have actual real time examples to kind of back up one of the things I do mention on a fairly regular basis. When you sell puts, one of the most advantageous adjustments that you can make, if you would even call it an adjustment, is you can just kind of sit with the in the money put and treat it like long stock. And then if you get a sign, you're like, okay, I've actually got the long shares. I sell calls against it. I do nothing, whatever. But when you have the in the money short put, while you're kind of quote unquote waiting to be assigned, if you will, you can just treat it like long stock. And a lot of times when you have long stock, if you have, an optimistic view on the economy, or if you like playing, long delta, positive delta for the longer term or even the medium term, then you can tap into that. Like, you can use that to your advantage. And that's exactly what we've been doing here with AMD. Now, it's only been, when did we put this trade on? It's been a month, maybe 2 months? I don't think it's even been 2 months. I think it's been 6 weeks maybe? Let me bring up my chains here. Let's bring up our Allison chains and take a look at this guy. We did this guy on, let's see here. So the original trade was February 3rd. That sounds about right. We did this trade on February 3rd and we rolled it. Yeah, that's right. February 27th, we rolled it. And so you can see that, we've collected a total of, $12.28. And so, yeah, we're still down, $4 on the trade, on this specific trade. You can see we're getting hurt in AMD pretty significantly for the entire year, but let's not pay any attention to that. Don't look at the man behind the curtain. Just focus on this right here. And so you can see we're down about $4 on this trade, but I feel good about it. We're long some AMD, we're long some NASDAQ. I think we're going to be okay. What could possibly go wrong? Right? Like, what could possibly go awry? Famous last words, of course. But we're going to sit and stew in the filth there with AMD. So, all right, that's AMD. Man, look at Dell even helping the cause today. Dell down $3 today. And so everything else is green. We got a couple of splashes of red. Obviously Snapchat is red. Obviously, it's Snapchat. You've got SoFi is a little bit red. You got XLE a little bit red, which makes sense with the oil stuff. But everything else is pretty green to some degree. Maybe not as green as it was an hour ago or what have you. But man, look at Dell down $3, helping out the short strangle with the 100, 150 strikes. And so that is some nice stuff. And so the do nothing strategy wins again. And by wins, I mean we're only losing a little bit on this strategy now. And so we sit tight, we do nothing, and we just wait for time to go by. Once again, similar to the inverted strangle in a not really kind of way, we have a lot of extrinsic value in this strangle, and we have a good amount of daily theta. And so we let time work in our favor. we let the extrinsic value just kind of bleed off the options. Now, I mean, obviously an inverted strangle, we're trying to minimize losses. With a regular strangle, we're still trying to make some money. Like we're still trying to hopefully hit profit targets and what have you. And so that is obviously the key difference between those two. But, structurally, they're very similar in a lot of ways. And one of them is the stock is between your strikes. That's the best case outcome for you. You just sit back and you just let time do its thing. And then you just kind of keep your fingers and your toes crossed that the stock stays where it is. And so that is Dell. And let's see. What else do we want? Is there anything else? I mean, Starbucks. Oh, this is good. Okay. So one more thing I want to talk about, and then I want to make sure we do the CPI trade. Just in case tomorrow is the end, let's go out with a banger. Let's go out with one final stack of cash that is fully set ablaze, because that's the only way we could possibly go out. Right? Like if you think about the end of From Theory to Practice, right? It would have to go out with just ashes everywhere. It would have to go out with just smoke in the air. You can see the flames in the distance, and you're like, yep, it is indeed over. And so SBUX, we've got Starbucks up 90 cents, up over $100. And so I wanted to draw our attention to this because there haven't been too many instances where, this short call has been in the money. Right? When it comes to this Starbucks project, we've done this now for 15 months. It's, we started 16 months. We started this guy back in December of 2024. So we're going 15, 16 months now. We've had the same position on, or some iteration of this position on, ever since, because I wanted to mimic what a longer term investor would kind of see in their portfolios when it comes to long stock they want to hold for a really long time, but they want to do active things against it or around it or what have you. And so that's what we've been doing here with Starbucks. And so we haven't had that many examples where the call has gone in the money. We had a couple, especially early on, like, March, April of 2025. We had a short call was kind of significantly in the money. And so there's examples of that way back in the archives if you really want to kind of dig those guys out from underneath the rubble there. But here we've got the 100 call that's also in the money. So it's not in the money by very much, only slightly in the money. But still, this is a very good example, because when you have a covered call line, specifically an investment style covered call, which is kind of what I refer to here, with a position that you're not looking to get out quickly. You kind of want to hold the shares, forever / indefinitely. You don't really have a predetermined exit point like you might with an in at 45 and out at 21 and kind of more of an active type of framework. And so when you have kind of this indefinite timeline, it needs to be treated differently, in my opinion. It needs to be handled very differently. And so one of the things is, when I have a short call on and it goes in the money, what do? Well, this is not going to surprise a single person who has watched my content for any longer than 8 minutes. I don't think you should do anything. If it just slightly goes in the money, even if it goes deep in the money a lot of the times, I wouldn't do anything. So you can see right here, we've got this March 100 call. 10 days to go. It is slightly in the money. I'm not going to do a single thing because I want to simply wait and let the position work for me, because I know that if it goes higher, that's not a bad outcome for me. That's a fine outcome for me. And we'll deal with that when it comes, because remember, with a covered call, you actually want the call to expire in the money. I mean, I guess you could make the case that the optimal outcome is it expires right at the money. So the call goes away, you keep the shares and what have you. But I mean, you're right on the razor's edge of actual possibilities there. And so when we think about it in simpler terms, like in the money or out of the money, I mean, I kind of want the call to be in the money rather than out of the money. If I'm trying to maximize the economic impact of the strategy, then I want the call to be in the money, not out of the money. And this is something that I think confuses a lot of traders, where sometimes they'll get upset that their call went in the money. I'm like, this is actually good for you, right? Don't look at the call by itself. You can't look at the call by itself. It's part of the package deal. Like, you've got the whole trade package, the shares and the call. They go together. I mean, it's peanut butter and oatmeal. Guys, this is tuna fish and applesauce. This is basic stuff. You can't pull them apart. They are indeed one flesh. And so think about them that way here with Starbucks. And so I'm going to sit tight and do nothing. Let's just kind of see what happens over the next couple of days and going into the end of next week when it actually expires. It's going to be good. If this guy stays in the money or goes deeper in the money, we can kind of talk about the different things that we can or could potentially do. And I think it's going to be good. I think it's going to be a good little teachable moment. And so, all right, let's go to CPI though, because it is tomorrow morning. And I mean, I see you guys in the chat. Look at you guys, man. You guys are showing up. Man, look at you guys pumping the algo. The algo doesn't even know what hit it. The algo doesn't even know what hit it. It doesn't even know how to process this show. It's like, man, this must be really high quality programming. We've got to ship this out to more people. And that's how we know we got him. Like, that's how we know we tricked him. But I see Harold's here. JT is here. The Preston is here. Wolf is here. Man, I appreciate you. Thank you, Josh. I see that. Jared Kramer's here. Griffin is here. Man, look at Patrick is in the house, man. Look at you guys. I appreciate it. Santa's here. Man, I appreciate Neo Mage is here again. Look at MP. Appreciate you so much. I'm going to surprise and delight somebody before the even surprise and delight section. MP 5850 says Bulgarian split squats are the worst, and that is correct. If by worst you mean the absolute best, and so 100%. And so, all right, let's go to SPX though. So again, guys, just think about tomorrow. Just think about tomorrow as a philosophy. Just think about tomorrow as a way of life, right? Do you really think they're going to let it go down? Like, do you, after what you've witnessed in the last 36 hours, 48 hours, do you really think they're going to let it go down? And I don't know who they are, but they're in control. Like, they're calling the shots. Do you really think they're going to let this thing go down more than 30 basis points off of all-time highs? There is no way. There is no way. So we got to play this thing to the upside, because if you can't beat them, you just got to join them rank and file. So let's go ahead and let's go to the one-day option. This will be the overnight play. We're going to do this for tomorrow. And I'm going to try to do a better job if I happen to get the move that I want in the morning of potentially managing this guy and not letting it slip out of my grasp, which has happened to me so many times on the show. For those of you that have been watching the show for a while, you know, the OGs of the From Theory to Practice fam, I appreciate you guys so much, man. So very much. You guys have seen it happen a number of times. So I'm going to try to not let that happen again. But you just got to watch the show. Like, you just got to tune in tomorrow to see if it did indeed get me again. But let's go ahead. So I'm thinking, you know, volatility is pretty high now. So, I mean, look at this expected move to the upside on SPX. You've got 68.05. Well, I mean, you've got where it is now, 68.02, I guess, all the way up to 68.70. And so tomorrow you've got plus or minus 70 points in SPX. So plus or minus a 1% move in either direction for SPX. That's a pretty decent looking little move there for SPX. I mean, normally when we've done these type of trades in the past for, you know, CPIs or PVIs or FOMCs or NFPs or whatever, I mean, they're all equally as imaginary. But whenever we've done trades like this for those type of data points, you know, it's usually been what, like 30, 40 points on one side of the market in terms of the expected move. Like the total expected move would be maybe 80 points wide, right? So you're 35, 40 on one side, you're 35, 40 on the other side. You're looking at 70 to 80 points total for the whole copper strip. Now we're looking at like 70 points just on one side of the market. That's a little bit different than what we've kind of been seeing here. So I'm kind of thinking, you know, let's go as wide as we can, but let's be mindful of the simple fact that nobody burns stacks of cash better than we do. Nobody on the network, nobody outside the network. Like, I'm pretty sure we've got that top spot on lockdown. Like, I'm really confident that we are number one there. So let's go ahead and, you know, I'd like to pan the upside of the expected move with my short strike. So that would be 68.70. So if I do like a 50 pointer, let's just look and see. Like, we're just window shopping at this point. Nobody's signing on the dotted line. We're just kind of taking a look and see what they got for us. If I do a 68.20, long call, I sell a 68.70, which I'm going to do two of those here in a second. And then I buy a 69.20. I want it to be symmetric on both sides. I'm not breaking wings. We're not breaking hearts. We're not even breaking toes. We've done all that before in the past, of course. But if we go ahead and if I do a 1x2x1, whoa, look at that. Man, that's pretty expensive. $13, right? So this is a $50, 50-point wide SPX butterfly, which is very wide. The wider, the better on the butterflies. But that's not free. Like, it's gimmies and gotchas, right? It's pros and cons. You're going to have to pay for that additional width, because remember, the wider the butterfly, the greater the profit potential on that butterfly. And so ceteris paribus, all things being equal, I would want a wider butterfly, of course, but that's going to cost you more. Like, you've got to pay for that. And so this is where you kind of have to do the balancing act of figuring out, you know, okay, what is, you know, kind of my maximum cost on this butterfly? And this is where having a, you know, a feel for your position sizing can really come into play. Like, this is where having a feel for, you know, how big you want to be with your defined risk strategies can really be helpful. Generally speaking, we're 1% to 3%. So generally speaking, we're somewhere between, you know, 1% on the low end up to maybe 3% on the high end. And obviously, if you have more capital, you can be even lower than 1%. If you have less capital, sometimes you have to be a bit above 3% with your defined risk strategies. But 1% to 3% is going to be a good level for most traders. For me, for these overnight plays like CPI or FOMC or whatever, even earnings and stuff, I try to use it, keep it at about 2% or less. Now we're working with, we had a decent year last year, so we got about 35,000 in this account. So 1 to 2% would be $350 up to $700. And so I don't really want to be above $7 on this. I mean, this would be like 4% of the account. And so in the event that we get this wrong, which happens quite frequently for us, I don't want to, as the final stack of cash that we light on fire, I'd rather it not be 4% of the account. Like, obviously, everything goes into the apocalypse tomorrow, everything goes to zero, and then it's over anyway. So it's like, well, Jim, why not just go out with a bang and do a little 4%er? That's a fair point. That would be a fair criticism. But still, just in case we make it through some flash sideways and some flashbacks and some flash forwards, like we all did with Lost, let's kind of trim this down just a little bit. So what if we do 40 points wide? What does that look like? So now I do a 68.30. Ooh, okay, that's still a little steep. 68.30, 68.70, 69.10 for my audio only crowd out there. I mean, I haven't really given you guys too much love lately. I keep forgetting about you guys. But you guys are my people, man. You guys are 100% my people. And so if you can't see the screen right now, I am in SPX. I am doing the 1 day cycle, so the March 11th expiration. 68.30, 68.70, 69.10. It's $8.75. So we're still a little bit high for my liking. I'm kind of thinking we're going to have to bring this guy in one more little tick here to maybe a 35 pointer. There it is. Beautiful. 68.35, 68.70, 69.05 for $6.60. And so, yeah, that's not too bad. I think this is going to be the trade. This is going to be what we're going to do for CPI tomorrow, obviously. And again, if you're trying to make money, if you're actually serious about improving your P&L, you guys know you should be on the opposite side of every single one of my trades. And if you don't believe me, if you're brand new to the show, I am not joking. Like, this is not a B- attempt at humor. This is serious. Ask people in the chat. No one is worse than I am at picking direction for overnight moves. And so there you go. I would load up on your puts. Buy whatever puts you want. You're probably going to be totally fine. And so let's go ahead and let's do it. We'll see if we, all right, there you go. We got Phil, $650. Got a little discount on that guy right there. And so there you go. All right, a little CPI action for tomorrow. Playing it to the upside. And boom, there you go. All right, so let's see. Oh, market's selling off again. Okay, so we won't be red. Look at that. Wow, they're really, man, it's almost like high volatility means something, man. It's almost like a VIX at 24, and you get some moves. You get a little intraday action back and forth. And so, all right, Russell's red now. Okay, all right, let's do it. All right, let me see where you guys are at, though. All right, so we already surprised and delighted MP with the Bulgarian split squats situation, which I don't know that there's a better comment that I could have surprised nor delighted than a Bulgarian split squat deal. But let's go to the beginning, man. Where are my beginning people at? Where are you guys at? Man, look at the Preston in the house. What's going on there, the Preston? I appreciate you, my friend. Dr. Jim, you're the king. Nah, definitely not, my friend. More like the court jester. But how many push-ups can you do? Man, I haven't done push-ups in a while. I do 3 sets to failure every day before my workout. I'm up to 270 reps, and my gains are exploding. Try it. Thank you for all that you do. Man, I appreciate you, my friend. So I don't typically do standard push-ups. I do like to do deficit push-ups, though. So what I'll do is I'll put my palms up on, like, you can stack them on plate. You can put them on stacked plates. You can put them on dumbbells if you want to have more of a neutral grip. You could do kettlebells or what have you. And yeah, Josh says girl push-ups. They're kind of like girl push-ups in like a not really much harder type of way because they allow you to go deeper on your actual push-ups. So you're not limited by the floor like you typically are. So you can get a better stretch and you get a little bit more out of it. So I like deficit push-ups, but I haven't done those in my split in a while. And so, but man, 270, that's some serious business. Nice job out of you there, the Preston. JT, what's up, my friend? Or Denu, what's going on? Hello, Dr. Jim. When you have a short put on a future like MES, do you also treat it like long stock? Okay, so I only start treating it like long stock when it's in the money. So when it goes in the money, this is when I start thinking about it like the same way that I would approach long stock, especially a short put in an index. Right now, I don't do this every single time, but like if I'm in a short put and I'm really like taking a bunch of heat and there's like an outlier move or what have you, and it goes pretty deep in the money, that's why I just kind of step back. I just kind of zoom out and I say, all right, let me survey the situation here. And let me just remember that this is literally no different than long stock. Like at the most basic level, this is no different than long stock. Now, when you start weaving in things like theta and vega and the delta being less than 100, it is different than long stock. But I'm just thinking about in the simplest possible terms, the worst case scenario. This is actually a better way to put it. The worst case scenario is I have 100 shares of whatever the underlying stock is. Now, MES, those contracts are actually for 50 shares. And so that's going to be a little bit different than like SPY. But it's basically long stock, worst case scenario. And so that allows me to make my decisions objectively. And it allows me to think through what I want to do next very, very, kind of evenly to where I can say, all right, like, what do I want to do? Do I want to leave the position on and do nothing? Do I want to sell calls against it? Do I want to just take my lumps and move on? Like I certainly do that from time to time too. I mean, you guys have seen plenty of that. To me, you saw it in Chipotle. You saw it in Best Buy. Remember Best Buy? Are they still around? Man, I think they are. They're still out there doing it. That's pretty amazing. Oracle. Don't we? Wait, we have Oracle earnings tonight, don't we? Hold on. Hold everything. I'll get back to y'all. Oracle's tonight, right? Somebody brought it up in the chat yesterday. I forgot who it was. My apologies for being off my Blueberry game, but look at Oracle today. Oracle is today. Okay, so listen. Guys, Oracle, heavy rank of 83. Man, that's crazy stuff. I think we got to play Oracle to the downside. Like, we got to do it. Like the data center stuff. And I think that Oracle is just getting a little too big for its britches. And so let's go ahead and do, what if I do a 15-point wide butterfly? So we'll have a butterfly to the upside, butterfly to the downside. I mean, again, like what could possibly go wrong? Man, look at that. Wow, that's a good looking trade if I've ever seen one before myself. So 150, 135, 120. So a 15-point wide butterfly on a $150 stock. That's a pretty wide butterfly for only $3.78. And so thank you for the question or the comment that worked on you, because it did trigger kind of a trip down memory lane where you guys brought up Oracle yesterday, but I wanted to wait until today, and now today is today, so we're gonna do it. So 379. Let's see if we can get filled on an Oracle earnings play for tonight using the front week. Let's try 382. All right, so we can't get filled in Oracle. Oracle's it's giving us some fits a little bit. Let's see if we can do 384. I bet we got to get filled in here, I would think, right? All right, so we got filled at 384. So there's your Oracle earnings play. So we're doing the market to the upside. We're doing Oracle to the downside. I mean, are we really going to lose on both of these guys? I'm going to say it's about an 80% pop that both of these guys go down in flames. But there's Daniel. Harold's in the house. What's going on there, Harold? Harold, Dr. J, to continue our discussion on vol futures. Yeah, we talked about this yesterday. Harold says, the recent downward movements have led us to be in contango. No, right now we're in backwardation. I've observed the upward movements pushing us towards backwardation since it's an inverse relationship. Could you explain this with a strange phenomenon? So we talked about this yesterday, right? Like normally the volatility curve is going to be in contango. It's not unusual that it's in contango. Like that's the normal setup between the volatility now and the volatility into the future. But right now, like if I bring up the VIX, the VIX is 24, and then /VX is less than that, right? Yeah. So /VX is 23.5, and the VIX is 24. So that simply means that current volatility is higher than future volatility. That is abnormal. That is not the default setting. The default setting for the market, volatility-wise, normally. Like normally, you're going to see the reverse. And so backwardation, that's what we have now. This is not a volatility scenario that the market likes to live in long term. Like it's unusual to be in this. That doesn't mean it never happens. It can certainly happen, and it can persist for a couple of days, a couple of weeks, or what have you. But it's not going to be something that's going to persist for quarters and quarters on end, or even months and months on end. Like the market is going to right itself from a contango relationship with spot volatility and futures volatility. And so I would expect the spot volatility to begin to drop significantly relative to the future volatility, so that contango relationship is indeed restored. And so hopefully that helps a little bit. I don't have a strange relationship, strange phenomenon to use other than maybe the contango and backwardation itself. And so N1C is in the house. What's up there, N1C? Wolf is here. Man, look at Brett Green in the house. I appreciate you, my friend. Sam L, what's up? Time to burn some stacks of cash. Man, we are doing it. Are we finally getting our nemesis Oracle, or is the fade doc strategy going to trick us again? No, you guys need to 100% be on the opposite side of my trades. So you used to be bullish Oracle, bearish the market. So you've got yourself a nice little pairs trade baked in there. Like you've got yourself a little yin and a yang deal on both sides of the market. So you're welcome there, Sam L, and everybody else. And so, Brett Green, what's going on? Neo Mage, what's up? U.S. asks Israel to halt strikes on Iran's energy. Did that just happen? I would have thought that would be a positive thing, but apparently the market, man, going back to unst. How about that? Crazy stuff. Samuel, dear Algo, chest day or options day first? Is today Tuesday? I don't think Tuesday is allowed to be chest day. Monday is international chest day. I guess if you skip Monday, you could do chest on Tuesday. But chess is normally like a Monday or a Friday deal, not typically a Tuesday deal. Tuesday is going to be back or possibly legs. Asking because the Doc B minus jokes clearly burn more calories than I do at the gym. Yes, we have to burn a lot of calories for these jokes. They may be B minus, but we are giving you guys max effort, absolute max brain power on these mediocre attempts at humor. And so I appreciate you, my friend. N1C, what's going on there, N1C? Edward Lond, what's going on there, Edward Lond? Toffee Tozy in the house. What's up there, Toffee Tozy? Brett Green says, Dr. J, thoughts on today's CLES correlation, please? Yeah, I don't have too many thoughts other than what I typically say when it comes to correlations. I put very little stock in the correlations between non-equity instruments and equity instruments. From the standpoint of, I don't think that you can rely on them to maintain whatever current relationship they've had previously. And by previously, I mean yesterday, 3 months ago, a year ago, historically. I don't know that you can, rely on them to maintain those correlations when you need them to maintain those correlations. Like it's too often that we see, everything just move together to the downside. And I mean everything, right? Equities go down, metals go down, bonds go down, energy goes down. Now, obviously, Sunday night was kind of that scenario other than energy going up, right? But you can still see certain situations where cash becomes the true king. Like cash is the only thing people want to kind of put their money, to work for them inside of. And so you have everything going down together. So the correlations didn't save you then. And there's too many times when they just don't save you at all. And so I personally don't love using like numeric correlations to like say, all right, oil is, has a correlation coefficient of, 0.2 with the equities right now. And so I'm going to situate my portfolio such that, that puts me in a position where, my beta weighted deltas are X in these two different assets or what have you. I think that that's too granular than you need to be simply because there is no guarantee that that's going to maintain that relationship when you need it to maintain that relationship. Instead, I prefer to strategically diversify. Hey, shout out to tonight's calculated risk. That's actually coming out tonight. Man, I shot one today. What was today's? I forgot. I totally forgot. What was it? Oh man, today. Oh man. So today's, again, you'll know when you see the black polo. I'm always one day ahead or maybe one day behind, depending on how you want to look at it. But today is the fundamental gimme gotcha relationship in the options market. So I'm curious. Let me know in the chat because I want to know and the algo is dying to know. When you think about, the gimme gotcha relationships are all over the place. They're everywhere in the market. What do you think is the fundamental gimme gotcha relationship in the market as an options trader? Put it in the chat box. I really want to know. Even if I don't look at it during the show, I will scan it after the show. I'm very curious to hear what you guys think that is. That is what the video I shot today is on, and it will air tomorrow night. Tonight is about strategic diversification. And so, Brett, when I'm thinking about correlations or I'm thinking about wanting exposure across different asset classes, I don't get as granular as looking at the correlation coefficients and measuring it that way. Instead, I just think, all right, having some equity exposure makes some sense. Having some non-equity exposure makes some sense. And inside of non-equity exposure, maybe I want some metals exposure. Maybe I want some equity or energy exposure, I should say. Maybe I want some fixed income exposure with bonds and TLT or what have you. And I'm going to do that through kind of a smattering of different strategies. Like some are going to be bullish, some are going to be bearish, some are going to be defined risk, some are going to be undefined risk. And that's the way that I generally approach kind of correlations, in general, if you will. And so hopefully that helps you a little bit. But let's see, where were we at? See. Oh, there we go. Brett Green, Jared Kramer. What's going on there, Jared Kramer? Dr. J, we broke the market today. Give us some Oracle plays to help the P&L bros, man. I got you. Oracle to the downside, so you need to load up on your bullish plays. You are welcome. Griffin Jones in the house. Let's see. Oh, did we take out another Supreme Leader? That's crazy. I can't keep up, man. I really, truly can't. There's too many moving parts, man. I can't keep up. N1C is in the house. Wow, I nearly bought more VIX 23 earlier too, and I wish I did. It's always clear in the rearview mirror, right? Again, we've talked about this many times before too in the past. The rearview mirror is batting 400. Roman Anthony 415. Like it's right there. It's in the conversation. Like it's gonna get a couple All-Star votes. I mean, Roman's gonna get the nod when it's all said and done, but it's in the conversation. And so let's see. Neo Mage in the house. Griffin Jones for the algo. I appreciate you, my friend. Harold Montero. This is pretty much our market measure this week on volatility. There you go. Hopefully it did help there, Harold. I appreciate you. And then Harold goes on to say, how dare you put the Red Sox, you mean our Red Sox, over the Yankees this year? Catch your boy at opening day. Man, good luck to you, my friend. Good luck to you. By that, I mean, I hope your whole team gets injured on the first day. And so finance account, what's going on there? Finance account. Yep. We did an Oracle earnings play. You're the one that asked me about that yesterday, I think. And so there you go, my friend. We're going to do a little downside butterfly and keep your fingers crossed, toes crossed. And we'll just kind of see what's what. Seth Ellis in the house. What's up there, Seth Ellis? Hey, Dr. Jim, what do you think about a 6D? So I'm assuming you mean 6DTE SPY put butterfly, 645, 660, 675 for a cheap hedge. $1.45. Isn't this stupid? Well, now it's about $1.80. No, it's not. People like to use butterflies as hedges all the time. So if I go to SPY, this is a very common strategy. So if I go to SPY, 6 days out, so that's going to be right there. I think, isn't that right before the Fed meeting? I think it is. Yeah, I mean 660. So you're buying a 660, you're selling a 645. And then you're buying oh wait, hold on. Okay. I read it wrong. Let me start again. You're buying a 675. That makes a little bit more sense. You're selling a 660, which is a little bit below the expected move, and then you're buying some 645s. Yeah, this is probably going to be a couple bucks now, right? Yeah, $1.84, $1.85. No, I think it's fine. It's fine because you cashed your butterfly net down below where the market is. And then if there is some downside movement into your net, then you're in a situation where, it can definitely soften the blow on what might be an otherwise long delta portfolio. And so I think that's totally fine. Like, definitely. And, when it comes to using butterflies as hedges, I think it can be a really effective strategy. Just understand that, it's a hedge and it is a hedge, but it's a very special type of hedge from the standpoint of, you're not going to have like just unfiltered access to the downside, right? Like if the market goes down and keeps going down, then you're going to lose on this butterfly too. Like this guy's going out with the rest of them. Kind of like, the correlation equals one, everything goes down together. Like this butterfly is going to help you in like a modest sell-off situation, but it's not going to give you like that hell in a handbasket type of hedge. Like it's just going to give you like, all right, one Trump truth type of hedge. Like one Trump truth that gets walked back 90 minutes later. That's the type of hedge that you have on. You don't have on like an oil to 120 type of hedge. And so just understand what you're signing up for. And then, yeah, it can certainly be an effective strategy. Definitely not. It's not a stupid strategy at all. It's just, you just got to understand the gimmies and the gotchas, right? Like kind of understand both sides of the equation. And so hopefully that helps a little bit. Let's see. I see Patrick is in the house. I see that your Schwartz is nearly as big as my own Mr. Algo. Man, I appreciate you. I don't know what that means, but I appreciate you. I don't know what a lot of the references you guys have, but you guys are way ahead of me, man, on some of these references. I really got to catch up. But Senna 86 in the house. What's up there, Senna 86? The Preston is back. Appreciate you. Neo Mage. Hey, Dr. Jim, for the algo. Thanks for all you do. I appreciate you. Thanks, man. I appreciate you. Appreciate me. Very, very much. The Preston, smash the like button for the good doctor. Yes, please do that. And remember, if you want to go next level and play a little 4D chess, if you're already subscribed, unsubscribe and then resubscribe during my show. Because then your boy gets, I get credit for that. I mean, I'm not sure that I actually do, but it'll make me feel good. And so N1C is in the house. Still don't have the guts to sell oil puts now. I don't blame you, man. I'm going to wait for next week. I don't blame you at all. Look at Jared Kramer for the algo. Nicely done. The Preston, what is up? Away from the numbers, I need to sort these daylight savings clocks out. I nearly missed Dr. J. Yeah, aren't you? You're abroad, right? You're in the UK, so I don't know what y'all are doing over there. Maybe you guys finally got it figured out where you're not even changing the clocks at all. And that's the way to do it. Like, isn't there like those there's like a couple counties in Arizona where they don't change their clocks. I have no idea how that even works. Like, that doesn't even make any sense. Like, how can they not change ever and always be lined up with us? Like, it reminds me of that Seinfeld episode where Kramer, like, it was daylight savings or, daylight, spendings or whatever it was, whichever one it was. And he was just like, in the fall, yeah, whatever. He was just like, I'm not going to change. Like, I'm just not doing it. And so it's so funny. I mean, Seinfeld is number one, man. It was so funny because he was always late by like an hour. He was always off by like an hour for like the next week or two. And then he finally acquiesced and just kind of gave in to everybody else. But pretty funny stuff, in my opinion. So Steve Aguilera is in the house. What's up there, Steve Aguilera? Brett Green is back. Griffin Jones, man, look at you guys. A. Wills is here. The Preston, when is he going to take those sweet SPUX profits? Never. Again, I'm holding it like a long-term investor would. And so that was the intention from the very beginning, and I'm going to maintain that intention for quite some time. It's a nice thing because it's so different from all the other things that we typically do, right? And so I think it's been good. But man, I see A. Wills is here. Look at MP with the Bulgarian split squats. I got back to the surprise and delight. Man, I see that. Rodrigo is here. Emmett Morrison is here. James Bond is here. Ash Finn is in the house. Man, Mount Go Rail is here. Man, Jay's 2 sats even showed up. Man, look at you guys. I appreciate you guys. Adam Armfield is here, but I got to roll. I got to go and get you guys over to Tim. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay optimistic. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy.
Get into the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Hey everybody, Tim Knight here. Well, I hope we don't go through any surprise today like we did yesterday. I did the show yesterday, and like in the midst of doing so, just a couple of minutes in, things started going kind of haywire with the charts. Everything started going up. I had no idea why, and I just sort of like use all my willpower to avoid saying wait right there and find out what was going on. I thought it was some big news. Like the Iranian foreign ministry had surrendered unconditionally or something like that. It was just President Adipose tissue saying, "Oh, we've won" or something. It was just some reporter, but the market bought it, hook, line, and sinker. They loved it, and up the market went, and it kept going up today. Incredibly, everything's green. ES, NQ, RTY, YM, everything's green, except for crude oil, which is down a double-digit %. So it's been a little interesting today. Nothing like yesterday, which was mayhem. We were higher earlier today. Then the news hit about, the Strait of Hormuz is being mined now. And so that weakened equities a little, strengthened oil a little. But the bigger picture, which I hope I emphasized yesterday, is that I think we're in a bear market now. It's a lot easier to sort of tease out resistance and times to get back in and so forth. In my estimation, there were definitely times today that were golden opportunities to get back in on the short side. I'm still, I'm not light, I'm not heavy, I'm kind of in the medium zone right now in terms of aggressiveness. And I've got some charts together for you today that we can thumb through and kind of catch up with each other. So let's just go right to those. Here's the diamond. I really like this chart. And in terms of its own resistance, something like there or so. The breakdown began here. Then we had a nice gap right down there, that little purple line. And there's no gap since then to point to, but this line is roughly the zone that constitutes most of the overhead supply. And it goes without saying that we were higher today. We've got kind of a spinning top going on right here with respect to that candle. It's a nice breakdown. It doesn't guarantee, no intraday strength like we saw earlier today. But my view is that as we stand here right now, the bears are in a better position, maybe even a lot better, than the bulls are. And this is where politics and the news and your interpretation of those things really informs investment decisions. And of course, charts. Because from a charting perspective, there have been some very important failures. And it's just a lot easier. It is a lot easier now to determine sensible entry and exit points as opposed to when we were just in this persistent uptrend. The IWM, the small caps, has a cool little shooting star going on right now, this fella, today. We rallied to this mass of overhead supply here, and we are near the lows of the day. Although it's still up, everything's up, but not terribly. I mean, as I stand here now, the ES, the NQ, the RTY, the YM, they're all up about 0.2, 0.3%, which isn't terrible considering all the risk going on right now. But I think it's just the last vapors of the bounce we saw yesterday. But that looks pretty bearishly situated as well. I would also hasten to add, at the end of the week, Friday the 13th. So maybe we'll get some superstition going in there as well. Overseas, EEM, this is getting very close to what could be a very alluring place to get bearish on it. That gap is looming, it is beckoning, and this is the highest we've been. Today is the highest we've been since that break took place in the emerging markets. And as far as EFA goes, this might be done already. This is a very well-formed pattern. Check out that wedge, and big gap down, and then another gap down, broken trend line, and today's high got pretty close to that broken trend line. So that's a very, very good looking setup right there. I say again, and it's not often you can say this, the bears are in a much better position than the bulls are right now. The bulls, I suppose, are counting on some sea change. Like Iran waves the white flag and says, anything you say, done, we'll do. But this is where kind of news and history comes in. It's like, is that going to happen? Do you think that's going to happen? I don't. Not yet, at least. I think they're, proud and ancient people aren't going to, be bombarded for 10 days and then decide, wow, let him have the country and he can pick out our leader. Yeah, I don't think so. So, and there's so many uncertainties right now. At any moment, your eye might catch, like, why is the market plunging right now? And you just never know where the next surprise is going to come from, just like in the opposite direction today. Didn't know where that surprise was going to come from in terms of like some rando interview and some cheerful words was all it took to create a multi-trillion-dollar reversal. I mean, at this very moment, we're weakening again a little bit. So I'm trying to keep an eye on the bigger picture here. That's why my options are 3 months, 4 months, 5 months, a year out, with occasional exceptions, like the crazy thing I did yesterday. I like to play the longer game as opposed to like what's going to happen in the next 10 minutes. Specific countries are kind of telling the same story with respect to they've broken down and they're trying to crawl their way back up toward the price gaps, and I don't think they'll get past them. There's EWY, which is South Korea. There's EWZ, which is Brazil. And you get the idea. I'm not in any of these myself. The only ETF positions I have is the big spider short, which I got into today. And not to contradict what I said earlier about long-dated options, I did get some spider $685 puts that expire this Friday the 13th. And mercifully, I got them just before the whole mining the Straits of Hormuz news came out. So those are looking good so far. Yeah, but in terms of ETFs, really just the spider. Got some SMH puts. And I don't know what else. This many positions, it gets easy to forget. Gold, by way of GLD, is up 1.2%. But here again, we're getting very close to that gap. That could be an important point of resistance. I'm not doing anything with precious metals for weeks now, but I like to look at it. And I would say this is looking hazardous as a long position. And then GDX, the miners, are also up about the same amount percentage-wise. And once again, we've got a price gap there. And price gaps will get filled. I mean, look what happened here. Just went right past it, kind of rolled its eyes and moved to lifetime highs. But it's still worth respecting while it's unfilled. Crude oil, of course, is unchecked pandemonium. Before this all took place, we were hanging out in the mid-60s. Between Sunday and Monday, we got up to about 120. And at the moment, we're in the upper 80s. But this has been wildly volatile. But the cool thing about it from a trading perspective is what a clean break that was. I mean, the moment we crept past, I guess, that trend line, it was off to the races, just an explosive move higher. So if, even if we're on right the second said, we surrender, take it all, firm support. I think oil is not going to see anything below the upper 60s, for a long, long time, no matter what happens next. And XOP naturally has been tagging along somewhat with that activity. XOP's down 1.35% today. I shorted it yesterday early on up here. It's kind of a boring chart. I went ahead and covered into profits on that. There's just so many better fish to fry. Speaking of, here's various and sundry short positions that I wanted to highlight today. Just thumb through them here. You've seen most of these, but I just like to reemphasize them. Bath & Body Works, this is BBWI. We're down over 4% today on this one. DoorDash, DASH. This one's down about 3 1/3%, breaking below that horizontal again. Then we've got DraftKings, DKNG, which is down just a touch today, just 0.5%, but it's crossed below that horizontal again, and this is a tremendous top right here. Absolutely gargantuan. Palantir, which has burnished its good reputation as a technological tool during this war, is weakening. Shall we get rid of this, please? Okay. The rectangle of mystery. Get out of there. Okay, but yeah, there's Palantir. Nice top of that one. Wix, W-I-X, which I believe is all about making websites. And let's just bang on a rectangle real quick on that sucker, like so. And this, of course, is one of the many victims of the whole AI is going to wipe out software companies thing that's been going on well before this war kicked in. But that's falling nicely, down over 2%. Our old friend Axon, the gift that keeps on giving, down again, almost 5%. This has really been doing good things lately. CRM, another software victim, is a little bit too big to me, but it has been falling in sympathy with the software sector in general. So this is Salesforce CRM, and then INFY, Infosys, which is down a bit more than 2.5%. INTU, I just got back into this one today because last night I was going through all my charts, which is how I spend my evenings, and I was like, whoa, that looks good. So I got into it today, but it had already fallen a chunk. But all the same, it looks like a good long-term place, down over $21 now, almost 5%. Now, ServiceNow, you can see a lot of these are kind of software-oriented, down about 4.5%. And that's not the reason I picked them. I picked them based on the chart, but you know, it's this sort of bottoms-up approach may yield a lot of the symbols in the same sector because they're universally weak. Let's do that there as well. So now I think you can see with greater clarity the magnitude of that breakdown and the clarity. Omnicom, this is much thinner. OMC, much more thinly traded, but it's a wonderful long-term pattern. This is down about 3.2%. And one last one, a real winner today. We've seen this one a bunch of times. Centene, CNC. This is in the healthcare biz, and they're down almost 15%. I've got puts on this bad boy, and so that's moving the right way. One other item I wanted to point out, I don't know if I mentioned it yesterday, but financials, XLF, the financials ETF, very clean gap on this one. You can see there, like so. This is sort of muddying the waters, that rectangle is, but you can see that gap. That's where that line is right there. So that's a nice breakdown as well. And I've got individual shorts in that zone, JP Morgan and Bank of America, things like that. The big earnings event tonight, although I don't think it's going to do much of anything, but it's the big one is Oracle, ORCL. Oracle has already lost well more than half of its value, which is sort of astonishing. We all remember this day here, this tremendous burst to lifetime highs, which was during the earnings announcement of crummy earnings. And yet, as with yesterday's phone call, happy words made everybody excited. And so in that case, it's like, gee willikers, we sure are going to sell a lot of hyperscaling stuff in the next few years. And everyone went crazy over it. That was the end. And you know, Oracle, which is a huge company, has lost, I don't know, almost 60% of its value since then, hundreds and hundreds of billions of dollars. So it's been smashed to pieces already. So I'm not sure. I mean, unless there's just some eye-popping news tonight, I'm not sure what's, you know, it's going to move very much. It'd be cool if it did, but no position, clearly. Just to wrap it up, bottom of the hour, here's the spider. That is a honey at the top, I believe. And that's why I'm short the spiders today. That's why I bought some of those Friday the 13th 685 puts. And we'll see how that all shakes out. But I think the bears are in control, both of us. And this is a really cool market to trade and very chart friendly, as I keep saying. So that is it. See you tomorrow. And thank you as always for swinging by. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to Liz and Jenny Last Call. And the chat is also saying anytime we do Last Call, the market sells off, Jenny, and I kind of believe it.
Hey, during our show today, I said, during our show from 10 to 11, I said the market was trying to rally, but it never really had a great rally. Like it couldn't really, the rally didn't get any steam behind it. So I'm not surprised that we're just unchanged, slightly down. It just didn't seem like we could hold a rally today.
It's true. We're down. We're down. I mean, I was about to give you props because about an hour ago we were completely unched.
I said unched, but we're down. Here we are. We've got to look at the platform. What do you have pulled up?
Wait, are we in the platform already? I was going to say, let's do some administrative stuff first. Josh, can you please hit us with the art card? These boys are looking for trades for tomorrow. It is What's Your Assumption Wednesday. Please, 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 tastylive.com/assumptions. Send it in. Stump the boys.
Yeah, send it in, and they will. They're great. Nikki's creative. They'll come up with trades based on your assumptions. So don't forget, send them some trades. And we also have we're extending our promotion, our refer a friend promotion. So that's still going. You want to know?
You get 100, and you get 100, and you get 100 if any of your friends join.
If any of you are familiar with the old Oprah show, when everyone got it, I always wanted to go on the Oprah show, not as a guest. Just in the audience. Never ever. Did you?
No, I've never been to the Oprah show. No. But my husband got to go to the Katie Couric show. I don't know if that counts.
I mean, I'll accept the Katie Couric show because that sounds like fun, but it doesn't count for the Oprah show.
I know. We never got any cars. I wanted when it was like Oprah's favorite things. But nonetheless, this is a show about trading, Jenny. Hey. And everybody is saying God bless the Irish because of your shirt.
Okay, can I get a full shot? Can we get the full screen again? I have to back up and say thank you to my dear friend Liz, who brought me this sweater today. Today, I saw her at the train station. She gave me this sweater, put it on right away.
I like it. I always thought we were going to match on St. Patrick's Day, but when she got out of the car, she had already changed into it.
Liz is like, there's no one in this train parking lot. came out of the car with the sweater on.
I just gave that to you 30 seconds ago.
I will wear it again on St. Patrick's Day. I might wear it every day from now until
I've had one for a week and I've worn it so many times already because we're two of the luckiest people we've ever met. So when I had it, if you like it once, you love it twice. So I got 2 lucky sweatshirts, one for her, one for me.
Love it. Thank you very much. We do joke. We are pretty lucky. I don't even like to get in raffles because I usually win them and it just gets embarrassing.
There she is again. I know. I get it.
There she goes, Jenny Andrews.
Okay. This last call show goes by fast because this is a timed event versus our show where we have a full hour. We've got a little bit to do, Jenny.
It's timed. It's a half an hour segment. Our show used to be half an hour. Can you guess what year our show changed from a half an hour to an hour?
It was about 1 year into it, wasn't it?
Oh, I don't know.
We started in 11. I would say we changed in 12.
I thought we went longer for a half an hour before they made us an hour.
I don't know.
Well,
no, it was an hour, and then the other big switch was when they moved us earlier, and that was
okay. So anyway, back into the platform. Let's see what's going on. Where are the spoos?
Spoos down to 16. Yep, they can't get out of their own way right now.
But perfect for any of those 0 DTE traders today. Perfect day.
If you held it this long.
Do you have XYZ at the? Oh yeah, you do. I flipped it. I was like XYZ. There it is. We talked about taking that off.
We did. So I just, I was going to take a look at where VIX is too, but hold on one second. I just want to pull something up. Okay. XYZ. We talked about taking this off. It is square or block or whatever you want to call it. And we got 10% in about 11 days. And
if you take a look at the chart, block's had a little bit of a run. I don't mind taking this off and on a pullback, getting back into something in square.
And Jenny, let's talk about a little bit of the logistics behind this. This trade has 283 days.
I know. I'm
going to take
some of these long-term trades we put on for earnings, thinking if they pop up, we'll get out right away, or if there's down, it'll give us more room, and or we look at the return on capital for the year. But for us in this account, where we're trading, sometimes 2 shows a day, we get in and out pretty quickly.
Yes, we do. Okay, so then
Did you put on did you change since I saw you at the trading floor?
Well, I had my trading jacket on, right?
Okay.
And then it came upstairs and I put on a blazer because it was right on the mic. It was right on my chair. So it looks like a trading coat, but it's a blazer.
All right. What else do we have?
It's a blazer.
I know Oracle has earnings. And we want to talk. I want you to be completely shocked, and amazed when I show you something.
I love a shock and awe. Let's take a look real quick. I'm just going to pop into Bob's list. I want to take a look at Oracle and AV, and then the shock and awe. Deal?
A deal.
Okay. So let's go ORCL, which I actually thought had earnings yesterday and looked at it. $149 product. Let's take a look at its history. It has fallen from grace, which makes me kind of happy.
Makes me kind of think of just selling puts or $14 expected move. That's the 10% expected move. That's pretty big. If you go $14 down.
So for the expected move for the cycle, you get $2-ish, and you're putting up $1,500. It's not bad.
Let's just get $1. Let's just get a quick $100.
I like your enthusiasm. So if you go down to the 130, which is a standard deviation away, it's the 130 strike. We're selling the put for $1.13. It's putting up $1,300. It's not bad.
It's an overnight play. If things go horribly awry and Oracle is blown through the 130, we'll change this put into something else.
130 is right about there. I'm fine with that.
Yeah, let's do it. Ship it.
Okay, so that's our earnings trade. We're getting $1 just outside the standard deviation at the 130 line. And what's interesting, Jenny, is we just took off our XYZ that gave us back this almost exact amount.
It's funny because XYZ was like a December or January trade. This trade's going to be gone this week.
This is instant gratification. It's tight markets here. If you take a look at this, I'm going to penny it down until we get filled.
Sure. Yeah. You're going to get filled because you're hitting the bid.
Yeah. Because It's a penny wide. Somebody was chasing us. Did you see that? I would put in a 113. They'd put in a 112. I put in a 110. They put in.
I did not see that. Okay. So I'm pushing these out. Out to the follow page, only because this is last call. And by the time the show is over, the bell's ringing. So.
That's true. Okay, so we have done two. We got out of XYZ and we got into Oracle. Before my shock and awe, I want to look at AV while you're pushing that out. I don't know what this is. I'm going to type it actually very slow. AV. It is
AeroVironment. Kind of like environment, but AeroVironment.
I don't know what's going on, but I want in.
I don't know what it is. We can do the 2/17 calendar.
I know we totally can. Okay, but that would mean that we think it's going down. Let's take a look.
It doesn't matter. It's pretty neutral.
That's pretty neutral.
If it's under $150.
Okay, so the one we're selling is $10.
Yeah.
The one we're buying is $13. Nope.
No, you're out. You're out, Aero Environment.
So I do want to keep an eye on this. You've got a $23 expected move. Mm-hmm. I'm not going to press the button on this, but I just want to go through the exercise. I'm going to go one standard deviation down to the 190 put, and it's holding up $6,670. You're gone, Arrow.
I'm curious. Okay, we've got 1.26 million shares of AV traded. Go to Oracle. How many shares of Oracle traded today?
I mean, Arrow, you're dead to me. 27 million.
29 million. So you're looking at 1 million versus 29 million. I think that when something is not that liquid or there's not that many players in the game, it could possibly have a bigger move because there are less players in the game, right?
Yeah, illiquidity is not your friend. You know what's interesting? It's the 130 put. It was $1,300. It was it was all right there. And you looked at Arrow, and granted, it's in the 200s, but it was holding up $6,000.
I thought you were going to say the 130 put $1,300, and we're almost at Friday the 13th. I thought you were going somewhere with the 13.
It is Friday the 13th. It is 13. But take a look at this. 190. Now, granted, I know it's 130 versus 190. It's $6,700.
Boo. All right. Are you ready for a shock and awe?
I'm ready.
Now, I only say shock and awe because if you flip the symbols, we go top down.
Got it?
All right. CL, we have a CL position. This is just a broken wing butterfly. That's it. Defined risk, broken wing butterfly. We have been, every recent position we've been in, it has been in CL, the big dog, and we were only looking at defined risk trades. Now, when I went to MCL, because I define my risk in CL, I don't have to define my risk in MCL. And when I went to MCL and looked at these selling some naked options in there, my mind was blown at the premium. I even go to the top. My mind was blown at the premium in MCL.
This is mind blowing. So take a look at this. Here's your 99. I can go to the 100.
I mean, why don't you get $5 and $5? Get $1,000.
Wait, I'm just saying. Look at the 100 in MCL.
Well, we were just 109 yesterday, but this is crazy. Look.
Yeah, you can go.
I mean, we don't even need $5. You want to get $250 and $250.
Now, whoa.
Go, just keep going. You could just keep. There we go. How about the 140?
Wait, I want to see how many standard deviations is this. You count the dotted lines, okay? Okay, so
I mean, isn't it nuts?
This is crazy. Wait, where are we? 86. Okay, so we're at here. Now I'm going to the top. Let me know we see. Hold, please. We're not
we're not there.
One standard deviation here is a 27 delta. 2 standard deviations is here.
No, but 1 standard deviation should be 16 delta. I think this is all thrown off because there's so much call skew, and a 16 delta should be this 1 standard deviation, and then I don't know what. I don't know. I don't trust these God bless you. I'm not trusting these dotted lines.
Okay. But what if we got, only because I'm having fun right here. Let's go to the 180.
But this is a 37. This is a 37-day trade.
I know. That's why I'm going so far out. 180. I want to see where I can sell it.
If oil's 180, we've got bigger problems in the world than to worry about our MCL strangle.
186. I'm going to see if I can get 60.
Go to 65.
Look at you getting crazy.
I kind of wanted to get.
I don't want 65. No, I'll bring it in. I just want to see.
Yeah, that's wide. 65 is wide.
I'll bring it in. But look at this. You can get $227 credit by putting up $472 for something that is $117 wide in MCL.
The 62 180.
That's what I'm saying. So, 80 minus 62, you're over 100 points wide, 117, 100 and something.
I mean, that's crazy, isn't it? I couldn't believe it because I've just been doing define risk, and CL. So,
okay, can we have a little fun with this? Can we try to go closer? I want to see.
You're getting paid so much for the calls. You're not getting paid so much for the puts. I mean, I'm not saying, well, closer is just 10 days. Closer is 10 days. You're going to be really tight.
I mean, it's not that tight, Jenny. You can go to in 10 days. You can go to the one. We were just there.
Yeah, we were just there.
But you're right. This is call skew because take a look at this. You're within the expected move if you want to get $2. Okay.
I know, but we know in the 60 level we're okay. Like if we have to get long oil at 60 something, I'm okay with that. It's the 120 call that's a little bit scarier.
This is amazing. Okay, so let's go.
Now again, when we say like, "Woo, this is so cool. This is amazing." It's not free money. It's not. There's risk in all trades, and it's not a trade recommendation. But we trade MCL quite often, and it's interesting to see these prices.
I'm going 62. I'm trying to pick round numbers. And you can see here with the open interest, the round numbers will give you a little bit more volume as well. So I'm going 62 for 116.
But don't we want more money? Like if we're going to take the risk in oil, don't we want more money?
I mean, for 37 days, I don't know.
Yeah, like sell the 70. What's the 70 going to give you?
I want to stay, I don't want to be within this brown bar because I think it could come crashing down.
Just look, I just want to look. Like if we sell the 70, I'm curious because if we got our break even, let's say we want our break even around 65. So if we sell the 70, that's giving us $3. And if we get $3 on a call or $2 on a call, then that's going to give us a 65 break even.
There's your 65 break even that's still within the brown bar. I need a break even beneath 63. So let's.
No, we don't. Come on, Liz.
I want to break even. I'm bearish oil.
Well, yeah, from 86, but if we have to get long at 64, fine. There'll be enough premium in there that we can offset it.
Okay, so up top,
just go, get like let's get $5. So we get $2 on top. That'll give us a lot of room.
This is definitely scary.
And if we're bearish oil, great. If oil comes down and the put's getting tested, we've got that butterfly that might come in.
But true. It's in the same cycle, isn't it? In the other one, it's in the same cycle, meaning the April 37 days in regular CL.
Yeah.
Look at this. 571. You know what? I'm just going to ship it. I'm not even going to overthink it. Filled. So let's look at what we have, right? So
and how much buying power did that use?
$437.
I know. Crazy.
I mean, I think it's a little bit more than that. It was probably like 600 because it was a little bit more, but it was almost 1 for 1.
And what was the actual implied volatility of the April cycle?
The implied volatility of the April cycle is 106% implied volatility.
Meaning we're 106, meaning that it's going to double or go to zero. That's like that's what that volatility is saying. Meaning in like a 12-month period is going to be double or zero.
Double or nothing. And look at this. It's ducks. 2222 is the expected move for the cycle.
Yeah. And I'm going to get that pushed out. And I'm going to give you a certified badass card when I see you tomorrow.
Thank you. I appreciate that. And to be honest with you, I'm not fearful of either of these. I do like the premium, and MCL is something that we can actually tolerate if one side or the other gets tested.
Yeah, we're not a stranger to the MCL, the mini, the micro, we have had positions in there that have hurt us before. I think I remember it was like the 65 puts to the downside at one point that at some point we cried uncle and took them off for a loss, which we're not afraid to take things off for a loss if we're getting really uncomfortable about it.
So look at this. 65 is right here, and that's where our break even is. And that's where this move went parabolic from.
Yeah. Now, if the calls get tested, I'm not rolling those puts up.
I'm not rolling anything. I don't know that I'm rolling anything because I don't. if the calls get tested, I'm not rolling the puts up. But if the puts get tested, I'm not rolling the calls down unless it all's right with the world.
You're right. We put this on and it's like hold for 30 something days.
You know what I'm going to do, Jenny? I'm going to put a 50% GTC in. Okay? Just in case.
108 rank. 108 rank.
108 rank. SPOOs are down 20. Wow. I want to take a look at the things that we put on today.
What the heck do we have in six? What's the top? I can't even remember. Like, what did we do?
Oh no, I'm pretty sure this was me and TP. So there's broken wing butterfly to the top side, broken wing butterfly to the downside. We're still smack dab in the middle. That's why it looks like it's 75% because they're two small credits.
And how much did you collect where it says 0.0004? Can you go to 60 and just see how much 0.0004 is? Find an option for 0.0004 and see.
So, but you got to keep in mind that's all these legs is 0.0004.
Yeah, no, I mean, so that's like the credit you collected. So you just find an option for 0.0004. There it is. There's one, the 1.05 put. No, click on the 0.00.
That one, right?
Yeah,
so
whatever.
There we go.
$50. All right, it was because when I see the you're up 37, the most you could ever be up from that credit is 50. You really put that on just to wait for it to come into the butterfly.
So either side, that's where we're at right now, and it's smack dab in the middle. So let's open this up, and I want to show where our strikes are. It's got 24 days left, and we're still pretty symmetrical. Do you see that?
And I wouldn't close it because the commissions to get in and out of all this would be not worth. I don't think the closing it. We just leave that, let them all expire, and keep the $50, or hope that it ends in the middle of one.
And if one side or the other, here I'm going to go back to the trade page. If one side or the other, let's say 6E comes down quite a bit and it's trading, I'm making this up, at like 115. That's when I would take and move and take some risk off the top side. So you can look at it. If one side gets tested, you can take the risk off the other side.
Yeah. I don't think there's too much risk in this trade.
No, there's not too much risk in this trade. I mean, we did it symmetrically. We did it actually, if I'm remembering this correctly. Yes, we did the puts the one day and then the calls the next day. You were gone for 2 days, and we got ourselves into a double broken wing butterfly.
All right, love it. 252. I'm just keeping an eye on time.
And I wanted to see, hold on, I'm gonna start this again. I wanted to see what we did today to see if anything is going the right direction. MCL we just put on, Oracle we just put on, so those are in there. And then we did a lot of closing orders today. Disney we got out of. There's a lot of things in here that we did. I don't know that earnings, like I said, we looked at Oracle and we're in Oracle. The AV, there wasn't much. But when you get this implied volatility, Oliver, let's see what the VIX is doing. Because the VIX had come down quite a bit, and now it's back at least in the green, right?
Was it 22 during our show this
Yes,
morning?
it was. Let's take a look. We were shocked. Remember we played Guess the VIX during our show, and I said 24, you said 26, and it was 23, and it dipped into the 22 handle during our show.
Yeah, 22.19 is as low as it got.
Yeah.
Okay, so now with the slight spike in vol and the little down move, let's price out that unusual option activity in SPY. That was, if you remember, that was SPY. If you go to the trade page.
Hold on, I can do this for you because it's pretty easy for me to pull that up. I always have it up. It was SPY.
Oh, there, the 80, March 13th, the 660, 650 put spread.
Yes. Okay. So you got that March 13th, 660, 650. Okay. Let's go back.
And during our show, I believe that was around 50 cents.
660.
Yeah, it was 660, 650. And
now it's 104.
Wait, wasn't it like 50 cents?
Yeah, it was cheap.
I
think it was it was like 130. But nonetheless, if you're doing this and you can get, 40 cents, 30 cents, 50 cents, that amount of times, maybe they'd be out of it. What I do want to take a look at here, Jenny, is I would just try to remember this. Or do you have your little pen and paper?
Well, I know we thought it was.
I want to make sure it's closing. So can you do that for me? So if 660 is closing, this should be around 7. The open interest should be around 7 tomorrow instead of in the 130s.
Well, this order was 85. So that extra, to up from 85 to 123, there were more people trading this strike. It's kind of crazy. There were more people trading this strike than just that 185,000 order. So I'll see if that one, it's hard to tell because quite a few more people were trading that same strike.
Then that 88,000 order.
Yeah.
That's true. And look at that though. So that you can see that strike has 123,000. I'm looking at the 660. 123,000 were traded today. Now could be closing, right? But look at it's significantly more than everything around it.
Right, and 120 of the other one. So maybe they did one batch of spreads and then another batch. Maybe
They could have done one batch and another batch. That would look to me to be accurate.
Yeah.
That would look to me to be accurate. That's
so then there'd be almost no open interest tomorrow in that 660 line.
It'll look just like the rest of them.
Mm-hmm.
Where there'll be some open interest, but not a lot. You know what I mean? It could be either way.
And that's the 3-day. So it'll be the 2-day, March 13.
It's Friday the 13th. Friday the 13th, 660, 650. We got to remember that. Friday the 13th, 660, 650.
Got it.
Yeah, that's pretty interesting to look at those from that perspective. And guess which side made money.
It's funny. It's kind of funny to like see old notes. Like here, I've got an old note that says CMG, CRWD, ON, and Royal Caribbean. We haven't looked at OnCloud in a while.
You know, I think I thought they had earnings. Maybe they don't.
Then what's ON?
I don't know. OnCloud is ONON, and I don't like that. On Semiconductor is on.
Okay. A semiconductor on. I don't know. Can we take a look at AT&T telephone? What is it doing? Because I told you
it's up 65 cents.
But look at that. They're digging up all of our yards, but putting in the fiber optic cables.
And they started digging on January 29th. I'm just kidding.
We all got the letters. They're digging up everyone's yard, and we're all getting fiber optic cables. 35 rank.
It's a 35 rank.
How far can you get in with options in there?
Let's take a look. To the downside, I'm going to go to the 38 day. You're not getting far, Jenny. You're getting 25 cents. You got to close that up. As an options trader, that's sad. It's very sad. Okay, Jenny, we only have a minute left because I actually have to cut this a minute early. So today, I love doing this during here. Okay, we're going to take a look at the VIX. Because I think it's more fun to predict the VIX than it is the wide markets. VIX right now, 25.72. Okay? So and we're not going to say where it opens or where it closes or anything like that because it's going to close in a minute. Where do you think the VIX will be during our show tomorrow?
21.
Ooh, I like the way you're thinking because that means that this is going to be green.
Or doing nothing. It's going to be green or nothing.
Green or nothing, right.
Like we could have, once we get, like today, it was kind of a nothing day. What were we up? Up 20, up 30, and then not in the VIX, and not a nothing day in the VIX, a nothing day in the spot.
I'm gonna go to even the S&P is what we actually look at, and let's look at the high to low. The high was 68.52, and the low was 67.62. So I mean, you had a
90 point range.
Yeah, you had a 90 point range. It wasn't a nothing day.
Yeah.
A 90 point range isn't bad. We just wound up opening where we were, you know what I mean? Closing where we were opening. But it
didn't feel like that big of a range.
No, it didn't. Because
what's the low? What's the low today? Low.
I'm telling you, every single day I close my trades because I don't want to leave them where I had been leaving them. We're getting like moves in two directions.
No, but with that low means at one point spoons were down 40. I never saw that.
Oh, I did. For sure.
I never saw it.
Yeah, spoons were down 40.
So if we get nothing day, like slowly Vol's just going to get sucked out.
It's going to get sucked out. But there is still, controversy everywhere. So we're not exactly sure. But Jenny,
what was your prediction for VIX tomorrow?
Oh, for VIX tomorrow, you said 21. I was going to say it's going to keep its wings up a bit, unfortunately. I'm saying we're going to be 23, 22.
Okay. Price is Right style.
23, 22.
23, 22. You could have just said, what did I say, 21? You could have said 2101.
I should have. Closes two without going over.
All right.
Jenny and everybody out there, stay tuned for Chris and Elia. They're two of my favorite guys and one of my favorite segments. So it's always interesting to watch them.
And everyone have a good day. We will see you tomorrow live from the SIBO.
Good luck with
everything. Have a great day, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
What color of jeans? They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get it on this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancellari. Bam!
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Stocks can't hang on. Oil bounces back. It's Tuesday, March 10th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down the trading day. If you're watching on the platform, you probably saw that move in oil. But if you're not there, come on to YouTube where you can join the conversation. Tell us what you think of that oil reversal, where we briefly saw in the session, if you squinted, there was a 70 handle on oil once more. Didn't think we'd be seeing that this week, but this week has been full of surprises, Ilya. The markets were reacting to a tweet from Energy Secretary Chris Wright that the U.S. Navy had successfully escorted a supertanker through the Strait of Hormuz. Well done, everyone. Crisis over. The spice will flow. Alas.
La-di-da.
The Islamic Revolutionary Guard's naval commander, which I was under the impression we sunk their navy, he said that that's not true. It's a lie, to which then CBS News followed the reporting with a lovely little story about Iranian ships, which, again, I thought their navy was sunk.
getting ready to mine the Strait of Hormuz. Oil, which was down 77 low here today when the news hit, 76.73 low, in fact. And we now find ourselves back to 86.68. The IVR as well, even though prices come in, what is an 8.5%, 8.6% decline here in our CL J6 contract, it's a new relative high for implied volatility because that is a 107.4 reading, which means we are 7.4% above the highest volatility reading that we've seen in oil over the past year. So, Ilya, is the story over? Is the war finished?
Which one? Because listening to the president yesterday, there were two stories. There was the story that he told CBS News, which began to leak out onto Twitter that got everybody all excited after the G7 left them at the altar. Let's not forget, it was the G7 that was going to save everybody with the coordinated release of strategic petroleum reserves yesterday. And then they said, no, not enough pain. And the markets were almost ready to get worried again. Then the comments came from the president's interview with CBS saying this thing is almost over pretty much. But like we talked about on Overtime yesterday, pretty much from a president that also told us he was going to solve the Russia-Ukraine war in a day is not a hard number. So when you look at what's going on, then mere hours later, he gives a press conference and goes, you know what, we could have stopped now, or we could have gone further. We're going to go further. And crude oil hasn't really gone anywhere until this just now. But if you look at where it's been since the weekly opening gap, then the dump, and then just sideways, because the markets didn't know what to make of what the president was actually signaling. And of course, now we see nothing's over.
Nothing's over 86.77 here after hours. It's enough of an anchor as we make our way into the second half of the trading day and really through it that once we get those headlines out, that's when the S&P 500, the NASDAQ stop rallying. 6850 is effectively the ceiling for today's price action, and we find ourselves back down to 67.94 here, Mr. Spivak. With it comes a rejection. We tried to climb back through, and maybe it's news-driven, so how much do you trust it? But for now, we find ourselves having been rejected at the backside of the trend line from the November and those February swing lows. So bulls, they're not quite in control yet. We haven't seen a close north of our 1 week moving average over the past
several
sessions.
Even dicier thing in the Russell. It's an even dicier thing in the NASDAQ, because the Russell here looks like it tested right the underside where you have all those circles there on
for the bounces off the 50. Yeah.
On the moving average. Well, what happens to support is it becomes resistance once broken. And boy, did we backfill in a textbook fashion across the major indexes today. They take screenshots of things like this when they publish technical analysis textbooks, because this is how it's supposed to work.
It was looking like a better day earlier, and you run into that resistance, and now you get this doji here in the Russell, and you see the doji in a lot of the charts or something close to it, where we were higher, lower, and we're basically unched on the session at resistance as the market tries to rebound off the lows. And so instead of getting a nice little bullish bar, a little morning star candlestick cluster here in the Russell, you're left with the doji, which, you know, quite frankly, Ilya, I'm not sure if I'm disappointed by what happened with today's market action. You know, dispersion may be disappearing beneath the surface insofar as there's been an increased level of correlation when the market's moving to the downside. Yes. But on these up days, there has been high dispersion still. You have to pick and choose where you're actually going to find a winner. Some things are moving faster than others. I'm looking for Russell chop right now because with the reporting that we're hearing, right, just forget the story that we're being told by the president, by CBS, by whoever. The facts. What are the facts? How much oil is shut in? How much oil is actually flowing through the pipes? What's making its way out of the Gulf right now? We're close to 7 million barrels shut in this morning, 8:30 a.m. Eastern time when I last checked. We're going to get another update tomorrow and see how many more wells are being shut down. Even if only temporarily, we're talking about taking millions of barrels still offline for several weeks, if not months. So the Russell may get these relief rallies here, Ilya, but a little bit of a higher input cost albatross for maybe a week or two longer as we work through this oil volatility, that doesn't seem like it's out of the question. So for ES, for the Russell today, where I'm really not leaning directionally long, I'm just looking for sideways chop. I'm not that upset about the market, but if we're looking at the market's tea leaves, we can't be too happy that we're or too enthusiastic or perhaps confident that we're just going to stay here. Oil could be bouncing back real quick.
Well, that's right. And as we've talked about before, let's remember oil was rallying before this war started. It's been going up since the beginning of the year. It was going up for a good 2 months before this war started. So to bet that oil is going to stay at 120 if the war ends is probably a silly thing. To bet that oil is going to resume what was an upward trajectory before the war, once whatever near-term washout happens, and maybe has already happened, that's not something that anybody should dismiss. Because if we were concerned, and I think that's very clear based on just the news flow out of Beijing recently that we were onto something, that the issue that the markets were concerned with primarily as crude oil started rallying in January, in everybody's face, by the way, because there was a broad-based consensus that oil would fall because there was a glut coming. And by the way, if ever there was a sure bet, it is to bet against such incredible one-sided consensus, because if even the slightest thing goes wrong, then everybody's wrong, and then they have to reposition in a hurry. So the story since January has been the combination of regime instability in Iran, organic because of domestic mass protest, coupled with the U.S. enforcement on Russian oil tankers, coupled with the beheading of Venezuela, meant that China's oil supply was going to become more expensive because they've been the buyer of this below market rate sanctions busting crude, whether it's from Iran or it's from Venezuela, or of course, whether it's from Russia. They're the only buyer in size that can actually take that. And so we have, since the beginning of the year, this story, and now that we've bombed the bejesus out of Iran, that situation isn't going to get better. China's oil supply is not going to get more secure. So if this war ends in the next hour, that situation remains. Will we get a pullback in oil prices as the markets digest the end of hostilities whenever that occurs? Sure. Does that mean anything for the inflationary impetus from higher oil prices, probably for months to come, as China rejiggers its supplies? No. Doesn't mean anything like that.
Ilya, I've been trying to work orders today in crude right now because I can't, as you can see, lots of things. You have to work the market here. You can't just settle because the spreads are going out. But the one thing that I find interesting about this market is if we look to 37 days here, okay, 60, 62. Okay, you can still get close to it. It's not there right now, but you can get close to a 4-to-1, a 3-to-1 on a risk to reward for doing a short put spread. And what I find so interesting about those levels is that's well below where we were in February. The low that we had in February is 61, right? So if you're looking for the market, we're effectively saying like this market's not going to fall below the February low no matter what happens the next few weeks in this next 45 and 21 day out cycle. I think there is a strong argument to be made that we're not going to be down below 61. I was trying to get this filled on the show with Jamal earlier today, and unfortunately we couldn't get it in when oil was still trading right around like $79 to $80, and it has jumped since then. And so the risk to reward dynamic has changed a little bit, less so in our favor because it's doing exactly what we would hoped it would do had the position been able to be filled earlier. But I think that's the kind of thing that we need to be looking at right now, where just assuming a fair value for oil, what's a fair value for oil on the other side of all this? If the price of oil after the shock, right, how would we make that work? Price of oil after the shock is equal to the price of oil before the shock times the new demand divided by the new supply level. So even assuming like a 5% drop in global demand because of an energy shock, a 20% decline in supply still pegs a $83 to $87 fair price for oil, assuming you're starting around $70 before the shock hits. So when you get these dips below 80, even if it totally depends on the contract cycle. We're not talking CLM6 here. We're talking CLJ6, CLK6, the front months where these disruptions would really be felt in terms of the actual supply. Because if Saudi Arabia has things up and running by June, then why would the June contract be trading as if there was a supply crunch? It wouldn't.
Sure.
It may reflect the demand crunch side of things, but it's not going to reflect the supply crunch side of things yet. So I just think right now in the CLJ6, the CLK6 contracts, if the market's going to give us things on these dips where we can sell put spreads to the downside and define our risk fairly well, we have to take those opportunities. I can't get filled right now. I've been trying to get filled for the last 2 hours. I'm probably not going to get filled here. So do I want to do this during Asian hours? The market could be wider.
It'll be thinner.
It's going to be thinner, but if I can get the price I want to express this view, and more importantly, do it during the markets where most of the pain has been for the past week and a half, oil would, if I'm going to guess, oil's going to rally during Asia and Europe and maybe calm down once those markets are closed, similar to how U.S. equities have been rallying once Europe has been closed in recent sessions.
It's certainly not impossible that there is a level of relief here. I am very cautious about wanting to extract any vol out of a situation that is liable to be this or that on the basis of what the president says. And I think the president is using his ability to create obfuscation tactically. Let's not forget, we were in the midst of talks in Geneva with Iran when this began. So there's a sense here that the president is contributing to the fog of war in a tactical way, perhaps. And even if it's not in a tactical way, we nevertheless have the president contributing to the fog of war. And so we're looking at a situation that is unlikely to unclench, at the very least, until it becomes clear what the objectives look like. Not so much to the commanders on the ground. Because as we've talked about, the actual execution of this war from the U.S.-Israel side has been near flawless. It has been really just one of the most impressive operational successes in military history.
I mean,
having said that,
maybe I think that this whole, even the Trump administration came out today and said Israel stopped striking Iran's energy infrastructure.
Well, that's a question. That's a question about diverging tactics. But as far as being able to achieve what the two sides have set out to achieve,
but if the Strait is mined, did they and Ayatollah's son is now the head of Iran. By
the way, he didn't show up to his appointment today. They elevated him to supreme leader in absentia. I guess he's afraid of showing face. They put up a picture of him and then everybody clapped. So the room was full, but he wasn't in it.
Probably, had to pick up some dry cleaning or something.
Surely. It's a big job. But when you look at what's going on here, yes, of course, all of these potential things are there. But at least for now, at this moment, the execution tactically has been excellent. And this brings us back to Iraq in 2003. It took but a few weeks to achieve what looked like military victory, but then, of course, the peace was lost. So when we look at this situation, we're going to leave a country that's many times more complex and with many more levers and with an even more complicated demographic and social picture in tatters. And what's going to happen, we don't know. No one does. Will the Azeris and the Arabs and the Balachis of Iran come together? Or will they use this weakness in the central government to push for power themselves? What about the Kurds? They're apparently armed to the teeth and getting ready to do something, so much so that the president had to talk them down publicly. So,
I mean, we burned the Kurds before under Trump. I don't think the Kurds trust Trump.
Which is why they might make a move anyway. So we look at a situation here and go, okay, might this become a balkanization of Iran? And what does that mean for the Strait and for oil? So any number of things can still happen here. This is not at all a situation that is over by a long shot.
Finally getting filled on that crude. Had to wait now. Finally got in. Yeah, I don't think it's over by a long shot. I'm struggling to understand the velocity, and maybe, again, who's to say that we have to understand it, but I'm struggling to understand why the market is so confident.
Right.
That this crisis is over. Now, there are some interesting things here. You know, in terms of posturing, you mentioned the G7 not releasing the SPR and blah, blah, blah. 1991, when we invaded or we attacked Iraq to help Kuwait push them outside of their borders when Saddam invaded Kuwait. George H.W. Bush, the first one, he came out with a statement noting that while we were launching the invasion, there would be a simultaneous release of the SPR in order to help keep energy markets, which were going to be presumed to be volatile, down.
Yes.
So I think the market is trying to sort itself out through the problem. There's obviously no coordinated SPR release at the start of this, not like we did in the first Gulf War. The signaling there could be we're not expecting a significant long-term disruption to the physical market. Maybe that's how the market's reading this right now. No SPR release because we're not expecting this to last a long time. Why go through the motions of doing that? Not needed. Or is it the worst outcome where there is no guiding principle here? You seem to indicate that Trump is masterfully working the media and the perception around the world.
I mean, maybe he is. Maybe he's not. But we know what the effect has been.
What's the effect? Oil prices.
The effect is to muddy the waters and to get a sense of denser fog of war, greater ambiguity, and maybe that's the madman theory of geopolitics. We've certainly seen, for example, Richard Nixon deploy that very deftly, and he wouldn't have been the first or the last. In fact, the president has talked about deploying the madman theory of geopolitics as a strategy openly. And that's what he's doing, it seems. He's coming out there and being unpredictable and scary to throw the adversary off balance. Now, is he doing it because he's being himself, or is he doing it tactically? Yes.
Himself?
Maybe both. Who's to say? But we know the impact. I mean, if you're sitting in Tehran right now, you're confused. And so are the markets. Hence, Mojtaba Khamenei didn't show up to his own elevation to supreme leader. Is there any question?
Do you think Tehran's confused? Just from my vantage point, if someone killed my dad and mom and sister and brother-in-law and niece and nephew, I wouldn't be confused about what my next course of action would be.
Oh, no. I don't think they're confused as to whether they would like to strike back, but I think their ability to strike back and whether the U.S. has or hasn't lost its appetite, I think that's confusing for everybody because, of course, one of the main reasons why we had to have a second Gulf War, many would argue, is because we didn't finish the first one. Let's not forget what happened. We kicked Saddam out of Kuwait, then left him in power. He raged at his own people for 10 years. And then we decided it was time to come back and finish. If we leave Iran wounded here, but in place, they're already lashing out at the rest of the Gulf. They are likely to continue to menace the rest of the Gulf in a degraded fashion for as long as they can. So is that more stability in the strait or less? So when we look at what happens from here, if we push for regime change and get that there, or we don't, it doesn't look like we have a pathway toward some sort of predictability. And that, of course, is directly a nod to just how predictable China's oil supply is, which brings us back to the question at the very beginning. Oil is up this year because China might have to buy at market rates and not from the places that were expecting their demand in size, or at least in this size. And that's probably going to happen anyway.
China, EEM, EWY for Korea, they all had little bounces at some point today. Korea got double tapped with this news. It's not just about the higher oil prices, Ilya. The U.S. has removed all of its THAAD terminal launchers from South Korea. The radars are still there for what it's worth, according to the South Korean news. And this is such an issue that the South Korean president had to come out today and issue remarks saying, no, we protested this, but there's not much that we could have done about it. And that's a really interesting development. The U.S. is having to draw down its defense posture in East Asia now in order to supplement the war efforts in the Middle East. I don't know if that does anything for China in the short term with their eyes on Taiwan, but
might do something for North Korea.
It does give the impression that the war is not necessarily proceeding as planned. So oil in today, Ilya, I think probably was the opportunity to get back in long the market. So I'm glad that I was able to clip a little bit here. And certainly yesterday when I was looking at the short iron condors, I'm like, yes, let's go down and sell the 70s. Like, what's the worst that happens? We're trying to get 100. Didn't think that was going to be touched that quickly here. Metals had a really good day today, though. We see that they pull back in with everything else once this oil news hit, although they bounce back a little bit better than their stock counterparts. 5207 here in gold. Silver got through the 87 handle, and it's in the feeling better zone here. And today, during that pullback, again, we were trying to get this filled on Futures Power Hour. I don't think it ultimately went through yet. No, I'm still working the 90.91. Would have been better to buy it $1 ago. But the whole point here is that you had this nice pullback to that range resistance, and then we effectively bounced there from the rest of the session. So silver and gold and copper, to an extent, they all have really nice days, Ilya. That looks like a pretty clean place for the market to bounce from. I'm looking for silver to make a move into 90, into 95 again, unless 87's broken. So if I can't get filled now, maybe I get filled later. When Asia opens up, it's going to be a horrible market. Silver options are wide as is.
Yeah.
But this looks good. This looks good now.
No, so I thought one of the most interesting things, to your point, in the way that the markets worked out today, gold has been moving as a foil to this whole inflation dollar oil story. And it's been oil up, gold down since this thing began. And of course, everybody was like, whoa, why isn't gold moving? It's a war. Doesn't gold tend to go up in a war? And the answer is, well, yeah, it does. But apparently the market doesn't care about the war. Apparently, so as such, it cares about inflation. And so what's been happening is crude oil up has meant anything that's sensitive to interest rates down. So bonds down, gold down, dollar up. That's been the story. But today was different. When crude oil swung back higher, dollar recovered, stocks got knocked back into a loss for the day, but gold held. So perhaps we're getting back to this idea that gold is a deglobalization narrative that doesn't care about all this tinkering at the margins. Maybe we're done with that. Because, and this is why I'm sort of straddling both sides of it. I'm short premium 68 days out now. It was 70 when I put it on. And I'm still short the futures, which obviously not working. So I'm on both sides of this market, essentially looking for near-term consternation, long-term gains. I might need to peel the futures off if they take any much more of a hit here and just stay long.
Oh yeah, oil 86.73. We hit a high of 119.48 on Sunday night. Where will we be tomorrow? It's a good question. Hopefully not too far from here, because I'm starting to lay back into positions and, inside but up, I think is the right way to look at this for now. Hey, we're out of time here on Overtime. We'll be back tomorrow. Same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, I'm Chris Vecchio in New York. Good luck trading. Stick around, though. Ilya's here. He's with Macro Money. Coming up next.
Be there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
another day of seesaw price action for the markets. And of course, it begins with crude oil yet again. That seems to be the driving narrative going forward, but we're going to get a little macro data in to spice up the festivities. That's what we're going to try to figure out how to work into the current markets here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And what we're going to do here is, of course, take a look at the price action first and foremost. And from there, see if we can't figure out where this is going. Taking a look here at the S&P 500 first, we have what is a day of indecision. Now, the important thing perhaps to keep in mind here is that the trend lower, marked by lower highs and lower lows, sort of by definition, remains intact off that top that was set in October. Of course, we've tested it multiple times, and the latest swing lower still very much in play. We get a wild rebound at the start of the week after getting all the way back down here into the 6,600 territory. That's after yesterday we first got reports that the G7 might consider a joint release of strategic petroleum reserves to calm the oil markets. That didn't happen. They met and decided that it wasn't time. But then, of course, President Trump created a bit of fog of war for the markets. First coming out, comments from his CBS interview leaking onto the wires and saying that the war is pretty much, quote unquote, met all of its objectives. And what we then get at a press conference with the president later in the day is basically the opposite message. The sense that we could have stopped here, but in his words, we're going to keep going. So the situation getting a bit of a reprieve, then locking down into wait and see mode, arriving today with a positive lean because maybe we are in fact looking for an off-ramp. Reports coming out that the U.S. Navy led an oil tanker through the Strait of Hormuz, only for those reports to then be walked back. Where are we left with on overall sentiment then? Not very far at all. In fact, we're basically testing the underside of the range that we broke right down here. So looking at this as a pure ticker agnostic chart of price action, it looks like we have a downtrend that's retested the spot where it initiated with a breakout of congestion. And the easy thing to consider here would be continuation to the downside because, of course, the retest failed to cross back through any key levels. Looking at crude oil, here was the upside gap at the start of the week. Here was all of this volatility around maybe the G7 will do something, maybe they won't. Here's today's dramatic volatility around maybe the president is signaling the end of the war and maybe he's not. What are we left with? Well, not very much. We had a massive rally last Friday. We've erased perhaps most of it, but we haven't really gone very far at all. And of course, the rally since the beginning of the year remains very much intact. Similar response from the bond markets, which of course have been a key link painting this picture and telling us that it's really a story about inflation. We can see that interest rates gapped down. That, of course, in this chart is looking like a gap up for the bonds. You see that from yesterday into today. So the market's seemingly unclenching, saying, well, if the war is almost over, then the inflation risk is almost over, and then maybe the Fed could get on with cutting interest rates. Well, where did we ultimately end up actually going today? Once we gapped, rates went down because, of course, confidence in that end of war narrative fizzled. Similar story for the US dollar, where we gapped down, again, around that confidence in maybe the unraveling of the inflationary threat, and then that move didn't have any legs. perhaps the most interesting bit here is gold, which has been moving somewhat with the inflation narrative, unlike what gold had been doing really since the beginning of 2025, which is disconnect itself from the dollar and yields its normal foils as influences on price action, and instead move relentlessly higher, ostensibly as a deglobalization vehicle, getting ready for the US and China acrimony and a broader disillusion of global norms to boost demand for what is essentially a non-sovereign form of value transfer. If you're worried that, say, the US might weaponize its banking system against China and China might weaponize its rare earths exports against the US, well, maybe you don't necessarily want money moving in yuan, lest you upset the US, and you don't want money moving in dollars, lest you upset China. So if you're a third country, then you might want some sort of a neutral way to move value, and gold has been a beneficiary of that idea. Since this war began, though, gold has been moving in the opposite direction of crude oil, because when crude oil has gone up, and certainly not in the same magnitude, let's get that clear, when crude oil has gone up, and that's driven inflation expectations and interest rate expectations higher, gold has been hurt. When there has been an unclenching of those fears, gold has improved its lot. When we look at what's going on today, gold is impressively higher, despite what's going on with there being a seesaw in this oil and things narrative. So when we consider what's going on here, perhaps we have a return to the broader story. We will, of course, have to wait and see beyond just a single day. In any case, gold seems to be relatively range-bound here, but it is worth it to note that it is showing an impressive amount of resilience here, where it hasn't shown the same kind of attitude to what's going on even just earlier this week, and of course, last week. Now, as we've said before, all of this boils down to the implications for inflation, because it takes about a month for whatever is happening in crude oil to appear in headline CPI. So with that in mind, we have a situation here that seems to explain the whole of price action, barring perhaps gold today, as we've observed it. Higher oil is driving inflation expectations, is driving the dollar and yields higher and hurting everything else, or the alternative. If you look at the way that this has boiled down into Fed policy expectations at this point, we are in for, it looks like, 47 basis points being priced in for this year, 14 basis points for next. That's pushed us all the way back to 61 basis points on the outlook for policy this year and next. And of course, what that means now is we are better than even odds for 2 cuts this year, better than even odds for 1 cut next year. That's well in excess of what the Fed has projected. And obviously, the Fed hasn't really updated meaningfully since the start of this war, but we will see that next go around. We have a Fed policy announcement coming this month, so surely they're going to have to say something. But for now, what the markets are considering is way more dovish than Fed officials have said in the latest summary of economic projections or since, because up and almost to the breakout of this war, the Fed was saying things that sounded, if anything, hawkish. That was the tone from the minutes of January's FOMC meeting. That was the tone from subsequent comments from Fed officials. And of course, we know how much the markets love that. Since the outlook for Fed policy stopped getting more dovish, the S&P stopped rallying. Once we anchored here, somewhere between 50 and 75 basis points, we can see that's the range for policy expectations right here. Once we settled in this range, and once Fed Chair Jerome Powell came out and chastised markets for having settled in this range, saying that they're over extrapolating rate cut expectations. We ended up with an S&P that put in a high in October and has barely gone anywhere since. It's mostly just been oscillating below the 7,000 mark. Now, the pricing in Fed funds futures gets even dicier. And of course, it's a mixed bag all around, but we can see that at this point, there is only one cut that's firmly priced into 2026, even as the markets are calling for more. So, on the one hand, the cumulative numbers here appear to say 2 cuts, maybe a third. The sequencing in the probabilities says 1 cut in September and then maybe somewhere in the middle of 2027 we go again. So once we get to the actual dates for this, the upshot seems to be a dispersion in probabilities. The cumulative numbers hide the fact that the markets don't really see exactly how the Fed is supposed to deliver expansive easing near term. And of course, as we just saw from the market's perspective, easing near term is what they've needed to get stocks moving, and so they haven't moved and continue to wait. Now, from a data perspective, all of this gets, as we mentioned, a little bit spicier because we finally get a little bit of macro risk to introduce into the narrative. We're going to have U.S. CPI data coming across the wires. The expectations seemingly not controversial. We're looking for 2.4% on the headline number year on year, 2.5% on the core. And of course, those would be numbers that are unchanged from the prior month. So we're not really looking for big swings here. And indeed, the Fed's argument, again, before the war, was that we're going to have goods inflation anchoring as the tariffs fall out of year-on-year calculations. We're going to have service sector inflation continue to cool. And what this means is that once the tariffs make their way out through rebasing sometime in April, May, for the most part, we are going to end up with inflation almost right back to the Fed's target. And indeed, that is certainly a possibility on the trends that were there before this war. So we can see goods inflation is indeed showing signs of a plateau and starting to ease back. You can see these monthly gains have basically been driven down to nothing after this tariff-inspired rise. Services inflation is indeed trending lower, although in the start of 2026, we did get a little bit of a pop here. And so on current trends, it does seem like the Fed had a good reason to sit back, maybe consider some rate cuts later in the year in what was to be a relatively benign backdrop for the markets. And indeed, if we look at January's numbers, we can see a broad-based pullback in inflation at the headline, at the core, and all the usual suspects seemingly showing everything you'd want to see. Core services down, goods down, food down. But how much can we really expect this to look the same in this upcoming data? Indeed, if we look at the contributions here and the change in those contributions to the headline figure, we can see that the overall headline figure came down 30 basis points, core came down 10, food came down a bit, but the biggest swing moving this headline number was disinflation, a smaller contribution from energy. Well, crude oil has been rallying since the beginning of the year, so can we really say that this is what it might look like in incoming data? And how sticky, then, might inflation really be if we have this situation, benign though it looks, disrupted by this situation, where this gentle drift down toward the 2% line in CPI is aborted because this is priced in right here. And the Fed is getting taken off target. Now, if that's the case, well, then this consideration comes right back into play. It tells us that if the markets don't get their cuts, and if they don't get them on a timeline that they find reasonable, risk sentiment is not on quality footing. And of course, if we then look all around these markets, we find that the risk-off dynamic has not been broken. Again, looking at the S&P, we're backfilling to retest former support as resistance. We have not broken. On crude oil, we're testing the bounds of these gaps and filling these gaps. We've only really pulled back over these 2 days of breakneck volatility some of Friday's rally. The majority of the rally from last week's breakout of the war, never mind the run-up before then, still haven't the markets haven't even tested that yet. Never mind, overturned it. The path of least resistance for bonds still looks like it's lower after this retest of former support become resistance. The dollar is not falling off. If anything, perhaps gold has rediscovered that it has bigger fish to fry. But from an interest rate perspective, it might be very difficult for the Fed to deliver rate cuts in a scenario where the driving force behind disinflation last month seemed to be energy. And that driving force is plainly gone and probably won't come back, at least for some time. So, from a positioning perspective, obviously today was not the greatest day. Depending on where you were. Frankly, it wasn't the greatest day, depending on what time of day it was, because of the wild swings in oil and ultimately the goose egg that we ended up with for the day overall. But I'm still a little bit straddling gold, so short the futures, expecting interest rate pressure to keep gold contained near term, but long by selling this put vertical, now 66 days out, looking for ultimately the deglobalization narrative to prevail. So I'm a little bit short near term and I'm a little bit long longer term. We'll see how that works out. Still on the short side of the US dollar, but the Aussie tried to break out today, so I flipped that position over. So I'm straddling the dollar $2 here. I might get spooked back short here in short order as the markets recoil from those end of war hopes. See how that goes. Thankfully, that was the only position that beckoned any kind of change today, because ultimately the markets didn't really signal that a change needs making. Still a little bit short Bitcoin, which hasn't budged out of its range for the better part of 2 weeks now. Still looking for rates to go higher in the belly of the curve. This is an outright put I bought on IEF, the 7 to 10 year stretch of the curve as ETF, and still looking risk off in my equity index exposure. Have put verticals here in IWM, which is the Russell, in the Qs, the NASDAQ, in SPY, which is the S&P, and still long crude oil because we have a situation here that probably doesn't go away quickly, and a situation that wouldn't go away quickly even if the war were to end right now. Because, of course, crude oil was going up before this war started, and the forces driving it up are not any different were the war to end right now. In fact, they're, of course, more acute because whatever disruption there was already on the menu from Iran amid a popular uprising there, where the regime already looked like it was teetering, we now have a situation where, of course, after a round of intensive bombing, the stability and the likelihood that the Strait of Hormuz is a frictionless waterway are worse, not better. So even if the war ends right now, we'd be left with a smarting Iran that's sharpening its sword against its regional neighbors, which it's been trying to bomb because it sees them as proxies for the U.S. And any kind of concern around China's oil supplies that were there before this war, as the U.S. was applying the pressure to Russia's shadow oil tankers, as well as Venezuela, at the same time that Iran was gripped by popular turmoil. The situation after the war is that, but worse, because Iran is less stable. And so whatever threat that was to Chinese supply before, it's a greater threat to Chinese supply today, even if the war stops right here, right now. So I've still got ample time to expiration on these USO calls. And so I'm just going to sit here and wait, at least for the time being. And that is Macro Money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.